All right. Good morning, everyone. Good morning. Okay, let's see what this stock has going for it. Good morning. Good morning. It is 9:21 on the East Coast. It's a really nice day out. A little windy. About 10, 15 miles per hour out of the southeast. It's only about 65, 70 degrees here in Myrtle Beach. Hope you're having a good Monday morning. Grab your coffee. Probably won't be that active today. We're down. Futures are down at the moment. What is it? 30 handles. 30 handles. We had silver up last night. That's came back in. I assume a lot of that has to do with the changing margin requirements, similar to back when the Hunt brothers ran the markets in silver. And the markets pulled back down. So we'll see. Brett was also talking about this. And where did I see that note? I think it might have been, was it Friday's note? Let's take a look. I think it was Friday's note. No. I was talking about silver and also nickel. At one point, nickel had a big run like this. Nickel, let's see. Nickel futures, no. I'll find it. There was a very similar kind of run in nickel where it ran up, spiked on after a run up like we've seen in silver. Anyway, the point is that looks like margin requirements are being adjusted over the weekend, increased, and that's creating something of a pullback in the speculation. It looks like people took profits in the silver futures overnight on that spike. My cat is purring so loud. I'm not even sure. You might even be able to hear her. She's so loud. Dang. What's up, Goose? What do you want? You hungry? There you go, baby. Let me give you some treats here. She likes to come visit in the office. Sleep quietly in the corner. So silver's off a bit from its highs. It got up to about 83, I guess. 82 and change. It's come off quite a bit. SPY and the futures are down. Wouldn't make much of it. We made new all-time highs last week. and then followed through on Friday. Doji spinning top. So this could be a 3-candle reversal. Okay, 3-candle reversal in this case would be bearish, perhaps back to the 90 MA. Pre-market, we're right here at 687 on the SPY. Again, I wouldn't make much of it because the markets were actually pretty bullish to neutral to end the week. Okay, here we have junk bonds. We got 5 minutes to go. Junk bonds are neutral right at the 50-day moving average. Intermediate term fair value. Short-term fair value, 21-day. We're right there as well. Let's look at S&P equal weight index. Removing the weight of all the tech stocks, which are down at the moment. Those were up above their 20-day. Okay. So here is the equal weight. And we're in the upper Bollinger Band, upper half of the Bollinger Bands. 921, 50-day turned up and to the right, trying to push higher. RSI rising, not shown, but RSI is rising. Number of stocks above the 20-day had reached 65.5%. Number of stocks above the 50-day were rising, higher highs, higher lows. We could see a higher low today. Let's see what happens with hedge flows. Okay, hedge flows are already starting to grind up a bit. All right, this is non-zero day. Here's 0 day. Okay. Okay, just clicking on non-zero day, 0 day. And we can see where the positive gamma is below, 6880, 6900. Overhead resistance, 6970. Non-zero day. 0 day. Some negative gamma overhead. Just watching that hedge flow line. Let's keep an eye on that to start the day. We got 3 minutes to go. First 15 minutes, I'm not doing much of anything, especially today. Looks like we'll have some shorts covering on this futures drop. Look for some shorts to cover. I'm not eager to jump in and throw money at the market this morning until we see what's going on here, why the shift lower. There was news over the weekend, so we'll see how this plays out this morning. 2 minutes, 1 minute 58 to go, 1 minute 58. Minute 30. Minute 30 to go. Yeah, Mondo, I don't know. Anyone have any issues with Slack this morning? Mondo was saying that he had some issues first thing this morning. Let's see what time you came into the market. 9:24. Yeah, I bought VIX calls for February. Okay. Here's VIX. VIX on the move, gapping up this morning, VIX. Okay, I bought some 20s for February monthly. VIX. Okay. S&P is on the move right here, so shorts are covering. Maybe some out of the money. Let's see. Maybe some out of the money, non-zero day. Let's see some out of the money. 6920s, maybe some 6920s. Okay, 6920s. Let me just see what those are going for. Trade S&P. It's early. I don't like taking it before 10 o'clock. I might buy a few just to see what happens here. 6920. So we had some shorts cover. 6920s. Okay. Let's see. All right, I bought a couple of 6920s, $5, 40. 6920s.
GDXD, CLSK.
It's a 26 delta. 26 deltas. Okay, on the move here. Let's see how far we can go with this. Okay.
ASM, POET, CCPX, ASPC, RKLX, IRE, KSCP, CLSX, CLSX, RKLX, SIDU.
Okay, S&P starting to move now.
SOAR, BNA,
6820, 6920s. Did I say 6820?
CIFR,
6920. Okay, so 6920s are $5.50 now. $5.60 offer. Okay, a riot turning back up. Let's see, what's Bitcoin look like? Bitcoin. I apologize. A slow start for me this morning. Slept in. About 7:30 I got up. Ran a couple of errands. Oops, I don't want to do that. I don't want Thinkorswim. I want TradingView. There we go. All right. Let's see where we can go with this. Hedge flows still rising.
CRWG, CWBX, CRWG, CWBX, BMNG, AXTI, BMNU, IRE, SMU, UANY, BMNU,
S&P on the move.
CIFR, FJET, WOK, DENA, ASM, AXTI, CRWU, BNAI, CRWG, CHA, CRWG,
Micron. Let's see. There goes Micron bouncing. Micron bounce.
AXTI,
Micron bounce.
FJET, NTRB, GDXU, WOK, AXTI, BNAI, EXK, BNAI, MSTP, SMU. GLTR may resume in less than a minute.
All right, so those are working now. Those 6920s are working.
DGXX, FJET,
$5.70.
GDXU,
I wouldn't buy them this minute. See how far this goes. Hedge flow is rising.
TLTR may rise in 10 seconds. SOPR. BNAR. IRD. SMU. SSKN. FJET. AUTL. DGXX. BMNU. ZENA. GDXU. CIFR. CGRZ.
Okay, hedge flow still trying to rise here.
FJET. IRD. SMU. FJET.
5, 15, 30, and 60-minute time frames. Futures are on buy signals off of this dip this morning. Okay, S&P is starting to grind higher now. Looking good.
IONX. BMNU. BMNG. BNAR. IRE. SMU. AXTI. RGTX. RKLX. DGXX. WK. SOPA.
Okay, let's look at the NYSE. I'm just going to talk through this. I'm not going to show you what I'm looking at here. NYSE, just want to check breadth here. NYHL. Okay. New York Stock Exchange is at all-time highs, of course. Maintaining, we've got advanced decline, New York Stock Exchange advanced decline. And high-low is above the zero line, giving us a green histogram bar at the moment. Okay, Bitcoin turning off the low. Bitcoin, there goes Riot. Riot's ripping off the low. Okay, big move in the futures. Continue to move higher here. Okay, S&P. At $8, I'll take half off. That'll be 100% move in those calls. $8.50 or so. $8.60. Let's see. 69.20s looking good. They're $10. 69.20. Okay, there we go. Nice reversal underway. Hedge flows continue to rise. Shorts covering off of that dip. Let's see what silver is doing. Silver futures still dropping. Silver futures. Okay, beautiful short covering rally to start off the week. If you jumped into S&P calls real quick, you're doing well. Okay. Okay, let's see how far we can go with this. Snowflake still looking for those to rise. Snowflake with a bounce. There goes Apple. Okay, shorts are covering more. I want to see more of this action across the New York Fangs. Let's go take a look at those real quick. New York Fang. We'll show you this New York Fang. Okay, so we hit the overhead spaghetti, the 9, 21, 50, 200 day, 100 day. 200 days below, 100 days right there, the magenta colored line. We ran into that on Friday. 21 day is just above that. And then the 50 days just above that. So we need to see a higher low print today, perhaps into this holiday shortened week into Friday. Maybe we get a higher high by the end of the week on these New York Fangs. We really need these to perform. On Friday, on the weekend video, I talked about how well these stocks performed. However, the highlight has been miners, XME. Not so much today, but the miners like Newmont, Oh, those are all gapping down. So looks like the express train for silver and the miners are seeing some profit taking. Gold is gapping down. Wow, that's pretty interesting. I'm not sure we would have a super pop. I bought the calls on silver on Friday, I believe. Came in, you had the 74s, right? Also have the puts. All right. Also have puts. So it was a strangle. So either way, this moves. Need to see a big move. Otherwise, these will both get crushed. Vega and Gamma spike in both directions. Okay, so you get this big moves. Vega and Gamma spike. Delta increases, whether it's calls or puts. Right now, we're watching this gap down in silver. Keeping an eye on the New York FANG components. Apple is up quite nicely. So Apple is one we bought, what was it, Wednesday? I want to say Wednesday. All right, let me see. Do I, there, yeah, Apple's still got a position in Apple. Those expire in middle of January. I have the 277.50s. We might add to those if we get a nice follow through and a pop off the 50-day moving average. Apple looking really strong. Apple strong.
SFX may resume in less than a minute. ORBS.
Netflix bounce.
ORBS.
Watched a lot of TV, Netflix and Prime this weekend. I don't usually spend a lot of time in front of the TV. Oh, BNAI trying to break out. What is that? BNAI. What is BNAI? I'm watching this one out of the corner of my eye. BNAI. All right, so the penny stock brand engagement network. Is that a SPAC? All right, they're trading this right now. Okay, the way to trade these, obviously, number one, you don't use a lot of money out of your account. Number two, you got to wait for MACD to turn up. That turned up right at the open. So at this point, are obviously chasing. So the next entry would be a pullback towards VWAP if that occurs and volume picks up again and MACD turns back up. Other than that, you're chasing at this point. So risky stocks, they're risky for a reason. Okay, let's see what's working this morning. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is a fine Monday. Going into a new year. Can't believe it. It was just March, April when I was saying, man, Christmas is coming so fast. The days were just flying by. Starbucks higher. Type Bollinger Bands. All right, so nothing to jump up and down about yet with Starbucks, but it does look pretty decent. Starbucks. Once it starts its run, Constellation Energy, another one. Constellation Energy, another one that's just tight Bollinger Bands. What we were looking for is when Bollinger Bands open up like over here and we start to get a momentum, RSI turn up. Right now, RSI is flat, so just make sure you're checking your RSI. What else? Diamondback Energy, no. Dollar General. Okay, so this one's trending. Dollar General. What is Target doing? Target and Walmart. Walmart. Do we get a bounce in Walmart? Mediocre bounce in Walmart. Target tried to break out on Friday. We got some sellers up here. People from over here that got caught in this gap down. These people over here are looking to break even. So that's what happened on that spike there. People took profits when they had the opportunity. I'm still very favorable towards higher prices in Target. So we want to buy dips. Let's see. What do I want to do here? I want to go out. Let's go out 8 months. Okay, big W-shaped pattern. So these people over here got caught in this gap down. They were long. Okay. So I'm talking about this gap right over here. Okay. These people that got stuck that were trading Target in here, gap down. They had to wait for 3 months, 4 months to get back to even. Now that we're back to even, these people are going to break even, sell, and just wipe their hands of Target. But if we continue higher, they'll wish they hadn't sold. I understand why they would. They're just breaking even. They're going to take the cash, probably do the same kind of trade all over again, get long, get stuck on a gap down. It seems like that's always the way it happens, right? Just when you think you've got a good position, it gaps down on you. Okay, if you're just turning back here, if you're just turning back, make sure you take some of those calls off, okay? I don't need to tell you when the markets pull back on you. Let's see if we get a bounce. Futures looking for a bounce. Okay, so target, we're looking for follow through. Okay, let's see. Let me just save. Save chart style. Update existing default. All right, so I want to just keep this 8 months for now. Okay, there goes Micron's ripping here. There goes Micron out of the corner of my eye. Just caught Micron, big green candles. Okay, Micron, big bounce. Okay, back to break even. From Friday's price action. Micron, big bounce. New York Fangs. Apple still going. Microsoft looking good. Netflix, NVIDIA is trying to push. NVIDIA looked really good to end the week. All right, so it's on the watch list. NVIDIA, not what I wanted to see, but we potentially have a higher low. RSI turning back down. MACD stochastic. Okay, so do buyers step up today? If buyers step up today, I'm not necessarily interested in adding to my position at the moment, but if buyers step up today and we get a follow through tomorrow, that would be a good signal. We basically have a shallow cup forming at the moment. Okay, so basically have a shallow cup. So any dips need to get bought. We just want to keep an eye on them. RSI, the volume is tapering off, so that needs to pick up. MACD looks good. RSI's turned down. And stochastic's overbought. So mixed signals on NVIDIA. I do like it. I have some calls, so I'm looking for that to follow through. Microsoft. Let's get out of this. So no. Microsoft. And we'll cover the the NASDAQ 100. Okay, Microsoft coiling, getting ready to do something. RSI is back up to 50. Volume a week ago looks really good. That was what, Thursday or Friday? Stochastics are all right. Everything looks good on Microsoft. We get an end of year run on Microsoft, maybe.
ASPC may rise in 10 seconds.
Okay, number one stock on the NASDAQ 100, VRSK, Verisk Analytics. Okay, this is a really pretty chart, actually. If you're a mean reversion, trend break at the lows type of trader, and you're looking for profits next year, maybe buying some leaps, seeing how this might turn. Let's look at the earnings and everything else. VRSK. Maybe buy some, I don't know, 40 deltas. Okay, they report again in January. Okay, not the best earnings growth and revenue growth. That's a good reason to be down here at the lows. Okay, I'm just looking at this, looking at the earnings. Generally, I like to see all four of these green and these numbers to be at least double digit if I'm going to put money to work. All right, so no hurry on Verisk, but what might transpire over the next several weeks is a turn. Okay, let's look at the weekly. Okay, so this has a long way to go. So if it does something like it did over here in 23, 24, and earnings improve, this could be a good good candidate. Not necessarily today. Write it down. I'll keep an eye on it as well. Verisk. Most likely institutions are starting to pick up shares down here. We'd like to see that with volume starting to pick up more. MACD stochastics, everything looks good on Verisk. So despite the lack of earnings growth, this looks good. So what do they do? What do they do? Provider of information about risk to professionals in insurance, healthcare, financials, government, supply chain risk. Oh, they cover everything. And risk management. Government, that's a big one. Supply chain, that's another one. We haven't talked supply chain in a long time. Stocks, being mentioned on CNBC or whatever. Microsoft's still pushing. Microsoft's still pushing here. Here's Microsoft. Nice reversal. Okay, Microsoft, as you recall, tight Bollinger Bands. Look for those to expand over the next couple of days into next week. Q1. Okay, not chasing. Good idea. These spikes that we've seen in some of these stocks looks like short covering. If you look at Micron, it was a nice move off the low. Shorts covered. We popped. Daily looks okay. Looking for this to continue higher, but right now, Micron is so-so. Okay, going through the list. Going through the list on the top of the NASDAQ 100. Starbucks is number 2. Starbucks. Tight Bollinger Bands. Not really that interested just yet. Starbucks. Diamondback Energy has been on the most actives over the last few weeks. Hit the highs and got a big reversal there. Energy, what is Energy doing? XLE, XCS. I watched Deepwater Horizon with Mark Wahlberg last night. I thought I had seen it before. That's why I hadn't watched it, but it was on, was it Prime? Pretty good movie. I like his movies. He's a decent guy from Boston. Oil and equipment services, not really giving you that much. The real action has been in XLB, and that's gapping down today. So what's going to be the candidate? Is it going to be financials? Those are seeing some profit taking too. Energy, industrials, pulling back a bit. Healthcare is looking a bit stronger, right? Healthcare. So let's look at Lilly. That's on the watch list. Lilly, not doing much. Merck, that's on the watch list. Following through, Merck. Okay, looks good. S&P looking for a bounce. So that big liquid fueled move right there on the S&P apparently was short covering. Now we're looking for some sort of follow through if we get any. S&P. Okay, looking for that bounce. S&P. S&P hedge flows. Big reversal on the hedge flows, right? Let's look at 0-day. You've got support down below at 68.85. We had it at 6,900. You can see that trade was a short. The purple means the dealers are long. So some people had shorts. That position is gone now as it touched that level. So they closed that position. We got a little bounce, a little short covering rally. Now what are we going to do? Hedge flows, looking for that to turn back up after 10 o'clock, hopefully. We'll get some follow through. Okay, so not yet. Apple. Looking okay. Futures. Micron, looks like Micron wants to bounce now. After the shorts covered, we came back to the 21-day. No, that's VWAP. Sorry, that's VWAP. VWAP, MACD. Watch MACD for a turn. So this works here with like inexpensive stocks too. Let's say this is a $2 stock. We just bounced at VWAP. We need MACD to turn and volume to pick up. If you don't have all three conditions along with news, it's not a valid trade. Okay, the setup is right out of the open, we see MACD was climbing, volume picked up, prices moved away. It was a quick scalp on Micron. Profit takers came in. You see the supply overhead, that red band. We pull back to VWAP. If it's going to be a valid long trade, you need volume to start to pick up and MACD to cross up again for Micron. Micron's starting to push, looking good. So you can apply this to inexpensive stocks too. Like, let's see, SOPA right now is running, SOPA. Okay, what did it do? You see this? Perfect example. Okay, glad I looked at this. Perfect example. Come back to VWAP, volume picks up, MACD turns up, okay, and prices turn up, pop. Okay, so these inexpensive $2 and $3 names, you have to know how to trade these. If you don't have four conditions: news, price action, breaking higher in the case of a bullish trade. After the first initial pop, a pullback to VWAP on volume, that has to occur, and MACD has to be turning up and to the right. If you get those four conditions, you have a valid trade setup. You don't buy the high, you wait for the pullback if you miss the open, okay? So this is just an example. Okay, I'm not saying go buy this, but it's current. Let's see what PALI is. Pali. All right, kind of came back to VWAP. You see the spike in volume right there? Okay, here's VWAP there. MACD's turned up. Okay, so I'm not crazy about this setup, but all the conditions are there. We got news on Pali. I don't know what it is, but that's how you trade these, okay? So very simple setup. Don't make it more complex than it really needs to be. Right now we're watching the S&P, looking for a bounce here. Same condition, we're looking for VWAP to turn up and for volume to pick up, okay? Volume needs to pick up. Okay, it's bearish volume at the moment. Okay, we're already starting to see a little bit of profit taking on Microsoft on this bounce. Okay, so what I'd like to see on Microsoft, we talked about, let me just cover it one more time. Microsoft, I'd like to do something with Microsoft. I believe I have some calls, if I'm not mistaken. Microsoft, let's see, Microsoft. I might not. Microsoft. Yes, I do. Okay, Microsoft. So what do I have? I have February. February 500s. Looking for a follow through. Okay. ORB. Okay, ORBS. This is another one of these cheap stocks. Okay, ORBS. Okay, on the move. So you don't want to chase it, right? MACD, all the conditions are here. We got news, it looks like. Let's see what the news is. They're already starting to take a little profits off. Share buyback program for up to 125 million. Okay, so that's the news. Okay, we got a news catalyst. Uh-oh. I hate when that happens. Where'd my MACD go? Okay, I'm just going to shift here for 1 second to a different screen. Okay, and go back. All right, so MACD should be there. Okay, so we're looking at, okay, ORBS. Okay, ORBS. I just want to show you these because I know there's a lot of people who like to trade these. Okay, obviously you wouldn't buy this high, right? So what you look for is the news. We had news, share buyback. You've got the MACD turns up and volume starts to pick up. It's not the greatest, but all the conditions are set. So these people will buy like 10,000 shares. They'll run it for 20, 50 cents to a dollar. They'll take profit. So that's what it looks like right now. All right, big volume spike. You see that? Okay, so we're looking for this to come back towards VWAP and for volume to pick up again. MACD needs to do this and turn back up. All right, so not really interested. But that's how you trade them. Apple, same thing. We're watching for VWAP. We're above VWAP. MACD is still drifting lower. Volume isn't there. So there's nothing here to do at the moment with Apple. Nice spike this morning on volume. The volume was there this morning. Okay. It's not there right now. Wouldn't be surprised if a few people come in, trade this morning, looking for a bounce in S&P, and then take the rest of the day off. It's going to be a holiday shortened week, obviously. Here's S&P starting to bounce. So if you're thinking about S&P, you missed the trade earlier. Okay, do we have volume? We're starting to see it. Volume starting to come in. We're trying to bounce. VWAP is turning up. Okay, watch for the volume to pick up. You should see it on your options too. If you have if you're in Thinkorswim and you have your options screen live, you should see the volume spike on the options as well. You know, near the money options like these 6920s. Okay, those should start to catch a bid here shortly. Watch these. All right, while we're waiting on this to happen, okay, we talked about Microsoft. Number 3 on the NASDAQ 100. Number 3 is T-Mobile. Let's go take a look at T-Mobile earnings when they report again. The banks start the middle of January. Okay, here's T-Mobile. They've been running lots of advertising since they lost a lot of customers, including myself. I switched to Mint, who piggybacks on their networks just at a much lower price. For 4 phones, my wife, myself, and my 2 kids, 4 phones was $250 a month. I said, that's ridiculous. So I cut it basically in half just by going to Mint Mobile, buying my phone. So done with that. There was some phone charges in there too. Let's see. Micron, Tesla. Okay, ORBS, little bounce. Looks like people took a quick trade this morning. They're already losing interest. Already starting to lose interest. Here's the S&P. Okay. Okay, let's take a look at, I just want to take a look at one of these credit spreads I have on Adobe, still sitting on Adobe for the last few weeks. Adobe, $1,300 in credits. Took this like 3 or 4 days, I believe, 3 or 4 days after earnings, that big white candle. We started off the day on earnings with a drop. I took the call side off. It popped back up to the highs, took the put side off, and then I got out of the trade. 3 or 4 days later, I took it again because volatility was still very high. You see Bollinger Bands very wide. Now they're coming back in. So long story short, I want to close this for a larger profit. I could get out right now I'll make sure I don't have any orders. No, I don't. Okay. Adobe, what can I get out of this for right now? 60, 70%. Let's see. I can get out for $60. So $700 profit. I don't know, $600. I don't want to give up the $600. It doesn't look like we're going to see any kind of big action in Adobe in the next few days, next couple of weeks. Okay, so I'll hold on to this credit for more. I don't think we're going to get Adobe. This turned out to be a pretty good trade. I'll tell you why. Number one, it did spike on earnings. then dropped. But it doesn't move a lot generally. If you look at the price action over here on the left, so selling like 20 or 10 delta calls, 20 probably better. Not a bad idea when it sets up. Right now, it's obviously coming to the end of this shelf life, so to speak. Okay. I could close it right now and just be done with it. Free up that capital. I'll let it go. Holiday shortened week. Theta is going to kick in. These expire a couple of weeks. Why did it? What's up? You still hungry? You still hungry, baby? Okay, I'll give you something here. Hold on a second. Kitty cat's hungry. I heard Mama get cat food for you. She's probably put it in the bowl. Okay. Okay. All right. So S&P pulling back. Hopefully you took profits on the spike. Okay. S&P. Hopefully you took profits on that spike. Okay, we bought 69.20s over here. Took some profits off into strength. Okay, thought this was going to continue to move higher. Still might. Still might. Let's see what happens here. Okay, so this is support right in this area. Maybe. Pretty big gap down on the daily. $50-day, 21-day. It's hot in here. Okay, no bounce. No bounce yet. No bounce. No bounce yet. Below VWAP, no volume. Watching volume. Okay, what's the New York FANG look like? Okay, so getting people to chase Apple reversing off the high. Okay, we need to see a follow through. No follow through yet. All right, all of these are showing signs of profit taking. Hedge flow still moving lower. I got to take a 2-minute break. Okay, I'll be right back.
NVIDIA's going to get a heck of a lot more competition in 2026. AMD is an obvious one, but there's a lot of other little players. I mean, NVIDIA's deal with Grok recently to bring more of their technology in is a reflection of the fact that we're seeing more specialized types of models being developed. We're going from the days of big general purpose LLMs that you can use for everything to much more specialized areas. And each of those are going to require different types of hardware. And I think in turn, that's going to create additional opportunities, but it's going to create more diversity, which is going to be a little harder to figure out. But obviously, I think, you're going to continue to see folks like NVIDIA, AMD do well. I do, as I said, I think they're going to start to see some of the smaller the cloud guys who are doing custom chips, often through Broadcom, will also start to benefit. We've seen already, Google's been doing more with TPUs. Amazon has their Graviton chips. We've got a bunch of other companies. Microsoft is doing custom chips. A lot of these are ARM-based. So ARM is another company, we haven't been talking about them a lot lately, but ARM's helping drive some of this innovation. Intel, as you've talked about, is doing well. They continue to plug away. Obviously, they had their challenges last year. So things are getting better in 2020. So I think we're going to see a lot of different players from different areas all start to come together. And we see some smaller companies. There's a little company called SideTime that does timing chips. And all these networks have to be completely aligned from a timing perspective. They're doing some interesting stuff. So I think there's a lot of different opportunities in different areas, but we're going to have a lot of the bears on the side, just again waiting to pounce on these concerns that get raised. I think around agentic AI,
and we'll have to see if those are dips worth buying or not. And Bob, what I'm realizing is we got to do another podcast real soon. So thank you for showing up.
Yeah, man, I'd love to.
It was great seeing you here.
Thanks, Gary.
All your markets action is ahead. Stay tuned. You're watching Market.
All right. So in this case, we're looking for hedge flows to turn back up.
At Grand Canyon University, we believe in equal opportunity, and the American dream.
Looking for hedge flows to turn back up. It is 10:12 on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Monday, December the 29th. Holiday shortened week. We had a quick pop after the gap down this morning. Giving a quick opportunity. Had to be quick and nimble. Looking for a bounce. Okay, Riot, Bitcoin, even Bitcoin had a nice little run up that got sold over the last 15 or 20 minutes. Looking for another bounce. Micron, same thing. Most of these stocks that popped this morning getting the same treatment, unfortunately. Okay, let's look at some of these on the top of the NASDAQ 100. Lulu has already pulled back. Lulu. Okay, Lulu's changing trend. Okay. Excuse me. Let me see what's going on here. Why do they advertise so much for game apps on your phone? So unproductive. Can't imagine. Okay, so here's Lulu. Okay, Lulu. Lulu bouncing off the 90 MA, 21-day, 50-day, all turning up into the right. I like to wait for the second bullish day. This is a nice bounce so far. Continuing on with the stocks on the NASDAQ 100. Starbucks, we talked about Starbucks. That's very tight price action. T-Mobile, just talked about that one. Not really interested, coming off the low. Keurig, Dr. Pepper, bouncing off the 50-day. Okay, so this one looks pretty good. Keurig, Dr. Pepper. All right, so what I'm seeing right here, these pullbacks getting bought. Okay, then you get this run up. Okay, so that's what we're looking for right now. Obvious target would be the 200-day right along in here. Okay, So it looks like that's where we're headed. MACD needs to turn up. RSI is already rising, so strength of trend is improving. Do I want to do this, Keurig Dr. Pepper? Okay, let me see what KDP earnings looks like. KDP in line. It's okay. Earnings growth 5.9%, 10.7 on the revenue. It has turned. It has turned. Okay, over here in this area, right in here, once we get above this area here, we could get into this higher price action above the 200-day, $30. So you got about 10-20% overhead potential in this one, short term. Keurig Dr. Pepper, Bollinger Bands are tightening up. MACD does look better. Volume is tapering off. Volume on the recent pullback, which is good. Okay, so now we want to see this bounce. Yeah, I like it. I like it. Keurig Dr. Pepper. Keurig Dr. Pepper. Okay. Let me just check this real quick. Keurig Dr. Pepper. Yeah, way over here on the left. Okay, calls are really cheap. Puts are more expensive. Buying call spreads makes sense. Why call spreads versus straight calls? Straight calls, obviously, you do a little bit better. If you want to do like a synthetic options trade, synthetic shares, buy some in the money options like the 28 call. Let's see what those are going for. The 28 call. I might actually do this here. Keurig Dr. Pepper. I've been known to have a few Dr. Peppers from time to time. Let's go to February. Let's go February. See what that looks like. February. These are pretty cheap. A 60 delta. Oh, there's a big spread here. $1 spread. There's no way I'm doing that. Very little open interest. Let me go out to March. Lots of open interest at the 30 strike. No volume today, but 35 delta. There's a 20-cent spread there for March. 9,300 contracts at the 30 strike. So it looks like traders are anticipating a move back up to the highs. Let me put in a bid at 70 cents to see if this goes. Buy, single.
Continue to outperform? Do you believe that the expectations of a weaker dollar is enough? Or does it need to be more of an earnings-driven type of story coming from some of these more regional markets?
Well, a weaker dollar always helps, but you're right. We would really like to see earnings improve. There's expectations for us considerable earnings from international markets.
Okay, Keurig Dr. Pepper watching this one. Keurig. Kraft Heinz, KHC. All right, S&P is bouncing.
Significant fiscal stimulus. So we, broadly speaking, do have the right recipe. I think it's a lot of
S&P, looking back to the S&P, starting to bounce. Volume picking up? Yes, volume is picking up. Okay, so volume is picking up. We did bounce, but that's the low right there. Okay, Micron. Okay, bouncing. Again, if you're going to trade anything intraday, you're always looking for how it reacts at VWAP and what happens in terms of volume. MACD showing momentum is shifting. So if you're going to buy Micron off of the low, this makes sense. Put a stop under VWAP. Looks like it's going to go. Put a stop under VWAP. Micron looking good.
Detail around the deal itself from NVIDIA at all, other than an internal memo from Jensen just announcing the arrival of some of these key hires. They're not a full stack competitor, Grok, in any way to NVIDIA, but they are seen as perhaps helping the overall GPUs in terms of their particular expertise called the LPU. I don't know how much you know about it, Jonathan, or care to discuss it. I would assume regulators need to be taking a close look, though, in terms of whether there really is a competitive aspect to it.
Well, that's exactly right. I mean, this is typically how competition presents itself in technology markets. It may not be that a competitive threat is a full stack competitor, but here you have training, which NVIDIA does better than anybody, and it's extremely expensive. And their chips are really hard to get. They take a long time to get, and they consume a ton of energy. Then you have
Okay, silver. I see you guys talking silver.
and that's where Grok really has figured out a way to do it faster, cheaper, and with consuming a lot less energy.
Keep in mind the margin adjustments having a big impact on silver.
Competing for certain workloads and for inference against NVIDIA, and in that sense, one could
Okay, S&P, buying some S&P.
Grok has emerged as a threat to the moat that protects NVIDIA. And so by doing this deal, one of the questions you want to ask as an enforcer, not only is NVIDIA
Silver
acquiring
getting crushed. Silver getting crushed.
a direct competitor, but is it weakening somebody who, left to their own devices, would have grown in size and significance to take more business away from NVIDIA?
Right, there are those questions, and then also there's just the straight sort of acqui-hire trend that's emerged, where these companies are paying billions of dollars and getting top talent, CEOs and founders, and this is not unique to NVIDIA here. We've seen Meta do the same thing with Scale AI. Is there any antitrust concerns around paying big bucks to get top
Yeah, the
talent?
margin increase had a big impact on silver.
Companies to bring in
Watching Tesla here. Tesla gap down to what is this? Gapping down Tesla. Okay, so Tesla, there's not a big hurry here. We're sitting on the 20-day. We could come all the way back to the 50-day. Nothing says we have to stop. You can see the RSI is saying that strength of trend is decreasing or fading. Volume, MACD, stochastic. So it looks like they're going to sell this for a few more days. If you're trading it intraday, look for a short covering bounce. That's about all you're going to get, Tesla.
But it does mean that if this is going to become a common form of doing a deal, then at some point agencies have to assert themselves.
Finally, Jonathan, specific again to NVIDIA and Grok, does the fact that it's a non-exclusive license give NVIDIA cover on the antitrust front?
Well, they could on the avoidance device, or it could in terms of structuring it for notification. But the answer is short is probably not, because what they're doing is they're taking out a competitor, right? You have, and a competitor is a sum of its parts. It's its technology and it's its people. And in this instance, the people that it's acquiring are some of the most notable and formidable competitors to NVIDIA. I mean, the inventor of Google's TPU, which has become a very direct competitor.
Okay, let's see what hedge flows are saying. We got a little bounce. Non-zero day. There's support down below, but 0 day, if you look at this closely. All right, let me scroll backwards. Watch the 6,900 strike when we came down to it, right from the open. Here's the open. Here's the open right here, 910, building. See that 6,900 node there, 930. 930, we came down a little bit after that. All right, they closed this position. See that? Right there, 6,900. They closed that position. There it is. There it's not. Okay, we get the bounce. All right, we come back down to it again. One more time. It disappears. So that's where we are right now. Is that all they wanted to do, is to take this out? There's only 10 million there. That wasn't a whole lot. So the bounce is starting to follow through off the low. What's the matter, Goosey? You don't like airplanes? Kitty cat sitting in the window watching me trading. Okay, so back to the task at hand. We left off with Keurig Dr. Pepper. Nice double bottom.
Still to come. Speaking of, President Trump says
Keurig Dr. Pepper.
peace deal following a weekend meeting with Zelensky. And today, the president will sit down with Israel's Prime Minister at Mar-a-Lago. Former Council on Foreign Relations head Richard Haas is with us to discuss. Plus, the next leg of the AI trade.
Okay, I bought 5 of these 30s. Keurig Dr. Pepper.
Launching a proxy fight with the company as CEO Calvin McDonald departs. Find out why.
Some 30s, March 30s.
GLSI.
Silver. All right, so Mondo, you're getting your bounce. Mondo's getting their bounce. Silver bounce. All right, SPY turning the corner. Okay, so here we go. Okay, let's take a look at the S&P. Again, all right, so where are we? Below VWAP. All right, so the anticipation was that we're going to get rejected at VWAP. Didn't happen. What happened to the volume? Volume starts to pick up. What happened to VWAP? VWAP is rising. So this is a valid long setup after we turned, okay? You can see down here at the bottom that we got the MACD to cross right here and we'll start rising. Volume picked up. So far, this looks good. We got resistance right here along this level. Oh, you don't see what I'm doing. We got resistance along this level right here. That's where they started selling and we trailed off. So we need to get above this level in order to follow through. More than likely, there are going to be some stops. There'll be some shorts that'll stop out at this level if it happens. Right now, MACD is following through and volume looks pretty good. You can see this volume along in here looks pretty good. So we need to get through this level. Okay, MACD is turned up. This is a 1-minute chart. Okay, this could have been really ugly. Right now, we're just showing a doji, a green doji. We had a red shooting star just a few minutes ago, threatening to come down to the 90 MA, not shown, or the 21-day, not happening at the moment. So we get the bears to bite. What's going on? We need to get above this red bar of supply overhead. Recall that weekend video, we talked about all of the things that were bullish. We had like 6 bullish indicators, 8 neutral, I think it was, something like that. Let me just check real quick here. Pages.
They were growing above the industry for several years. It's come through.
Okay, we had 12 bullish. Sorry, 12 bullish, 6 neutral, and only 2 bearish. Okay, so that's the end of the week where we were at all-time highs on Friday. 12 bullish, 6 neutral, 2 bearish. That's the way we ended the week. Okay, now let's look at the New York Stock Exchange. 2,400 components. 70 to 75% are quality names, stocks. About 20-25%, according to the recent update. 20 to 25% are American depository receipts, and about 5% are real estate investment trusts. Okay, so New York Stock Exchange, NYSE. We want to see this at the highs. It is, but we're fading a little bit, so not surprising. Not surprising, but this does look good. It just doesn't look super bearish. It just looks like we're at resistance and could fade a little bit. The volume looks good. MACD and stochastics a little overbought. So volume picking up today. RSI still above 50. I don't know. If I had to guess, I would say, we need to fade a little bit. But I wouldn't be surprised to see the bulls run with this. Complete the Santa Claus rally into the first 2 trading days of 2026. Left to be seen. Right now, S&P is trying to get through this supply. Supply right there.
Where was the succession plan? It's a little unusual that they're now searching for a CEO. One reason, perhaps, why Elliott
Who are they talking about?
$1 billion stake and is pushing Jay Nielsen,
Lululemon?
of Ralph Lauren.
All right, so they don't have a CEO at the moment.
We talked about it. Obviously, boards are important. They can lose their way, and it's never completely clear what happens in that boardroom. How much information they truly.
Okay, supply is right here. This is supply. Okay, what the hell happened? Okay. Still not completely comfortable with trading view. All right, we got stops overhead. Okay, so if the bulls want to run this, they have the potential. They just right now watching MACD. MACD is flattening out. So it looks like people taking profits again. All right, so continuing on with Keurig, Dr. Pepper. We talked about KDP. I bought a few calls there. All right, that looks pretty good. Can we get to 30? I think we can get to 30. MACD's turning. Stochastics turning up. RSI's turning up. I like Keurig, Dr. Pepper. Check the 30 strike for March. Probably don't need to go out that far, but I'm looking at more closely as a stock alternative, in which case I would buy in the money once we see this start to move. So I bought some 30s in anticipation of a bounce. I looked at this, and I saw that Keurig was way over here on the left, which means calls are super inexpensive. Okay, think about you could do a call spread. I just went straight calls. So Keurig Dr. Pepper looks pretty good. Earnings could be a little bit better, but revenue growth 10%, not too shabby. Earnings surprise, it was a 0. They came in with 54 cents. Keurig Dr. Pepper, 4.3 billion in revenue. All right, so Keurig, I started a new position there. Okay. What else?
Over the long Christmas weekend. The Timothy Chalamet drama, Marty Supreme taking the number 2 spot ahead of the Jack Black.
Okay, you want out?
Anaconda. Sarah?
You want?
As you know,
Okay.
Avatar ride. It's one of the best. I think it's the best ride ever. Maybe.
Gets,
I'm that with Guardians of the
10 out of
Galaxy.
10 from the Sarah Eisen roller coaster meter, or what?
It's not a roller coaster, the
Oh, it's
Avatar one. It's like you're sitting in a thing and you're flying on an avatar in virtual reality. You're wearing 3D glasses and you're swooping down. It's like you're in a video game. Guardians of the Galaxy is the best roller coaster. I really wanted to watch Disney stock. It is amazing how much money you end up spending at Disney World and how they are able to get.
Okay, looking for a follow through.
Anything for those boys, right? They loved it.
Exactly. They loved it.
Okay, Trace turning up. Okay, hedge flows turning up.
President Trump scheduled to meet with the
Let's see if we can get a follow through.
Richard Haas from the Council on Foreign Relations.
I bought some cheap lottos, 6930s as well. S&P. Bought some cheap lottos, 6930s. Okay. As we start to turn, let's see where we go with this. 6930s or a 14 delta. 14 deltas. $0.75, 70 cents, average. Okay, so I added those to the 6920s. Okay. Those 6920s are back to $3.60. Okay, 60 cents below where I initially bought some. Okay. Micron back up to the highs. So it looks like the bears took a bite and the bulls are reversing this back up now, the powers that be. Okay, so remember the supply? Supply is not there anymore. Not there anymore. Supply is gone. Okay, was there, now it's not. Stops, okay, so we got some stops right here. After we took out that supply, those stops came in, got a quick fair value gap. Now we're pushing higher. Watch your MACD, watch your MACD, watch the volume. Okay, these lottos 6930s, watching these 6930s. They're $1.10. That's a 12 delta. Oh boy. Okay. Who's going to win this one, huh? Hedge flows turning back up sharply. We got all this negative gamma overhead.
Welcome back. Israeli Prime Minister Benjamin Netanyahu expected to meet with President Trump today at Mar-a-Lago to discuss next steps for peace in Gaza as the ceasefire agreement between Israel and Hamas shows some signs of strain. Israel condemning delays in Hamas's return of hostages, while Gaza's health ministry says Israel has killed nearly 400 Palestinians since the ceasefire went into effect. Joining us now is Richard Haas, President Emeritus of the Council on Foreign Relations and Senior Counselor at Centerview Partners. It's great to have you, Richard. You know, the other problem is phase 2 of the plan is Hamas is supposed to de-arm and not be in charge of Gaza. I'm not sure what the status of that is, but what are your expectations here?
Well, when it comes to Gaza and the Middle East more broadly, Sarah, it's probably a good idea to keep your expectations extremely low. Hamas is not going to disarm, and there would be no way to verify it. If they did, they could hand over 1,000 rifles tomorrow, but you would know if they had 2,000 more.
All right, if you're looking for 7,000, that JP Morgan strike expires on the collar expires on Thursday, so we need to see that roll. If we get a close above 69.50, we have to lean towards the 7,000 area potentially as a magnet.
What do you think comes of the meeting today? Anything?
Without a move to 69.50, that strike at 7,000 reduces or eliminates the magnet effect. Okay, so we need to see a close above 69.50. We're currently 43 handles below that level. Okay, so we need to get above 69.50. We're at 69.30. Okay, 69.07, 69.08. All right, so we need to see a run here. Okay, so in the back of the bears' mind, they want to keep prices down at this level. If we start to see a rally towards 69.50, that 7,000 strike pull or magnet starts to intensify. So still a lot to be done here today. It's only 10:40 a.m., an hour and 10 minutes into the trading day. And we still don't have a complete follow through just yet.
Other Arab nations to join the Abraham Accords, which have been transformational and have held up through October 7th and through the war.
Notice all of the big cap tech names, for the most part, are moving to the right side of the screen. That means calls are expensive. Okay, let's look at Microsoft, for example. Okay, so the risk reversal is at 87%. What does that mean? It means the potential for this to move back towards the put side or to lose strength is pretty decent, even though Microsoft is trying to break out of that tight Bollinger Band situation we covered earlier. Microsoft's pretty expensive. So if you're buying calls, they're pretty expensive. Here's Goldman Sachs, same thing. Now, JP Morgan, on the other hand, is pretty inexpensive, believe it or not. JP Morgan's pretty inexpensive. Call-wise. So buying call spread's not a bad idea on a dip. You got to see the dip and then the bounce. Markets are moving very, very slowly at the moment. Apple looks good. Apple off the 50-day. A lot of people probably not paying attention to it. This is an either or. Either we bounce or we lose the 50-day. RSI is right at 50. So this is a neutral position. But if we start to see some positive price action in Apple this week, could lead to higher prices into 2026. I suspect we will. All depends on how much volume picks up here. Do we see institutions like over here on the left? That's institutions. What happened after that? Markets kept rallying. Right now, starting to see some signs. MACD's turning, stochastic's turning. Not the best, but it looks pretty good. Apple looks pretty good. If you're just buying shares or you're waiting for a better opportunity, I understand that too. All right, so we lost quite a few stocks that were advancing earlier. Let me just check this out real quick. All right, let's check this out. Where's my... There we go. 212 stocks advancing on the S&P 500. Only 30 on the Qs. So there's potential for stocks to start advancing, but right now we don't have much of a thrust catalyst. We only have 208 stocks advancing out of the S&P 500. 208. So we basically have 300 declining, 200 advancing. Got to see more than that. It's a Monday. A lot of people are probably traveling, maybe going to New York for the ball to drop in the New Year's. Maybe they're doing something there or going somewhere else. The airlines reflected some increases, but those are pulling back. Okay, let's go through the sectors real quick. Okay, so XLB was very strong into last week. Still looks okay, XLB. Communications, that's Netflix, Meta, Google, Fox, Skydance, Paramount Skydance. Even those, they're okay. Let me just zoom in a little bit here. XLC is all right. Energy looking okay. It's inside a tight Bollinger Band situation, so it's not like this is going to rip higher. Some stocks like Diamondback Energy have been showing some strength. It too is rather tame in the lower half of its Bollinger Bands. Let's see what ExxonMobil looks like. Exxon breaking out. Energy.
Nobody's dangling all the economic incentives for President Putin, which is a different approach, and that is one that has worked. the president before.
I see
Okay,
that-
so you got Phillips 66, you got Chevron, PSX, and CVX closing shop in California. Man, that doesn't look good for California. I got to tell you, that's pretty scary. They've been there for over 100 and whatever years after.
overwhelm these internal and geopolitical considerations. I just don't think it is realistic. That could be a factor, but they're not going to overwhelm.
All right, so Phillips 66, that pulled back. That pulled back last week on that news. Chevron, okay, starting to turn the corner. Who's the one up in Washington State? The refiner up in is it Marathon? I think it's Marathon, right? Marathon Petroleum. Okay, that's pulling back. Okay, so energy, yeah. So Exxon looks good. ConocoPhillips bouncing. So I believe the news was Phillips 66 is moving their headquarters to Texas, right behind Elon Musk exit of California regulations. I don't mean to start a political commentary, but understand how it's impacting these companies. You're better able to trade them if that's what you're interested in. All right, so that's energy. Financials last week, very strong into the month of December. Still looking okay. The banks, JP Morgan, we just talked about. Goldman Sachs, they start reporting around the 13th, I believe. Let me just check real quick. Let's see. JP Morgan, I believe, is the 13th. JP Morgan, JPM. Yeah, the 13th. All right, so that's JP Morgan. Let's look at Bank of America, the 14th. Citigroup, the 14th. Goldman Sachs, the 15th. Morgan Stanley, the 15th. PNC Bank, the 16th. All right, so the whole week, 13th, 14th, 15th, 16th. Nothing but banks. So we got 2 weeks. All right, so S&P is not working. S&P is not working. Turning back down. Okay, S&P is turning back down. Got to bounce here, VWAP. Otherwise, take your stops and just be done with it. Get out of these trades. Not doing anything.
We are more than 30 minutes here into the hour. Here are three big movers we're watching. SoftBank announcing plans to buy Digital Bridge Group for $4 billion. Private equity firm focused on digital infrastructure like data centers. SoftBank will pay.
Okay, let's see. All right, so we had the banks. Okay, so next is industrials. The industrials like aerospace and defense industrials, Lockheed Martin pushing higher, Northrop Grumman, both of these on the watch list. Lockheed Martin, Northrop Grumman, also Raytheon. Raytheon's fading at the highs. Maybe take some profits there if you took them back when my son was buying Raytheon right here on that big red candle. Held through this, moved back above 50 day. Did very well on this one, actually. Did very well.
What they are able to do in terms of presenting an automobile in markets like Europe at a price point that
Micron.
by the local or domestic suppliers. And Europe's really struggling. Do they do tariffs? Do they block them? Or do they welcome them in? Because it's a threat to
What
some of their
happened to
automakers.
my cursor?
If you could buy a $25,000
What's
SUV
going
here,
on here?
it's really pretty high quality. I've been in those. They're amazing. Yeah.
Okay. Micron.
We really gotta go.
Nice little bounce. Just starting to grind along like it did earlier over here. Last time it broke out of some tight Bollinger Bands back in September. Micron started a pretty nice run. I believe, Dr. Frank, you were in this, right? You were in this back here on this flat base breakout. All right, so we had a flat base here on Micron. We broke out another flat. You know what this looks like? This looks like a volume compression pattern. This is one of Mark Minervini's favorite patterns, okay? So you're looking for the breakout. You have the first initial pullback. It happens to be back to the 50-day moving average. You have another smaller pullback. This one's a little bit more extended, but another pullback to the 50-day. Gets bought. Micron, good news. It looks like it's going to continue. RSI is rising. I like the volume here as well. Indicates institutions were picking up shares off the last bounce at the 50-day. MACD looks good. So Micron looks like a pretty good investment going forward. Their numbers look really good too. Okay, Micron, their numbers looked really, really good. Micron. Okay, 107. This is what I like to see. Okay, this is what I like to see. 172% earnings growth, 56% revenue growth. They beat earnings, top estimate. Came in with 13.6 billion, beat by $1 billion. Okay, so Micron looks really good. S&P, big drop there in S&P. All right, is this going to shape up to be a very large range, or what are they doing here? Okay, so now this shifts over here. Supply and stops are over there now. Okay, we're bouncing off of this area of liquidity. Some passive buyers down here. Okay, are they going to buy? What are we going to do? MACD needs to turn back up. Lockheed Martin. Okay, let's see. LMT. Micron looks good. Micron, I like that one. Okay, so Lockheed, LMT.
Welcome back to the AI trade dominating the headlines in 2025. Our next guest says the focus will stay on artificial intelligence next year, but the opportunities will shift from hardware to software. Let's bring in Byron Dieter. He is the partner at Bessemer Venture Partners. Byron, it's great to have you. So what do you think changes in 2026?
Wonderful to be back. And this is the extension now of the AI build. And we can just look back at the cloud story to see how this plays out, which is the fundamental pieces go in first, which is the data centers, the compute, and core infrastructure, foundational layers, in this case, the foundation models, and then 1,000 flowers bloom on top. It's the upstack applications. And so as you look at the coming trillions of dollars of data center spend, going from about $550 billion a year to $1 trillion a year shortly.
Okay, Keurig Dr. Pepper, KDP. Nice move up to 28 and change. Okay, looking at the stocks that are advancing, only got about 30 stocks advancing out of 100 on the NASDAQ 100. Dexcom, DXCM. Okay, that's just grinding along. Not much moving each day. If you bought this last week, you're talking pennies, not moving much at all. It's got a declining ATR, $1.75 a day. Dexcom, Baker Hughes, BKR. Energy getting a bounce today.
So I do think that first gen cloud
Lind, we looked at this a couple of weeks ago. That was coming off the low. Following through, LIN. LIN. Okay. Industrial gases and engineering for energy, food, beverage, electronics, healthcare, manufacturing, metals and mining, etc. All right, slow mover, low beta. It is turning the corner. Lin, for the last couple of weeks. PepsiCo, bounce. Warner Brothers Discovery.
But I would assume there's companies that we've yet to even hear from. Conceivably, I mean, if there are going to be hundreds of applications and thousands of agents.
Warner Brothers Discovery, still trending. Who's going to acquire the company? I was watching Netflix last night, and one of the offerings was a subscription. No, it wasn't Netflix. It was Prime, Amazon Prime, subscription to Warner Brothers, Paramount. Who's going to take it? Who's going to take that? Netflix or Paramount? Skydance. S&P bouncing a little bit. So that's Warner Brothers Discovery. Not a whole lot to do, folks. If you're thinking to yourself, maybe I should take the rest of the day off. If I wasn't broadcasting, I'd be taking the day off. Mondelez, Mercado Libre. Okay, that's still moving lower. That hasn't done anything for months. Intel, still range bound. Intel. Intel. California wealth tax, man. Gavin Newsom is trying to run everybody out of the state, huh? Intel. So much going on in the governments all around the country. Minneapolis, California, you name it. A lot of grift. Intel. All right, so let's see. Risk reversal 63%. So selling calls, maybe buying, selling some puts too. Let me see. Intel. When are their earnings? Intel. January 26th. Okay, this is pretty interesting. Look at Intel. Look at this beat. That's pretty cool. Intel. 153% earnings growth, 2.8% revenue growth. Earnings growth, that spike is, yeah, okay. Wonder how much of that is new technology. I don't know. Intel looks pretty interesting. It hasn't for a long time. Over the last 6 months, year or so, Intel looking a lot better. Okay, Intel at the highs, not really going anywhere. Okay, where can this go? What would a iron condor Intel look like? Intel for when do they report again? January 22nd. So 23rd, 16th is a monthly. All right, let me see what the premium looks like. 20 Delta, not even worth it. 20 Delta is 65 cents. On the call side, on the put side, at 20 Delta for Intel, 50 cents. Yeah, not worth it. Got to wait for earnings for that implied volatility to increase. With VIX where it is, selling premium, not the best. For the last couple of weeks, VIX has just continued to drop. So Today we get a little gap up on Intel on VIX. My neighbors are all out walking around. My neighbors. All right, S&P. You know what S&P looks like right now? It just looks like, besides a dog, if you're in a bad position, it just looks like a range-bound condition, right? So you got the low, you got the high, VWAP is flat, not really much to go on. MACD's trying to turn back up. So coming off the low, maybe you make 25, 30, 50 cents on some options. Not a whole lot to do here, though. Okay, so where do we leave off? Okay, so some of the... Okay, so VIX. We're looking at VIX. All right, VIX. All right, so let's look at Biogen, Amgen, Regeneron, XBI, Biotech, IBB, NASDAQ Biotech ETF. All right, these aren't doing much. So we left off with industrials, right? We were talking Lockheed Martin. Caterpillar, what's Cat doing? Caterpillar, not much of anything. You can see that just towards the end of the year, tax loss selling, whatever the reason is, market's not moving much. We're at an all-time high. Surprise. We're just off of an all-time high. Just off of an all-time high. 2 steps forward, 1 step back. Texas 2-step here at the highs. We hit 69.45 on Friday. Upper Bollinger Band, pulling back towards the 9 EMA. Completely as expected. Might happen. Bollinger Bands contain over 95% of the price action by design. Right now, we're just looking at prices in the upper half of the Bollinger Bands, so we don't have the follow through. We're always looking for that bullish day after one after another, unless you are comfortable trading with a bearish trend. It just looks like everything is stalling at the moment. Oh, we're back to the whole tariff business now. Being reimbursed.
Where that goes, but long story short, I think 2025 story's been written at this point. I don't know that a lot can happen in 2 or 3 days.
So that's the S&P 500. Let's see what IWM looks like. Small caps pulling back. New York Stock Exchange. When in doubt, always check the New York Stock Exchange. That's pulling back from the highs. The Qs. The NASDAQ Composite, COMPQ, not much. Okay, let's go see. Excuse me. Let's see, scooter scores. Where's my scooter scores? Scooter reports. Large caps, who's the strongest? SanDisk. Light, LITE, that's on the watch list. SATS. EchoStar. Not much going on there. EchoStar. Hecla Mining. Even the gold stocks populating the IBD 50, all of those pull back. Bloom Energy, Sienna Healthcare, Insurance, what are they doing? TSEM. Wow, talk about a talking about a sleepy market. Not much going on here. Open, nope. Prax, Praxis Precision Medicines, gapping up. Oh boy. Well, let's go look at something else. Let's see what's working here.
$16 a share, though, is the number since it is a publicly traded company. Well, you see it already at
Okay.
15.26 here.
You're seeing the same thing I'm seeing, mostly red. Unless you're talking healthcare, utilities, energy, some real estate, and some consumer staples. Walmart's up almost 1%. Okay, I'm going to take a 5-minute break. I'll be right back. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. I'm going to leave you with hedge flows, see what hedge flows are doing. Okay, trying to turn up. Just trying to create a higher low. So watch these hedge flows. I'll be right back.
Even if you feel very confident deals, things can still break down. And so there's still that risk that the deal would break down. But yeah, I think it's indicative of where we are, which is we're watching this AI trade sort of have that next, second, third, fourth layers as it expands out. We talked about the need for power. Well, data centers are a big part of that story.
They really are. And I think that's been a consistent theme that we've seen emerge from AI is anything tied to data centers seemingly is where a lot of that money is going. So I think a really great breakdown and a good point about the fact that now shares could be in somewhat of a range just as we await this approval. But hey, regulatory approvals are something we're not seeing handed out as perhaps easily as what the market had been expecting.
Yeah, so in terms of how it would trade, okay, you don't know if it'll break down. There's a risk. That has a value. I don't know what it is, if it's less than 1% or over 1% or whatever it may be. But assuming it were to go through, you essentially watch this $15.25, 26 now. As it gets closer to the close date, it would work its way towards 16 slowly but surely over time.
Okay, and a good point and a good place to leave it. So appreciate it. Alex Coffey, of course, my co-host of Next Gen Investing every day. But now to get some more insights on the news shaping the overall markets, for that we welcome in Ted Thatcher, president of Bright Lake Wealth Management. Ted, thanks so much for being with us. Of course, happy holidays. It does still feel like we are a little bit still in this holiday haze. But as far as expectations for the new year, I mean, let's look back at what really were your key takeaways of 2025.
You know, Jenny, when I look at the economy and the consumer, these several weeks leading up into this Christmas holiday season have been really positive. You know, we saw the Fed provide some more rate relief, bringing rates down. We saw policymakers update growth expectations for 2026 from 1.8% GDP growth to 2.3%. We saw the expected number for inflation for 2026 come down from 2.6% to 2.4%. Then we got that huge Q3 GDP expectation beat 100 basis points over what was expected. And so while it has been a very volatile year, especially the first half of the year, I think we're really starting to see stabilization. And there was so much talk around this K-shaped economy, this, dual-lensed view of what was happening, sort of what was happening on Wall Street versus what was happening on Main Street. These key data points are real positives for everyday consumers. And when you pair that data with what's coming here as we turn the corner into 2026, I do think it paints a really nice, positive picture for everyday consumers.
Okay, and I think that's such a positive takeaway. As we were saying previously, I mean, it's been one of the most, feels like, disliked or criticized rallies that we've seen in recent history. And so curious your thoughts on some of the expectations you just outlined. I mean, does a higher GDP and lower inflation continue to signal the soft landing going forward?
You know, again, if we key in on the consumer here, what I'm really looking at is what's going to happen with the power of the consumer. We talk about the consumer and their ability to spend and how durable they really are. Sometimes I think we don't give the consumer enough credit, right? We are quick to criticize at times. But when you look at the sort of underlying view of what's about to come into view here with the big, beautiful bill and its actual monetary impacts for everyday Americans, we see the no tax on tips. We see, the no tax on overtime. We see an increase in the standard deduction. We see an increase in the child tax credit. At the end of the day, what that's going to do is it's going to put money in the hands of everyday consumers. And when you increase the M1 money supply like that, that ends up being a proxy for purchasing power and for durability when it comes to the consumer. And so we've seen a little bit of volatility, of course, when it comes to consumer sentiment and consumer confidence. But when you add those things to the picture, again, I think it spells a really nice Q1, Q2 for that everyday consumer. And I think what that will allow is for the market not to fixate so much on this inflation story that's been at the top of mind, and not so much on the K-shaped economy, but what the next steps in a stable economy will look like for everyday consumers.
Okay, so as far as now some of your key opportunities you're keeping on your radar, I saw you mentioned financials and JP Morgan specifically. So walk us through that mindset there, because I do know that we've seen, more and more of these best in class, best in breed type of companies emerge as more stable, and also just, I think right now, a good way to diversify outside of some of the volatility we see in, say, like the tech trade.
Yeah, absolutely. Of course, when you think about high growth, you always want to talk about that AI story. But I do think that there are these names like the financials. JP Morgan obviously comes to mind. They have a fantastic balance sheet. And really what I like about where JP Morgan is from a financial standpoint is they have so much high margin revenue. At the end of the day, right now, the 10-year treasury has been stuck above that 4% number for quite a while. And so that pegs a lot of extra margin in there for the big banks. And when you look at those things and you pair it with the regulatory environment, there's a lot of regulatory tailwinds. Deregulation will affect the big banks. The intention, of course, is it for it.
And then you saw the metals crashing. And that's basically what has been worried about here. And I wrote him saying, look, there's this debate going on about the deficit with these metals when it comes to silver, when it comes to copper, that you need this for all the AI data centers. And he says, yes, there's always a story. There's always reasons why. But his whole thesis is watch out, take profits, because he believes that we have seen this movie before in 1979, 1980, very similar pattern.
Chris, what's the best way? If you are a believer that this move in commodities is going to continue, we're going to see maybe another 10, 20% move in various stocks, is the best way to play it a miner like a Freeport-McMoRan, or do you just keep it simple with an ETF?
I would keep it simple with an ETF, Brian, but I also want to just back up a second and say, we have seen significant moves like this before. Earlier this year, for example, in nuclear. And, at the time, even though you're sitting on these big moves, I think the individual investor sometimes forgets that it is okay to sell some of what you have, not necessarily all of it. Take some of those chips off the table, take those profits, redeploy them elsewhere, leave some chips on the table to capture further upside. But to answer your question directly, Brian, without a doubt, an ETF, I like that diversified exposure.
All right, thank you, Brooke and Inez. Chris is going to hang with me for a little bit longer. We'll be right back with some of his top picks in the tech space for next year.
At Par Physical Therapy, our goal is to get you back into activity faster. Whether you're recovering from surgery, dealing with a sports injury, or managing chronic pain, we're here to help. With personalized care and hands-on treatment, we work directly with you to reach your goals, whether that's getting you back to your favorite activities or keeping up with your family. And now, with the new location in Merle's Inlet, expert care is closer than ever. Call today to get your complimentary screen at Par Physical Therapy. Par Physical Therapy, getting you back into the swing of things.
You know what our kids don't want? Our stew collection. Or my holiday decorations.
We spend a lifetime collecting things we love, but the best thing we can leave behind? Peace of mind. If you thought you couldn't afford life insurance, you can with Physicians Life Insurance Company. Plans start as low as $570 a month. Call or go online for your free info kit with all the details.
Who knew coverage was so affordable?
Thanks to Physicians Life, our final expenses can be squared away.
Getting coverage is simple. Guaranteed acceptance, no health questions, no medical exams.
It's great knowing I'm leaving good memories, not unpaid bills.
Affordable protection for your loved ones when they need it most. In minutes, you can lock it up to $30,000 in coverage for life. We all want to leave behind things that matter, but sometimes leaving security is the greatest gift of all. Call or visit physicianslife.com for your free info kit and final wishes plan. Physicians Life, simple, affordable coverage, because the last thing you leave should be a gift.
Physicians Mutual, Physicians Mutual. With its powerful telescopic zoom, the Flash Force tactical flashlight is always ready to light up the night. And if you scan the code on your screen and order right now, we'll send you a second Flash Force tactical flashlight absolutely free. Scan the code on your screen to order now.
Are you prepared? Scan the code on your screen now and never be in the dark again with the Rescue Volt 7-in-1 power station.
It can charge my phone, right?
The Rescue Volt is a USB power bank, plus a flashlight, AM/FM, and weather band emergency radio.
That's great and all, but I just wanted to make sure it will charge my phone.
It powers up 3 ways with built-in USB, solar panel, even a hand crank.
So you mean our phones will always be charged so we can still doom scroll in a power outage?
The Rescue Volt 7-in-1 power station is travel-sized and ready for any emergency. And yes, it charges your phone too.
Okay, great, because I gotta post my socials.
It makes a great gift. Order now and get 50% off plus free shipping. Scan the code on your screen.
All right, so still chopping around down here at the low. Got a feeling not going to see much action today. Supply up here, stops back down to the lower part of this range. We're gonna drop this market. Probably not a bad idea to have some puts just in case. Let's see. We're at 6,900. Just below 6,900 now. Really not eager to do a whole lot today. Took some Keurig Dr. Pepper. That's about it. Adobe. That's working out perfectly. Adobe. I'm going to collect on this one. Okay. So if you're trading anything, you should be looking in the healthcare, utilities, energy, real estate. Everything else is bearish. The S&P, New York FANG puts a lot of weight on the S&P. We got Microsoft rolling over. That was a trap. Microsoft not doing anything on Microsoft. Good idea. Micron is showing a lot of relative strength, I have to say. Looks very good up here at the high. Okay, what is this? AMCI? AMCI, that was a week or so ago. AMCI, what is that? AMCI. AMCI popping up on my radar. Yeah, AMCI, not much to do here. AMCI. Okay, looks like they're trading this one, AMCI. Again, watch for volume, MACD crossing. What's the news? Any news on AMCI? This is one of those cheap ones, AMCI, cheap name. Let's see what the news is here, AMCI. Okay, this one's halted a few times. That was last week, AMCI.
Lululemon, the company's founder, Chip Wilson, has reportedly launched a proxy fight to change the struggling retailer's board. According to the Wall Street Journal, Wilson is seeking to nominate 3 new directors, including former top execs from On Running, ESPN, and Activision Blizzard. The challenge athleisure brand needs to stage a comeback, and the stock has plunged more than 40% this year. Results have been awful. And Wilson isn't
Micron doing well. Micron hanging out near the highs of the day. Let's go to the 5-minute. 5-minute.
Nibbles are still trying to make sense of its $20 billion surprise deal for AI chip player Grok. NVIDIA didn't even put out an SEC filing on this one. I mean, go figure. It also hasn't said anything publicly.
GVH, you can see what they're trading right now. GVH. Again, these cheap stocks seem to be what risk takers are in today. MACD turning up. Look at the volume. Is any news? I don't see any news. I have no idea what this company does.
Okay, this target. I find it funny. You and I are, I think, fundamental analysis
Okay, what's Target doing? Target. Okay, off the highs. We did put on a new high on a recent high on Friday, inside day at the moment. Target. Riot trying to bounce, Bitcoin trying to turn. Yeah, this is a sluggish market with lots of people out, probably not trading. Target trying to turn right here.
Flexing their balance sheets, filling in technical gaps or holes, kind of as a competitive move, so they can compete on a greater scale in 2026.
Chris, I remember being in the streets offices when I worked there, and you may have been there too as well. I think 2017.
Okay.
I've always become very bullish on NVIDIA. It was one of the first people that I know championing a bull case on NVIDIA. And his case was NVIDIA essentially dominates the chip market. At the time, they were doing gaming, but now they're also...
Okay, Adobe. Talked about this earlier. Currently have a Iron Condor on this one, expires on the 16th. These next few trading days, Theta is going to kick in. So I'm looking for this to pull back towards 350, maybe. I could close this right now for more than 50% profit. Let me see what this is. $50. I could close this for $50. Okay. Contemplating it. Almost $800 on this trade. If I closed it right now for a limit, right around 50. Adobe. All right, just watching this. Tesla trying to turn up after gapping down. Tesla bouncing at the, 21 day? Tesla. Potential to come down to the 50-day. Don't like the markets when there's hardly any volume, because this could go either way very quickly. So far, hedge flows are trying to make a higher low. Okay, let's watch hedge flows. Okay, I got to go check the oven. I'll be right back. You said, I just throw some bacon in the oven. Son was hungry. I'll be right back.
So it's kind of an interesting, company, right? So on the one hand, people are like, oh, it's a retail company. Look what they do in digital shopping. On the other hand, they're a cloud company, given what they have with AWS. And even more recently, Brian, people have been saying, oh, Amazon, sleeper company in digital advertising. Look what they're doing to the Trade Desk. And I think when you step back, you really have to ask yourself, where does Amazon really make their money? That is, of course, AWS. It's the biggest driver of their cash flow as well. And as it becomes larger, it really helps kind of balance out the seasonality that we've seen in the past from the retail-facing business. But to your question on AI, I think they're going to use it to help drive productivity inside of AWS, help improve cash flow prospects, improve their margins. The real question to me is, how can they really leverage it on the digital shopping side? And some of the early data that we've seen about Rufus, where folks are actually buying more when they use Rufus, that's a pretty positive play, data set for us to think about. But as far as Amazon being an AI company, we're going to need to see more of them selling their wares outside. So we're going to have to watch what they do on the chip front, I think, for that to really take hold.
Chris, just listening to your explanation of Amazon, I mean, you're spot on. I can't help but to think, does the business model, has it gotten so complex, do we need to bring back into discussion if this company should break up? Look at some of the things we just talked about. They have an e-commerce business, AWS Cloud. You have a chips business in Trainium. They're making robots. They have advertising revenue, and probably 10 other businesses I'm not even mentioning here.
Yeah, I don't think so, Brian. I'm sure you'll get some folks out there, particularly some congressional people in the state of Massachusetts, that might say, oh, this is too big, we've got to do something here. But personally, I don't see it. I think if we were to see one business, really dominate the overall revenue mix, then I think that would be the case. But I think when you step back too, and you look at the larger industries that they compete in, there's still much room to grow and a lot of room for other competitors. So I just don't see that.
Chris, in the 45 seconds we have left, make your case
for your favorite tech stock for next year?
My favorite tech stock for next year. Oh, I would go with Marvell, Brian. And the reason being is, a lot of folks are focusing on the chip business at Marvell and what they're doing with the third-party AI wins, whether it's with Microsoft and Meta or even Alphabet and Amazon as well. But I would step back and say that if we continue to see AI adoption and usage grow, like we talked about in the earlier segment, we're going to see network congestion. As that happens, we're going to see incremental capacity come on stream. That helps explain the big spending on AI and data centers, but it's the network connection that will be the big bottleneck that I think folks are missing. Good for Marvell and the other stock that I mentioned earlier, Arista Networks.
Great insight as always, Chris. Happy New Year to you. I will be talking very soon. Appreciate it, man.
Same to you, my friend.
Thank you. All right, that does it for Morning Brief presented by Robinhood. I'll be back in just a moment. Opening bid. I will be. I'm running to the other side of the studio right here.
Stay tuned for a special free offer from Flash Force Tactical Flashlight. With its powerful telescopic zoom, the Flash Force Tactical Flashlight gives you a super bright light visible at a distance of over 2,000 meters with 7 useful modes plus a USB rechargeable battery. The Flash Force Tactical Flashlight is always ready to light up the night. And if you scan the code on your screen and order right now, we'll send you a second Flash Force Tactical Flashlight absolutely free. Hurry, this is a limited time offer. Scan the code on your screen to order now.
Why did our ancestors use copper for centuries? Because they knew. Why do the best athletes continue to wear copper? Because they know. Hospitals know, which is why they insist on copper. Scan the code on your screen to get 50% off with this exclusive TV offer. And get Copper Smart, the ultimate accessory with a purpose.
Say hello to the Cobb Gobbler, the effortless corn stripper. That's cream of the crop. With its ergonomic design, peeling corn has never been easier. Crafted from solid, rust-proof stainless steel, the Cobb Gobbler is built to last.
I love the Cobb Gobbler. Totally changed my salad game.
I used my Cobb Gobbler so much I bought 3 more. It shucks great. Elevate any dish with freshly shucked corn. It's quick, simple to use, and easy to clean. Scan the code for an exclusive discount. Say hello to the Cobb Gobbler, the effortless corn stripper. It's cream of the crop. With its ergonomic design, peeling corn has never been easier. Crafted from solid, rust-proof stainless steel, the Cobb Gobbler is built to last.
I love the Cobb Gobbler. Totally changed my salad game.
I used my Cobb Gobbler so much I bought 3 more. It shucks great.
It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network. Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are. Welcome back to Trading 360. I'm Jenny Horn, live in our Chicago headquarters. But it's time now to spotlight gold and silver in the year that was for these metals. And we're now joined by David McElveeney, CEO of McElveeney Financial Companies. And so wanted to get your broad takeaways here on 2025, as of course we're in our last several sessions, and it feels like just hours of the price activity and the overall trading activity for this year.
Yeah, there is a lot going on in the gold market and silver markets this year. We haven't seen performance like this since the late 1970s. So what we've had in the past with major bull markets is some form of a crisis of confidence. And so if you look at the Carter inflation, if you look at the Iran hostage situation, the USSR and Afghanistan, even the European implosion circa 2011, gold moves for a reason. It's not clear what that reason is today, except that central banks have been sort of front running the whole market structure, and investors are somewhat late to the game. We see a lot of room in 2026 for investors to play catch up in terms of allocating to their portfolios, and look at any corrections that you have as being significant buying opportunities looking into 2026 and 2027. This is a structural bull market with legs.
Okay, so a structural bull market, specifically in gold and silver, I mean, what defines that as compared to, say, some of the investor-driven fads? And, there is, I think, the fear right now of getting in too late.
Yeah, and I think this is where the backdrop of central bank buying is immense. You're looking at massive quantities, over 1,000 tons purchased per year over the last 2-3 years by central banks, and not a lot of activity from the investors globally. We've begun to see that shift in the fourth quarter, but it's still a very under-owned asset. I would have to say it is expensive, but it's very under-owned still today, with Wall Street firms still having a pretty negative bias against gold, making concessions towards 5,000 or 5,500 in terms of price targets for 2026. There'd be Goldman Sachs and others. But I think the reality is their clients have not participated in this move.
So what factors do you believe we could see propel shares even, just overall price even higher? And we could see, and this is going for say, gold and silver. What factors do you see coming now into the next year that we could see drive some further bullish activity?
Yeah, I think, again, coming back to this notion that a crisis of confidence is typically what it drives investor demand. You could have a crack in the equities markets. You could certainly have reflections, and this is very reasonable, reflections on debt capacity limits. And we're already seeing sort of a global trend with higher rates and concerns of inflation impacting the longer end of the curve, the far end of the curve for bonds. Certainly, if you have anything of a geopolitical nature, an intensification of geopolitical conflict, these are all things that represent a crisis of confidence. But I think the real issue is you've got a significant distrust in terms of institutions, and this is sort of between themselves. You see central banks owning a lot more gold than they have in decades past, and I think that goes a long way towards saying, the U.S. Treasury is not viewed as the friend of the central bank community these days.
Okay, and so silver I wanted to specifically discuss because silver has remained in the supply deficit for 5 years, but curious your thoughts on the role that could play in the industrial demand that we're seeing right now and this boom expected from, of course, the AI build.
Yeah, I think there's a couple of things going on there. Number one, over the last 2-3 years, we've seen a significant increase in demand for solar usage. And so roughly 200 tons a year, which didn't exist 3-4 years ago. So that expression of industrial demand is in play. Samsung is discussing their solid state battery, which each battery taking roughly 1 kilo of silver per battery would be a significant enhancement to the silver market, particularly on the industrial demand side. And of course, investors are a key player in this space too. The one difference between gold and silver is there is no real central bank demand for silver. It does come back to those two pillars of industrial and investor demand.
Okay, so what signals right now are telling you that investor participation in silver is still relatively minimal?
Yeah, I mean, first of all, we haven't seen the kinds of rush we have had in previous cycles into SLV and GLD. We have seen sort of contraction in shares outstanding for GDX, GDXJ, some of your key proxies for the silver miners. And, particularly in the OTC market, this is where I think it's particularly relevant. The over-the-counter market where people might take delivery of 1-ounce coins, 10-ounce bars, kilo silver bars, things of this nature. You have very soft bid and ask. So in a very aggressive market, you will see the ask price creep higher, pay higher and higher premiums, given the scarcity of the product available. There is more than enough product to go around, and we see very soft ask and bid prices. So, to us, that's a strong indication that investors have yet to really come into the market in force.
Okay, and as far as being defensive and continuing to maintain this defensive posture as we go into the new year, you did mention specifically to not count on some of these major pullbacks, and I was curious your thoughts on that because obviously today is a pretty substantial pullback, but you're saying perhaps maybe don't let one day of pressure dictate your decision making.
Yeah, I mean, we've had a significant down day today, which does not take back even what we gained last week. We're basically giving up Friday's gains. So that I mean, again, silver's up 140, 150% year to date, and gold remains, even with this correction, up close to 63%. So, in a normal bull market, you could expect to give up a third to half of your gains. What we've seen so far is a tremendous appetite step in on any major pullback and buy with both fists. This is an odd period here at the end of the year. Very low volumes. Notice that the momentum to the downside picked up at the market open in Europe, very thinly traded. And so, it's difficult to come to any conclusions in terms of sort of a reversal in the market or a significant or more significant trend in play to the downside here in what is basically holiday trading.
Okay, so as we do, of course, approach some of the Fed announcements, and I know we've been relatively economic data light in the back half of this year, but we could get a Fed decision in the coming month. Does that at all play into any of the moves we're seeing in metals? Because as you mentioned, gold heavily, of course, now tied to a lot of the Fed activity.
Yeah, I think it's both Fed and the current administration who's determined that we're going to run the economy hot. And they'd like to see rates lowered at the front end of the curve. We've got another round of QE in place. We have the existing rollover.
New York FANGs are mixed.
Proceeds into the short end of the curve.
Most are lower. Snowflake is trying to push back about 225, having difficulty for the last week or so getting there.
We see this really on a global basis, this yield curve rise, and I think that's something worth paying attention to as we come into 2026. The bond market is very near or perhaps past capacity, and I think the concerns in the financial markets, this is what you see priced in the gold market today. Why are we here? In past periods, as I mentioned earlier, in past periods of bull market activity, there was some sort of a crisis. The Carter inflation was very real. The Iran hostage crisis was very real. The U.S. invading Afghanistan was very real. The European implosion in 2011 was very real. What is very real today that's driving the price of gold? This, I think, is where central banks and some of the smartest people on the planet today are front-running what they consider to be a crisis dynamic that has yet to emerge. So it'll be the investors stepping in and backfilling what has been led by the central bank activity of 2024 and 2025.
Okay, and I do totally agree that the next couple of trading sessions are a bit weird, so sort of reassess and, refine your footing as we kick off 2026, but a lot to be enthusiastic about, especially as far as some of the trends we've seen in metals. So appreciate it, David, for CEO of McBain Financial Companies. Thanks so much. Now, coming up next, we'll discuss the disruptors. As we look at Amazon after it has been named now a top stock pick in 2026, George Tellis will bring us the news.
Hedge flows turning higher, markets at the lows. Tesla turning back up. Tesla looking a lot better off the 21-day.
Stay connected to the markets with Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
360. I'm Jenny Horn here in our Chicago headquarters, but let's now head out to the New York Stock Exchange for a check on the market and welcome in Nicole Petalides, of course, host of the Opening Bell and the watch list for the Schwab Network. Nicole, we're 2 hours into the trading day. What's caught your eye today so far is, of course, Santa Claus Rally. Seems like it's a little bit late to arrive here as we're seeing this pressure now for the second straight year.
Yeah, and look, I mean, we did straight day. Yeah, we sold off on Friday, as you noted. We did hit a record during the day on the S&P 500, only to see the down arrows at the end of the day. Of course, the Santa Claus Rally is the last 5 days of the trading day of trading year 2025, and the first 2 days of the new year. And 77% of the time since 1950, you'll see the stock market go up over 1%. People are still sort of counting on it, but you have seen the volatility here. And even though Santa was here recently with the Macy's group ringing the bell, we haven't seen the Santa Claus Rally just yet. But people are still believers that it very much could happen. There's a lot of volatility that goes on at the end of the year. You're definitely seeing some profit taking that's happening as well. I think the metals are a really big story, as you're seeing gold here down almost $200 today, as we saw gold, silver, platinum, palladium, copper, all hitting some sort of record recently, but metals are selling off. And now I will say that gold and silver are often the safe havens and really counter geopolitical concerns. We've had meetings in Florida with the president and Benjamin Netanyahu and Zelensky and things that should be moving along, and that brings at least a little bit of optimism on that. And as far as the 10-year bond yield, we're sitting at 4.12. We'll be getting the FOMC minutes. We'll be getting more on housing. We have movers that have been top picks. Amazon has been a top pick. Boeing got an upgrade. Take-Two was a top idea. We're going to be talking about NVIDIA in a moment, but it seems that anything can go here in the next couple of days, and I'm just sort of waiting with bated breath to see what happens. Jenny?
I do think that these last couple of days, while I know that volume lights, can be oftentimes very exciting. I know that doesn't always happen that way, but it does feel like right now there's a lot of them riding on some of the future performance of 26 and all of the Fed expectations. But to shift into one of our most important names in the market, which is NVIDIA, we are seeing some pressure today, which is, of course, attributing to some of the weakness in the S&Ps and NASDAQ here. But NVIDIA lower on news, of course, that it has made this deal for the licensing assets of Grok. So walk us through that story.
Yeah, and I just was curious now to see how it's been doing after the last couple of days. I mean, 1 month it's up 4%. It's not too far off the highs. It's at around 187. The high was 212. I mean, a few years ago, 3 years ago, it was a $14 stock, right? If you bought it 3 years ago at 14, it's at 212. You feel fantastic. But today's follow-up on the Grok story, which really Bernstein was talking about on the 24th of December, so it's sort of been out to a certain extent, is that this is a $20 billion deal, and it's a grab for technology. It's a grab for human talent. And so you have a $20 billion deal, and the question is whether or not NVIDIA is paying too much. Nobody seems to care because NVIDIA has lots of money. This will get them the assets of Grok, and which really is inference technology and high performance AI chips, these accelerator chips, and that's the best part of the Grok story. They do say that this is they still will be exclusive to other companies. They're licensing, they can do whatever they want, but this particular deal is very interesting because
Tesla coming off the low.
other companies, and they really only have the cloud assets, the cloud business.
Tesla moving off the lows, bouncing at the 21-day moving average. Tesla.
Human talent. They will have the founder, Jonathan Ross, the president, Sunny Madra, and others that will be joining NVIDIA. So it's a big, big move for NVIDIA here, and just continues to add with the big story. Also, it should be noted that we had Intel, $5 billion in stock sales to NVIDIA. That's another story that we continue to follow. But I think that as we look at what the companies are saying, Citi said it's a clear positive and put a buy rating and a 270 target, an outperform rating over at Bernstein, and they have a 275 target. And Truist says this really fortifies the competitive position for NVIDIA and put a 275 target as well. And I believe Morgan Stanley had NVIDIA on the top picks for 2020.
Tesla.
Go NVIDIA, at least for now.
I know, at least for now. I know we're seeing some pressure today. We're down 1.7%, so not a huge move for the Dow.
You could also trade some TSLL shares if we do manage a bounce and a follow through tomorrow.
It's a bit of a now delayed reaction, but so far, as you just pointed out, the analysts' reactions have been fairly strong. So great insight there.
All the New York bangs are down for the most part. Tesla is bouncing. So is Nvidia.
Senior markets correspondent here for the network. And so today we are looking at Amazon, George. Company was named a top pick at Evercore ISI.
Walmart at the high of the day. Walmart. Micron, high of the day.
Right now, as we assess the Max 7, Amazon is our worst performing of the year.
Yeah, I mean, there's something here, and I'll explain in a sec some of the valuation metrics. But Amazon, we know, is a traditional e-commerce company. I mean, they have basically the largest presence in North America. 40%.
Tesla looks good.
Their platform, but they're really just morphing into a technology company. There's a lot of positive catalysts, including everything from subscription services, AWS, cloud services have been growing, digital advertising, cloud computing, and these are all combined unique values alongside the e-commerce platform. But there are many catalysts also going forward that are new to Amazon. Everything from their LEO satellite, which is going to be competing directly with Starlink. If you consider Robotaxi as a catalyst for Amazon, that's another thing to consider. Online pharmacy, especially considering again advertising continues to scale. So this company is becoming a very large enterprise when it comes to being a conglomerate. And so with that said, if you look at some of the calls today, we're actually seeing Evercore quite bullish on Amazon, looking at it as a potential underappreciated name going into 2026. Considering over the last year, the stock really hasn't performed all that well. I mean, if you look at it year to date, it's up 6%. Last year, only up 2.5%, falling quite a bit since its October or late October earnings release because of capital expenditure concerns. But nonetheless, Evercore sees the CapEx really manifesting into growth of earnings and operating margins for Amazon going forward with a price target now at $335. And just based on earnings estimates, excluding, again, the most recent call from Evercore, right now they're expecting EBITDA growth in the 23% range. Next year's forward multiple of 29 times, so it's trading at slightly 1 times forward earnings growth. With sales, we're only around 11.5%. So again, some incremental increase in sales for Amazon can certainly gear or magnify the EPS returns, and I think this is why Evercore is quite bullish on the name.
Okay, so now when you think they're trading Amazon for example purposes, I mean, given this is a super optimistic note, I think great points about the way they highlighted business areas of their business that is not just AWS. It was, grocery, pharmacy, etc. Really optimistic note. So thinking this through now for example trade purposes, how do you think about Amazon?
Yeah, so looking at the chart, it's broken into a diagonal channel. That's something to be mindful of. The other thing is, if you look at the chart going back to, let's say, September and December, early September, there might be a pivot point where the stock, if it continues to move to the upside, stops. And that's right around the $239 level. Now, this week, alongside last week, we aren't seeing the mega caps perform like, the other areas of the stock market, the S&P hitting new highs. But nonetheless, low volumes, some choppy price action. I want to structure a bullish trade, but I'm going to take this week's choppiness into consideration. So what I'm going to do is I'm going to buy a long call diagonal spread. I'm going to sell the out of the money 240 call that expires this week, and I'm going to use the proceeds of that call to finance the January monthly 18-day expiration $230 call. Now altogether, this would cost you about $6 a share in debit or $600 a contract. So in essence, your max profit, if it hits 240 by the end of this week, is basically $4 a share. If it does not, the weekly call that expires this week will roll off, to which point your break even is 236 by the third week of January, with potentially unlimited profitability, again, assuming the stock does close below the 240 by the end of this week.
Yeah, and Amazon also seeing some pressure today alongside the overall market. So some weakness, as we've seen in a lot of these names for, now the month of December. But Amazon now looking at, as we did discuss, as the worst performing Mag 7 name, at least as it stands right now. But appreciate it, George Chillis, for that breakdown. And now coming up next, it's time for our 360 round as we take a look back at crypto in the year that was in 2025.
Okay, and Nike turning up. All right, a lot of stocks are starting to turn up now. A lot of stocks starting to turn up.
Hey, Dad, I have a question for you.
Sure.
When did Granddad?
Oh, shut up with your granddad. Nvidia turning up as well. A lot of stocks are turning right now.
The best performers of the market year to date. Forget Nvidia. Robinhood is up 215% year to date. One of the best performing stocks of the S&P. Why is that? Is that justified?
I think it has been. I mean, Robinhood has really excelled at becoming this super app. And you're now seeing all the other crypto platforms and exchanges more broadly trying to go after what Robinhood has done. And Robinhood did that not by betting on just one particular asset, but offering a ton of different products. They've done a phenomenal job of being first to market in areas and also offering a pretty in-depth product in those areas as well. They've done very well in prediction markets. Their core equities, commodities business has done well. And then also crypto has been decent. Even if you look at the crypto volumes, they've come down sector-wide, but Robinhood's acquisition of Bitstamp has actually kind of blunted some of the impact to their crypto volumes. And that's because Bitstamp is a little bit more institutional, and so that volume sticks around a little bit longer versus retail. So Robinhood's done a phenomenal job in a lot of different areas. And now you're seeing Gemini, Coinbase, the others, eToro, trying to kind of catch up and become this super app like Robinhood has done so well in this year.
Any thoughts for us on Bitcoin itself, which, you know, is down some 6%, but hasn't been a terrible year?
Hasn't done as well as gold.
No.
It certainly hasn't. It's underperformed the kind of hard money assets. We do think, you know, while I struggle to come up with a catalyst here, other than maybe a catch up to gold and silver, these sentiment indications, if you go back and back test them, they are highly correlated. And so when you do get this negative sentiment, I would expect Bitcoin to start to bottom. You know, for our models, we're assuming Q1, maybe Q2, Bitcoin bottoms, and you start going up from there. But like I mentioned, it still takes those retail volumes a little bit of time to catch up to the crypto price action as well.
Yeah. John, thank you.
Thanks for having me on.
Still ahead on the show, SoftBank buying data center firm Digital Bridge for $4 billion. We're going to break down that deal, whether it signals impatience around the AI build out. We're back in just a moment.
A lot of stocks are moving off the low. Looks like short covering for the most part.
Things like inflation, interest rates, central bank balance sheets, federal spending, valuation metrics for Bitcoin, market access with things like the ETFs, institutional promotion and institutional adoption. They're just all better now. They're just all objectively better now than they were in the past. So I think that supportive backdrop plus new announcements coming out will be what propels Bitcoin higher in 2026. It'll be announcements like we heard in the last few months. Just to name a few, Harvard, a $50 billion Ivy League endowment, their largest publicly reportable position is Bitcoin. Middle East sovereign wealth funds own a healthy chunk of Bitcoin. Vanguard finally capitulated, and their $10 trillion of client assets can now have access to the Bitcoin ETFs. And B of A Merrill Lynch recently put out a paper that was basically saying, hey, we're now supportive of, I think it was 1 to 4% of an allocation to Bitcoin and crypto in client portfolios. So those are just huge announcements, in my opinion. And I think they will continue going forward, and that's what will be supportive for Bitcoin.
Okay, and so Bill, now to turn back to you. I mean, why do we see these corrections, like 25, 35%, that are considered, I mean, relatively normal during these bull markets?
Yeah, look, I mean, there's been points this year where NVIDIA was more volatile or Tesla was more volatile than Bitcoin. Bitcoin historically has been a 50, 60, 70 vol asset. It's shrunk to probably a 30 vol asset this year, which is actually quite impressive. look, we had basically regulatory overhang, which I think was holding Bitcoin down significantly, probably to the tune of 50%, which is why we saw a big spike. We expected lower interest rates. We expected more money printing. We didn't get that. So when you actually factor all of that in, the fact that we're riding that kind of 90K range for Bitcoin really does make sense to me. And I think when you combine that with the fact that we're starting to see significant stimulus, we're going to see real quantitative easing. We're seeing quantitative easing light right now. The Fed is starting to buy its own bonds. And I think demand for government debt is going to fall significantly next year along with lower rates. So all of this bodes well for higher vol assets, including the likes of Bitcoin.
Okay, and I will say something you both have mentioned is this, global stimulus measures, but also these ETFs and treasury company adoption that we're seeing right now. And so John, to go back to you here, how does this then evolve and hopefully provide a cushion for some of the Bitcoin market dynamics we're expecting in the new year?
Yeah, so I think you highlighted, two big groups that are propelling Bitcoin adoption. They are undeniably very big buyers of Bitcoin, would be the ETFs and the treasury companies. I think they are quite different in the sense that the Bitcoin treasury companies, they're a little bit more sentiment driven. There are a bunch that popped up in this year, 2025, that may or may not be around going forward. It's a new segment of a new industry. So I think the market is going through the messy process of seeing how much demand is there for how many of these companies to exist. I think MicroStrategy has proven that they will exist, that they'll continue executing this strategy for a long time to come, but it remains to be seen how many more of those companies will exist. So that's a question mark. But there will at least be a handful of these companies that continue accumulating Bitcoin as their primary strategy. The ETFs, I think, are a more stable form of Bitcoin acquisition. As I mentioned, Harvard, one of the largest Ivy League endowments, they're getting their Bitcoin exposure through the ETFs. Same with Middle Eastern sovereign wealth funds. They're going through the ETFs. I think a lot of wealthy individuals will likely start with the ETFs because it's a ticker in their brokerage account and it's just easier. It's more familiar. It's easier for an advisor to recommend it. But then there will be a segment of those ETF buyers who then say, you know what, I'd like to own, quote unquote, the real thing. And then they'll get access to real spot Bitcoin in a variety of ways that they can. So that's how I see adoption playing out in the coming months and years.
Yeah, and I think it's an exciting space to continue to follow, of course, into this new year. So appreciate you both, John Parr, Managing Director at Swan Bitcoin, and Bill Barhydt, CEO and founder of Abra. Now, that'll also do it for us for 360, of course, to kick off this week. Just several sessions left of the year. Now, appreciate you for tuning in. I'm Jenny Horn. We have now Fast Market with Dan King Hall coming up next.
All right, some of these New York things continue to turn, like NVIDIA, Apple trying to do something, Broadcom coming off the low, Snowflake, Tesla, NVIDIA looks okay. Futures coming off the low as well.
Also, because your investor checking account is linked to stronger than steel, lighter than aluminum, trusted in aerospace, and now redefining the range of air food. Resists corrosion, never absorbs odors, and remains flawlessly food safe without ever breaking down into harmful microplastics. Titanium Edge, now available through this exclusive television offer.
Hey, do you dread scrubbing away stubborn dirt and stains? I used to, until I found the Spinny Scrub. Let me show you why this little powerhouse is a total game changer. You can also scan the code on the screen now and find out more. This is the Spinny Scrub, your new best friend when it comes to cleaning. It's got a powerful motor that rotates at high speed, so no more scrubbing by hand. It comes with 5 different brush heads, so no matter what you're cleaning, you've got the right tool for the job. From your bathroom tiles to kitchen countertops and more, the Spinny Scrub has you covered. So if you want to make cleaning faster, easier, and way more effective, the Spinny Scrub is your answer. And right now, if you order today, you'll get 20% off. Trust me, your cleaning routine will never be the same. Go ahead, scan the code on your screen right now and get yours today. You'll thank me later.
We all love recipes with garlic, but trying to use an awkward garlic press makes us a smelly mess. Introducing the Great Garlic, your ultimate kitchen companion for effortlessly crushing garlic to perfection. Just place a peeled clove of garlic under the grate, rock it back and forth, and say goodbye to tedious chopping and messy mincing. The Great Garlic ensures consistent results every time. Scan the code on your screen and order your Great Garlic today. This is a limited time offer, so scan now to find out for yourself just how great the Great Garlic is.
Cleaning is a stressful chore. You can scrub by hand all day. There has to be a better way. Now there is with the Spinny Scrub, the revolutionary handheld spinning scrub brush that makes cleaning a snap. Make pots and pans shine. Deep clean your grout and tile. Even filthy shoes look like new. The Spinny Scrub is easy to recharge and store away. And with detachable cleaning heads, you can relax and let the Spinny Scrub do all the work. Scan the code on your screen and order your Spinny Scrub today.
Welcome to Market Catalyst. I'm Jared Lickery. We are 30 minutes into the U.S. trading day, so let's get to the 3 market catalysts we are watching this hour. First up, we have full market coverage ahead of all stocks entering the final trading week of the year. Plus, we're going to hone in on the commodities rally as silver and copper touch fresh highs, and we're going to bring you a defense stock playbook and tell you how you should trade the sector in 2026. So let's take a look at the Wi-Fi Interactive here and check out what the major averages are doing. A little bit of downside to begin the week here. Let's take a look at the intraday chart. You can see a little bit of red there. I'm going to put this on a 3-day view because this is the 3rd trading day of the Santa Claus rally, which began December 24th. It is the last 5 days that are trading in 1 year, and that is 2025, and the first couple of the next year. So we're going to be tracking this throughout the week. And here we have the Dow up about 26 basis points. That's 1/4% over this time frame. NASDAQ composite is in the negative. We've seen tech a little bit of a sore spot lately. We'll see if we can overcome that. And the S&P 500 just about break even there. Well, let's take a look at the bond market as well. And I'm going to switch over to an intraday view where we see 10-year T-note yield. That has been going sideways for a long time. It's down about 3 basis points today to 4.11%. And the 30-year, that is down 2 basis points to 4.8%. We'll also check on the U.S. dollar index. That is just slightly negative today, but nothing too big in the bond or currency markets that I'm seeing right now. And if we take a look at the large cap sectors, energy is leading the pack. It's up 2/3 of 1%, followed by utilities, real estate staples, and healthcare. So that is a very defensive playbook, and we're going to be checking that out as the day progresses here. To the downside, we have materials, consumer discretionary, and tech. Those are the 3 laggards here, and a lot of that has to do with some of the mega caps that we're seeing in the NASDAQ 100. You're going to see a lot of red on this side of the board, except for Apple. Amazon's just barely breaking even. Look at that. NVIDIA down 2%, the largest stock there, over $4 trillion worth. Meta down slightly. Tesla down 2.5%. Broadcom down just over 1%. And digging into the semiconductor industry, we do see a few bright spots here. Micron up 1/3%, so is Intel. But software looking a little bit better, not too bad, not too much better. Looks like Salesforce up about 0.5%. And I got to check in on the futures because we have seen metals soaring recently, but not today. Because look at that, palladium down 15%, platinum down 13%. I'm going to show you a year-to-date chart so you can see how these markets have just gone absolutely parabolic recently. That means the large gains that you see to the upside one day, sometimes you're going to see those down the next day. The markets become very unpredictable, but a lot of these markets at record highs. Also silver, mentioned that in the open, Got to check that. That is down 6.5%. But look at that, year to date, still holding on to gains of about 143%. One final thing, I do want to check in on crypto. Seeing a red board here. We're going to be taking a deep dive into crypto in a few minutes, so stay tuned to that. Tech is capping off a blockbuster 2025 driven by AI infrastructure spending that fuels much of the sector's gains. As we head into 2026, the story is shifting from pure growth to execution, competition, and also risk. So for more on this, we're going to bring in Bob O'Donnell. He's the president of Technalysis Research. Bob, it is great to see you here. And we talked about this earlier in the year on Stocks in Translation. So give us an update. What do you see the AI? What has been the dominant theme of AI? Excuse me, I was leading you there, of the AI trade this year and, kind of heading into next year. What are you keeping your eye on?
No, fair enough, Jared. Thanks for having me, of course. Yeah, I mean, look, one of the things we talked about back on that program was this notion of hybrid AI. And by hybrid AI, what I was referring to and continue to talk about is this idea that we're seeing AI being deployed, of course, in the big clouds, and we're seeing a lot of benefit from Google and Amazon, Microsoft, and those kinds of companies, Meta as well. But we're also starting to see businesses themselves start to deploy AI. And so this hybrid AI idea is that the fact that you can do some of this AI computing in the cloud with the big LLMs, but you can also do it on your own premises or within data centers and things like that. So that's where a lot of the excitement is, because that's where there's a huge long ramp of growth and opportunity. And so that's from companies like Dell and HPE, Cisco, some of these other companies who sell some of the servers that the companies are buying. Of course, they include NVIDIA chips or AMD chips, and I think we'll see a lot more competition in AI accelerators in 2026 as well. But the point is, a lot of those companies, and then the software that they're building and creating with that, is driving a whole new wave of opportunity. And that's, like I said, that's sort of that hybrid AI story. We saw the beginnings of it in 2025. I think we'll see a lot more of that in 2026.
And let's shift the discussion right now to a little bit more forward-looking. I know one of the things you have your eye on for next year is also cybersecurity. Tell us about the importance of that and any plays you might have in that regard.
Well, I mean, look, what happens with cybersecurity is that both the attackers and the defenders have gotten much smarter and much more capable because of AI. And so there's a fast race to see who can outpace each other. I mean, that's always going on, but the speed at which that is changing is just incredible. So you've got all your traditional players. We've seen obviously a lot happen with Palantir. You've got companies like Palo Alto Networks. You've had CrowdStrike. You've got a bunch of the sort of traditional security names that are all diving in. There are a whole bunch of little startups that may make some kind of a play or be acquired sometime in 2026. But there's no question that every single organization who's doing this is going to have to be doing AI. That is going to have to think about it, and especially because, of course, the theme of 2026 when it comes to AI is agentic AI.
Yes.
The idea that we will have agents that are actually acting on our behalf using AI. And that notion of all this agentic AI has been a huge theme over the last couple of months. I expect it to continue in 2026. But security around agents is huge.
Let me ask you about that, Bob, because I know one of your talking points here is that we might have some of these agentic AIs or these AI agents go rogue. What this reminds me of is way back in the late teens when we were talking about autonomous vehicles. And it seemed like every time there was an accident with one of these vehicles, it just got national headlines and it spooked people. And I can't help but think the same thing is going to happen here. But what are the market implications? How do you think this affects the industry and some of the trading around it?
It's a great question, Jared. And yeah, I mean, one of my concerns is if we indeed get these billions of agents starting to run simultaneously, inevitably there's going to be huge questions around that, hence that point about cybersecurity. So look, I think we will see a lot of progress in agentic AI in 2026. And all of the major cloud players, all of the major LLM providers are all working on developing agentic capabilities. But I am very concerned that we're going to see a few stories where things go awry, and that's going to put a pause on some of that agentic work. And so I think there's going to be a lot of trust issues, and all of that could eventually, of course, have blowback on some of these big tech companies. And, again, even though I think that AI is going to do just fine in 2026. It's these little signs. If we see little signs like, oh, agentic starts to become an issue, then that becomes an incentive for people to say, oh, see, it's going to blow up. So that's part of the reason I'm concerned about it is not just when it's going to happen, but the fact that it's going to present a concern that people who are sitting on the sidelines just waiting to pounce on a problem to go, oh, see, there it is. And sometimes those things, snowball. Hopefully not, but that's something you got to be aware of and sensitive to.
Well, and another thing people have been, some of the critics have been pouncing on is all the spending, the capital expenditures, so-called CapEx. We saw that it's been exploding over the last few years. It's set to continue next year. But we've seen in the Mag 5, for instance, we used to kind of talk about them, or the Mag 7 as a whole. It's really only Alphabet and NVIDIA, maybe Tesla as a come behind story, that have really surged this year. So is it a game of have and have nots, or how do you see this play out?
No, it's a great question. I mean, look, I think NVIDIA obviously continues to do well, but I also am certain that NVIDIA's get a heck of a lot more competition in 2026. AMD is an obvious one, but there's a lot of other little players. I mean, NVIDIA's deal with Grok recently to bring more of their technology in is a reflection of the fact that we're seeing more specialized types of models being developed. We're going from the days of big general purpose LLMs that you can use for everything to much more specialized areas. And each of those are going to require different types of hardware. And I think in turn, that's going to create additional opportunities, but it's going to create more diversity, which is going to be a little harder to figure out. But obviously, I think, you're going to continue to see folks like NVIDIA, AMD do well. I do, as I said, I think you're going to start to see some of the smaller the cloud guys who are doing custom chips, often through Broadcom, will also start to benefit. We've seen already, Google's been doing more with TPUs. Amazon has their Graviton chips. We've got a bunch of other companies. Microsoft is doing custom chips. A lot of these are ARM-based. So ARM is another company, we haven't been talking about them a lot lately, but ARM's helping drive some of this innovation. Intel, as you talked about, is doing well. They continue to plug away. Obviously, they had their challenges last year, but things are looking better in 2026. So I think we're going to see a lot of different players from different areas all start to come together. And we'll see some smaller companies. There's a little company called SideTime that does timing chips. And all these networks have to be completely aligned from a timing perspective. They're doing some interesting stuff. So I think there's a lot of different opportunities in different areas. But we're going to have a lot of the bears on the side, just again, waiting to pounce on these concerns that get raised, I think, around agentic AI.
And we'll have to see if those are dips worth buying or not. And Bob, what I'm realizing is we got to do another podcast real soon. So thank you for showing up.
Yeah, man, I'd love to.
It was great seeing you here.
Thanks, Jerry.
All of your markets action is ahead. Stay tuned. You're watching Market Catalyst.
When was the last time student loans actually improved? Some of the paperwork looks exactly like what students filled out decades ago. Earnest believes you deserve better. Modern solutions for today's education costs. Quick application, approvals in seconds, flexible terms, no fees. We're providing private student loans that can actually work for today's students. Apply now at earnest.com.
Every day in your community, there are children and teens who need a beacon of hope. They ride bikes through your streets, attend school with your kids, and sit in the pews of your church. Right now, over 3,000 children in South Carolina are in foster care, longing for the warmth of a family and hoping to stay together with their siblings. Thornwell is dedicated to keeping these siblings together and ensuring every child has a family, but we need your help. Join us in our mission. Become a Thornwell foster parent. Visit thornwell.org today to find out how you can make a difference.
Still waiting for the ads to finish? Why not dive into Candy Crush Saga and challenge yourself to over 16,000 levels? Whether you're waiting for your stop, your turn, or your chance to savor the wait. Candy Crush Saga. Download now and make your wait a sweet escape.
At Bar Physical Therapy, our goal is to get you back into activity faster. Whether you're recovering from surgery,
These stocks are done, and also
All right.
asking for 50 years protection too. So nice that they have a road or a path, but Kevin, your thoughts? It doesn't seem
Micron hanging out at the highs. Micron looking really good. Micron.
I think that this is, crude oil. Remember, the 50-day moving average on crude oil is about 58.90. So if it stops up there, that could be another bearish leg down in crude oil. But remember, the Venezuela story, future commodities rally in uncertainty. Stocks sell off, commodities rally. And there's uncertainty right now in Venezuela, right? With American ships and what they're doing, and the fact that we're stacking planes in Puerto Rico. Now, that means uncertainty. That could mean the price going up. The long term for Venezuela and the United States, remember, they currently produce about 590,000 barrels a day. They used to produce 3 million barrels a day, and they had a goal of 6 million at one time. So if they get regime change in Venezuela, the price could come significantly lower than it is right now. In Saudi Arabia, they're in the market share business, which means they're pumping more and more than they were before. And I saw about a month ago, I saw an interview with the CEO of ExxonMobil, and he said they are set for double-digit returns at $35 a barrel. So if you think crude oil can't go lower, it can, Nicole.
Oh, for sure. And the path of least resistance at this point still seems to be more to the down.
By the way, something we're going to probably talk about not only today, but tomorrow and Wednesday as well. Possibly, today we're not talking about as much because the market's down, but we could possibly see 3 straight years of 20% gains in the market, something that obviously very rarely happens. But then next year, we do have a seasonal factor. I just want to bounce off you guys. We're going to talk some more about tech. In the second year of a president's term, the average gain since Reagan's about 3.3%. Is that something that you're worried about, just that seasonality that we've seen during previous administrations? And I know this one's a bit different because the terms are separated by another president in between. But is that something you're thinking about going into next year?
Well, in 2022, one of the things that worked to our advantage was you had a market that was was the consistency of the midterm election statistics. Let me share those with you. If you go back to the start of World War II in 1939, for the midterm election years, there has never been a year in which if you bought the market on the November date of the midterm election and held on to June 30th of the following year, you did not see a profit. So if in fact in front of the midterm election, you get that elevated volatility, you kind of can rely on those statistics that you have going back to 1939, set an expectation for yourself. So we're coming off 3 really strong years. We're coming off 3 strong years because we've seen a pivot in terms of global monetary policy, not just Federal Reserve policy. We've seen, to Jimmy's point, significant earnings growth. We've had most recently 4 consecutive quarters of double-digit earnings growth. And then you have the advancement of taking the technology related to artificial intelligence and advantaging it, moving it forward rather to generative AI, agentic AI, general intelligence itself, and all the places that we believe this is ultimately going to go. And that's been the tailwind really behind, I think, 3 consecutive really strong years.
All right, Jimmy?
Yeah, Joe, thanks for bringing up the earnings again, because I think it's important for everybody to recognize what's the signal and what's the noise. The signal is earnings growth. The noise is all the political vitriol that always comes out during the midterm election years, first in the primaries, then in the general election. Now, historically, that has focused on healthcare, right? Healthcare has been a terrible sector into which to invest during a midterm election year. I will tell you this coming year, I don't think that's the case, because we've already got the camel's nose under the tent, so to speak, in terms of IRA bill and the pricing from Medicaid and Medicare on prescription drugs, as well as President Trump's whatever his drug pricing exchange is. So I think healthcare will do fine. But ultimately, I'm going to go back, Frank, to what you opened the show with. Earnings growth in the second half of 2026 is supposed to be better for the 493 stocks than for the Mag 7. That's the projection. And that's the reason why I think probably the equal weight is worth having a tactical trade.
Micron trying to break out here. Micron.
Side note, or rather a disclaimer, that projection has failed to come true, even having been projected in the past year. But it does make sense to me that the benefits of AI should be flowing to other industries now.
You know, speaking of benefits of AI, when I talk about AI infrastructure, that race is set to kick off a wave of tech price increases starting in 2026. I want to bring in Christina Partsinevelos now with more details on that. Christina.
Well, Frank, let's start with TSMC because they're reportedly raising prices on their most advanced chips for actually 4 straight years starting this January 1st. This according to Economic Daily. And the reason comes down to AI. AI data centers are locking up leading edge capacity years in advance and paying premium pricing. That gives TSMC
Micron pushing higher.
pricing power, and those costs will move downstream. At the same time, AI servers are absorbing huge amounts of memory, pushing advanced memory prices even higher. More expensive chips plus more expensive memory means PC and device makers actually have to raise their prices as well. Dell has reportedly raised commercial PC prices this month. Acer and Asus are expected to follow in January. AMD and NVIDIA are reportedly planning monthly GPU price increases starting next month, while Analog Devices is considering hikes of up to 30% more. IDC shows that the PC market could shrink roughly 9% in 2026, even as device prices rise between 6 and 8%. And this isn't necessarily about weak demand. A lot of people have to refresh their PCs because of Windows 10. It's AI permanently reallocating capacity away from consumer products towards AI products. The winners could be TSMC, memory makers like Micron, and AMD gaining share. But the potential losers could be those volume-dependent names like Qualcomm, budget PC makers like HPQ, and essentially gamers being priced out. These pressures, though, are expected to last through 2029, Frank.
All right, Christina Partsinevelos live from the NASDAQ. Christina, thank you very much. I want to jump off of what Christina had to say. As promised, we're going to talk more about tech. I'm going to start with you, Bryn. You own Dell. Fewer PC sales, chips more expensive. It does not sound like a great setup.
Yeah, but we're all of Dell's growth, and the only reason you own Dell is because of their infrastructure services group, which is doing really a key component of all the data center build out, and they're growing. It's growing about 25% a year, and so the Dell PC business has been anemic at best the past few years. So I feel like that's already priced into the stock. So if you think that you want to own a company that's doing share buybacks, great CEO founder, is at the core of the AI build out, kind of like a growth at a reasonable price, I think Dell can be a good, mid-teens to 20% type return winner if the AI narrative is positive. By the way, the AI narrative goes negative, Dell is going to go down with the rest of them.
All right, I want to go to another name she mentioned, Qualcomm. Joe, you own it, and Joe T. Jim, you own it as well. Your thoughts on what Christina had to say just about you guys' scarcity when it comes to chips and also their ability to raise prices?
Yeah, I think there's a lot of things fundamentally that we already know about the semiconductor industry, and they're mostly favorable. I think if you are turning the calendar to 26 and saying to yourself, okay, what am I looking for as an opportunity? I think the thing that's important is that you continue to observe the relationship between semiconductors and software. 2025 was a year where we saw significant outperformance for semiconductors. The SMH, I believe, year to date is up about 49%. I think we're showing the chart there. And the IG
Micron looking for the breakout.
ETF, that's up only about 7%.
Will they buy the evening session? It's hard to say. It's 12:23 on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. A rather boring, not eventful Monday start. We did gap down and presently trading at the lows, down over 30 plus handles. Daily doesn't look so hot.
Trade, and there's an opportunity embedded in that if in fact we see that.
On Monday, Qualcomm, but I think the software comment is right on target. I mean, there's a couple of things going on here. One, you wouldn't expect Salesforce and Adobe to be absolutely mauled and DocuSign in the month of December. You would have expected tax loss harvesting to absolutely clean these things clocked. Didn't happen. And I think what's happening is after 3 years of AI entering the the atmosphere for these stocks and saying that AI is going to kill their business, that the world is
BNAI starting to move higher. Cheap stock, just watching this one out of the corner of my eye. BNAI. Bravo, November, Alpha, India, BNAI. Just watching that one out of the corner of my eye. Okay, let's see. Up, down volume. Mostly down volume today. 2-1 for the NASDAQ Composite. SPY, the Qs are nearly 5-1 down volume. So end of the year tax loss harvesting, most likely having a big effect. I mean, we made new all-time highs last week. So this little pullback, while not completely unexpected, I was looking for a higher Santa Claus rally. If we don't get the Santa Claus rally, it's telling you there's a little bit more to the underlying financial environment than what we're currently pricing in. So there's always that. It could just be tax loss selling this last week of the year from all-time highs. Futures continue to drop off here. We're below 6,900, so S&P continues lower. We're below the vol trigger, and we're in a downtrend. So puts are working. Calls only briefly earlier. Calls working. Got supply over here. Got VWAP. VWAP supply. Let's look at hedge flows. Turning back down, hedge flows. All right, we got this very large 68.85, 98 percentile level, 32 million in 0-day right there. If we get down there, could possibly get a bounce. Got six points to go, 6 handles to go, 68.85. Microsoft, Micron.
Are you prepared? Scan the code on your screen now and never be in the dark again with the Rescue Volt 7-in-1 power station.
It can charge my phone, right?
The Rescue Volt is a USB power bank, plus a flashlight, AM, FM, and weather-band emergency radio.
Just wanted to make sure it will charge my phone.
It powers up 3 ways with built-in USB, solar panel, even a hand crank.
Hey, welcome back to the halftime report. Let's get to some committee moves, Joe. You sold the GLD. A lot of talk about metals and gold in particular. Recently, you sold the GLD.
I did. So in the middle of November, I entered a position in the GLD as a trade. This was not on an expectation that this was going to be a long-term investment. When I think about how I view 2026 for the precious metals, I want to be long the precious metals. So for those of you that are sitting in investments in precious metals and have had them over the last several years, I think you maintain those positioning. I think you'll be fine. I will make a return at some point once again, and I'll probably make a return in silver because that is where the trading opportunity is. But overnight, when you see the type of parabolic move that you witnessed in the precious metals, you see the dramatic reversal, you see the spike in volume, you have to pay attention to that message. If you are looking at something from the optics of it being a trade, you cannot ignore the type of price reversal that we saw last night and sit there and do nothing. So you have to, at that moment, reduce your risk. That's in fact what I did with the GLD. I rang the register on what is a small winning trade, but I understand that an elevated volatility environment, a parabolic move, a big move higher and then a reversal lower, there's a message in that. And the message in that is to reduce positioning if, in fact, you're looking at something from just a purely trading opportunity. And then as you move forward, you look for an opportunity to reestablish a position. I'll do that from the long side, most likely in silver.
Brent, when I come over to you, we're talking. I'm going to use Joe's word, parabolic moves. We're looking at gold. We're looking at silver. Copper's making some moves. Platinum and palladium as well. How are you viewing the metals complex and some of the stocks in that trade?
Well, I've been a long-term buyer of real gold and silver, not the ETFs, but gold and silver. And so I mark where I buy gold and silver. I have a bunch of silver that I bought in 2011, around $40 to $44.
Wow.
2011. So guess what? It got back to $44 in September of this year. So for those of you that are following this speculative move higher, just know that narrative will always follow price. And you read all the reason why about silver being in a structural deficit. Well, it's been in a deficit for 5 years. All of these different things, just be very careful, because I think people can say this time is different. But once again, I bought it at 40, 44. It took me 14 years to get right back here. So I get that these can be a great asset class, but just understand your sizing and positioning. And so I think kudos for Joe to taking profits on a really good trade.
The one other thing I just want to add quickly, when you think about parabolic moves, in particular in commodities, understand that the exchanges have the ability to adjust margin levels. And that is, in fact, what's occurred over the last several days. And when those margin levels are increased, as we witnessed in the last several days, that only exacerbates the volatility that you're going to see, because it works on both ways. Yes, there's people that have good positions.
Yeah, markets are really tired.
Unfortunately, on the other side,
Tax loss selling aside, there's not really a reason to do a whole lot at the moment, considering how most stocks are trading, except for, say, utilities and energy. Only a couple of pharmaceutical stocks like Lilly, J&J, and AbbVie are higher. Real estate, a little bit of green there, but mostly utilities and energy. Even consumer staples, Walmart's off the best levels. That was up 0.75% at one point. Let's see what this looks like. So it's a non-event kind of day. We made a new all-time high in the S&P last week. Okay, we're fading today. Big deal. We don't see a reason to just sell everything and go home. Anything like that. New York Stock Exchange, the Qs, just been moving sideways in the upper half of the Bollinger Bands, in the upper half of a sideways range, basically. Qs, IWM. Looks like it could come back to the 50-day. It's losing the 21-day. Micron trying to go here. Micron.
they might move towards a lot of the large E&Ps. We're seeing that right now with ExxonMobil at a 52-week high. Other names like Diamondback that could work well. So I think there's going to be other opportunities in energy. I just kind of wanted to slowly wind down what's been a pretty good refiner trade.
Jim, your take? Are you also looking at some other opportunities in energy?
Well, I've got a good energy exposure. Joe mentioned ExxonMobil, which I think is going to hit not just a new 52-week high, but an all-time high here. It's about 3% off. I've got, within energy, there's so many different ways to diversify. I've got the pipeline with Cheniere exporting liquefied, which is the highest beta play you can possibly have in oil. This is an offshore driller. But the point being is that you're starting to get news of China stimulating its economy. Our economy seems to be doing fine. The shale patch, there's little rumors here and there that maybe there's some productivity losses there. Oil prices are low. I think they're asymmetrically priced to go higher from here.
All right, I want to go to one of your other moves, Joe. You sold some Spotify. Give us the trade here and what you're getting out right here.
Don't take offense to this, Jimmy. I know this is not the way you approach markets. I know Bryn does look at it this way. When you are putting on a position, there are several things that you have to say to yourself if it goes wrong. Price is a reason to get out if the fundamentals change. But I think what people don't look at often enough is time. They don't say to themselves, okay, I'm going to give myself a period of time for this trade to work. And over the last month, Spotify has not worked. And Spotify is in a downtrend since the end of June, just like Netflix is. I am still sitting with a personal position in Netflix. I have to figure out what to do with that in the coming weeks. But as it relates to Spotify, I just timed myself out. I entered the position 1 month ago. It didn't go anywhere, and you moved to the sidelines.
Yeah, also, Netflix and iHeart doing a deal together seems to also be putting some pressure on Spotify. The idea of those radio shows and podcasts going on Netflix, I'm sure could be a threat to the business.
Look, 3 months ago, the podcasts were an obvious tailwind to Spotify. Now it seems as though everything that we're hearing is, in fact, a headwind to Spotify. So it's difficult to identify exactly which is best benefiting.
And now you're out of it, so it's not your problem anymore. All right, time now for the headlines with Christina Partsinevelos once again. Christina.
Hi, Frank. Well, President Trump and Israeli Prime Minister Benjamin Netanyahu set to meet in the next hour in Florida to discuss the Israel-Hamas peace process and security situation in the Middle East. Trump and Netanyahu's last face-to-face meeting was in October at the start of the ceasefire between Israel and Hamas. That has largely held, but progress has slowed with both sides accusing each other of violations. Threats from Iran are also expected to be on the agenda. China launched massive military drills today designed to showcase its ability to encircle Taiwan. According to Beijing, the military is conducting live fire simulations or simulated strikes along the drills to blockade Taiwan's main ports. Taiwan put its forces on alert and called the Chinese government, quote, the biggest destroyer of peace. And OpenAI is looking to hire a new, quote, head of preparedness, who will be responsible for studying risks ranging from computer security to mental health. In a post on X over the weekend, CEO Sam Altman announced the posting and acknowledged that AI models are starting to present some real challenges, including the impact of the models on mental health. If you're wondering, Frank, about the salary, it's just a little bit over $500,000.
With these AI models. Christina Partsinevelos, thank you very much. All right, coming up next, get your private equity playbook. Our Leslie Picker is following the money and the setup for 2026. Halftime's back in just 2 minutes.
All right. It's very easy to get sidetracked and think, oh man, we're down so much today, without looking at where we've come from this year since the April 7th low. If you're only happy when the markets are up and you can't rationalize a move lower on occasion, the only way you can get past that is to not trade in large positions, because most of the emotions comes from taking 1,000 shares of Tesla, for example, when you should only be trading maybe 100 shares, anticipating that we might get a bounce. We got a bounce, but it didn't follow through, so it looks like we're going to roll over. We're still above the 20-day with a potential for a move back down to the 50-day. So Tesla, you have to keep everything in mind. Right now, we're due for a couple of days downside. We could still bounce into the year end if we manage to stay somewhere up here. Okay, since the low when we got into TRBCX in late 2022, when this cyclical bull market started, okay, we've made a gain to date was 155%. So we give back a little bit. It's not really even that noticeable on the weekly chart rather. TRBCX. So try to keep it in perspective. I know there's some of us that don't like down days. I don't like down days either, but we're coming back to the 9 EMA, 21 days right there. Whoops. 21-day, 9 EMA. They're all stacked, so we could bounce. RSI is still above 50. To date, we've gained over 44% from the April 7th low, 44%. So we get back. Today, we're off 0.5%. We've gained 44%. Last week, we were talking about maybe reducing your risk into the end of the year. We had some call butterflies. Speaking of call butterflies, what would one of those cost for the first 2 weeks of January. I think I looked at this on Friday, right? Didn't we look at this? Save positions. Called it January rally, right? I called it a January rally. Okay, so with a butterfly, you have the wings, the center point, you have 2 short. The wings, you have 1 long each. Okay, you can see the S&P, what that prices out to. The 2 short are $42 per contract, $8,000. Each long is about, 53, 33. Okay. Butterfly. Call fly. Sorry about that. What the hell? Oh, there we go. Okay. 67.50, 69.10. Well, that's 12.28.
Leslie Pickard. Leslie, thank you very much. Brent, I'm going to come over to you. You got a lot of exposure in the space, Apollo, KKR, Blue Owl Tech Finance. Your take on what Leslie had to say and just also the landscape and the setup going into 2026.
Yeah, I mean,
60.
of course, spot on. I think
Let's go 69.50. What we had before, 69.50, 69.75. This one, 69. Why does it keep doing that? Because I'm zoomed in. 69.75 and 7,000. Let's see what these are going for now. 7,000. All right, so pricing the same trade out.
I want to come over to you guys. Joe, you have some exposure as well. When you're looking at these names, do you think that maybe the landscape's just changed? I mean, due to deregulation, is the playing field more level when it comes to banks and some of their ability to do some of the lending that before these other alternative asset managers were able to do? And has that gap just kind of narrowed between the two?
To a certain extent, I still think there's opportunity.
7,000. That's $130 per contract for the end of January. So if you think we're going to get a bounce, not a bad price actually. $132 for 69.50, 69.75, 7,000 butterfly. Okay. For the end of January.
Jim, you often talk about the banks. You just mentioned Citigroup earlier. Do you think that gap is narrowed between the two, and deregulation will give some of these banks some of the ability to make some of these similar plays, maybe that were too risky under a higher regulation environment and under certainly a Biden administration, but with this administration, they have more latitude?
I absolutely do. I recently started Apollo. I know Brent's been in it for a little while, but I, about a few months ago, got it around 126, and I think that is going to be a direct beneficiary of deal making. By the way, going back to where we started the show, I do think it will probably be a little tricky market for these stocks in the first quarter, particularly as that IEPA decision comes out. We get all that trade policy uncertainty again. That will be an opportunity likely to add to these stocks. So my Apollo position isn't all that big right now. I'm looking for an opportunity to add to it. I think that's when it will happen.
All right, Apollo shares pulling back about 1% right now. Year to date, down about 11. You're seeing a lot of red on that board. Equity news. Coming up next here on Halftime, Mike Santoli joins us with his midday word. We're back right after this break.
All right.
RPG Health.
All right, so okay, there we go. Looks good. I'm going to post something here shortly.
CCHH.
All right, thinking about these call flies. They are 132. Let's see. Let me just take a look at these. I might buy some of these. Do 5 for now, maybe. Be a nice payout. Be a nice payout. If we get some strength in here, that would be nice. S&P. Let's see. January 28th. January.
And we were back on halftime. Senior markets commentator Mike Santoli joining us with his midday word. Mike, we talk about a lot of stuff just going into the new year, the moves on metals. Joe's calling it parabolic. What are you watching today?
Okay, let me buy. Let's see. Buy. A call fly. 69.50. 69.75. 7,000. 7,000. I'm thinking we're going to head towards 7,000 unless something breaks. $135. All right, so I'm going to do a couple of these. I'll do like 3 or 4 of these for now. All right, I'm trying to get in for a 135 bid. All right.
But it also tells you it's going to be hard. I keep saying to meet the consensus projection for next year if Mag 7, Mega Cap Tech just kind of sits there. A lot to think about there. Mike Santoli with your midday word. Good to see you, Mike. Coming up, we got the trend on retail as Bryn leans into the space. We're going to talk about the big battle that's brewing over at Lululemon. That comes back right after this break.
All right, so I'm bidding $135. I don't know if I'll get filled or not. We're starting to bounce right now, so they're probably going to want more, as usual. Greedy bastards. Excuse me. Instead of talking about it, I should have just taken it and then posted what I was going to do, because I could have got in $132. Now we're up to 155 bid. Okay. So I'm not doing a whole lot. Looking for these big swings to continue. There goes Micron. Micron continues. We don't need to do a whole lot on holiday weeks like this. A lot of people are out of town on holiday. Okay, here's Micron. Okay, almost a bullish engulfing candle right now. Provided we get above 291, we'd have a bullish engulfing. For Micron, Tesla looking for the bounce at, hey, sweetie, how you doing? Came to visit? Yeah, you want some treats here? Here you go. My other lady came over. There you go. There you go. She's going to eat all of them. There you go. All right, so Micron, Tesla bounce at the 21-day. Let's see if the institutions come in end of day. S&P is starting to come up off the low. I'm thinking that this is just short covering. Okay, we got major support. Relatively speaking, we got major support 0-day at 68.85. They're short there. The purple denotes that the dealer is long, positive gamma, positive gamma. Positive gamma can be call buying at this level and put selling at that level. All right, so that's both of those are positive gamma. Call buying will produce a positive gamma effect, and put selling will have the same positive gamma effect. A little different, but still the same. We can see that on Hero. If we look at the S&P 500, when both of these are rising, the blue line are puts, the orange are calls. When both of these are rising, you know that they're selling puts, the blue, buying calls, the orange. Together, it gives you a rising Hero hedging impact. Hedging impact is calls are being bought, puts are being sold, so the dealer has to hedge that, and that's a bullish reaction. Okay, so here's S&P turning back up. I hope you understand that, because once you understand it, you'll do a lot better with trading in general, especially if you're trading the indices. Okay, buying calls produces positive gamma. That makes sense. Selling puts, also positive gamma. The net effect, markets will rise. There goes the S&P futures are rising up. For those of you who like to trade S&P or want to understand the gamma, delta, vega effect of options and the volatility in options, etc., I would check out Brent's YouTube channel. Okay, no need for me to reinvent what he's already recorded. Spot Gamma on YouTube. Tons of good information. If you really want to understand what you're doing with the S&P, and not just taking what we're seeing real time and hoping for the best. If you don't understand why things are doing what they're doing, you really need to, in my humble opinion. Do a little bit of homework. It's going to make your trading a lot better, a lot less frustrating. Okay, why in the evening session do institutions come in and start picking up shares? Because in the morning session, amateur traders, traders with less experience come in and they freak out. The markets are dropping. Let me sell everything. They come in, they scoop up shares, and they push things higher. Okay, there was a couple of stocks this morning that we were talking about that looked good coming off the load. I think Verisk was one, BRSK. Let's see what it looks like now. Okay, Verisk, we talked about in the morning. Okay, so let's see what in the morning, we talked VRSK. Okay, so that run up. Okay, so you should be looking for this automatically. If you've been with us for any period of time, you should be looking for that ABCD pattern. Okay, not only do we have a daily that's looking a little better, but you got an ABCD pattern. Here's A up here. So you don't want to chase. You want to wait for B and C in the evening session. And you also want to check out your 60-minute. Where is price on the 60-minute? It's above the 20 EMA. So I only want to be thinking bullish trades when we're above the 20 EMA on the 60-minute time frame. Just bullish trades. Now, you could do a fade, right? But I don't want to complicate things. If it's above the 20 EMA on the 60-minute, I want to think long trades. Daily looks good. Turning the corner. Weekly is trying to get back above the 10 EMA with lots of prospects for upside. 200 points upside potential. I'm sorry, 100 points upside potential. I'm Sorry about that. 321. We're at 220, 221.80, 223.80. Sorry, on the weekly. The only thing is that earnings don't look that great. They'll look better. That's probably why it's down here, is because earnings were sucking over the last year. All of 25. We keep pulling back. All right, additional stocks that look good. Diamondback Energy. Diamondback Energy, we looked at that this morning. Where is it on the weekly? Trying to sustain a trend. Not really that interested at the moment. Doesn't look that great to me. We're above the 20 EMA. Could just be the start of a new trend. Past few weeks, we've been moving lower. Maybe Diamondback moves a bit higher. I tend to like cleaner charts. Like Apple. Even Apple's a clean chart. Nice trend. What does a 60-minute look like? Price is trying to regain the 20 EMA. So once it regains the 20 EMA on the daily and the 60-minute, this should look a little better. RSI will start turning up. So will MACD and Stochastic. Right now, not that interested. Micron, different story. Micron is trending. What did it do this morning? It moved higher. Friday, we tested the low, came right back up. Actually, that's today, right? That dip was this morning's dip. That was the morning dip. We dipped all the way down there. Okay? Dipped all the way down to the 20 EMA. Very bullish setup. Micron, you should be thinking Micron bull. Let me go bullish. I have Micron. Didn't I add to this morning? I think I did, right? Let me see. Monitor, filled orders. No, I just took some S&P, 6920s, got out of that pretty quick. Lockheed Martin, took some profits in Lockheed Martin. No Micron? Huh, I thought I did. Okay, so Micron, I'm looking to add to Micron. I currently have January 16th, 290 calls, so I'm at the money right now. I would like to roll this out. All right, Micron. So, one more time. You're a new trader. Okay, listen up. If you're a new trader, if you've only been doing this for maybe a few years, maybe just a few months, one of the easiest things to do, in my opinion, is to pay attention to the daily, the 60-minute, and the weekly. Okay? Look at the weekly first. It looks a little extended. Should be extended. Did you see the earnings? 270% increase in earnings for 2026. I couldn't believe it when I saw it. Let me just show you this chart here. Add a file. Let me go to screenshots. Okay, let me show you this. Micron. This blew me away. I was like, what? Really? Here's Micron. If you can zoom in there and look at Micron, see that? See the box on the left? Look at 2026. 2026, 274% increase in earnings projected. $31. That's huge. It's not priced in. At 25 PE. Funds own 50%. This is underpriced by a wide margin. This is way underpriced. 274. Does that mean chase it up here? No, wait for your opportunity. You're not going to miss anything by waiting to get into a position in Micron because you won't get shaken out. Right? It'd be so easy to buy this right now and say, okay, if I absolutely have to buy it right now, what would I do? Okay, the way I like to look at it is if I absolutely want to get into this right now, and I don't care if it comes back to the 20-day, I'll just add to it. Buy 100 shares instead of 1,000 shares right out. Buy 1 or 2 calls instead of 10 or 20, right? Buy a smaller increment. That way, if it does pull back, you can add to it with the expectation that I was going to do that anyway, but I'll eventually get to my full position, which is 1,000 shares. or 25 calls or whatever you're going to do. Scale in. That way it's not so hard when things don't work the way it looks like. I mean, this looks obvious to me, but maybe it's not. This is Micron, okay? So Micron, maybe it's not so obvious. Because every time we do something that looks obvious, we wind up, the stock usually pulls back. There goes the futures. Futures going. Futures are going. Micron at the highs. I got the 290 call. So I need to roll these out. What I might do is take profits and buy the 295s. But I'm not going to do it at the high of the day. I'll wait for a dip. Micron. Okay, Micron looks good. If you're a new trader, you're going to keep an eye on the 20 EMA. Every time it pulls back to the 20 EMA, that's your opportunity to add to your position. So you buy 100 shares today. Next time it dips to the 20 EMA, and the 20 EMA keeps moving higher. I want to buy the dips. You could buy here and sell covered calls as well. So that's another alternative. But given what I'm seeing here with 274% increase in earnings projected by analysts, given what the company has said for 2026, way underpriced. $25. Excuse me, 25 PE. Just don't chase it. Okay, NVIDIA. NVIDIA is below its 20 EMA. Okay, so it's just consolidating. All right, NVIDIA trying to get back above. Tesla's, oops.
an ounce for the first time ever today. Massive gains for all this year. Silver up 145% so far in 2025.
S&P, Micron. Micron looks good.
Some of this year's biggest tech winners. Our next guest is sticking with the AI trade next year, but says it's time to diversify outside large cap tech names. With us, Paul Christopher, head of global investment strategy at Wells Fargo.
Okay, I only have one credit spread, one iron condor left. Only have one left. That's Adobe. I've closed everything else up to this point. Adobe. I've covered this several times. Adobe, $1,300 in credits, up to $750 right now. If I close this right now, I could make profit $750. But that leaves $550 on the table. And Adobe has been doing just fine. So if you layer these, I don't have anything else right now, but if you layer these during earnings season, you do one or two of these a week and they expire, this week, next week, the following week, and you make like $1,000 per week during earnings season. These quickly add up. Okay. So these quickly add up. So you can see, here's November. Here's November. Okay, we had a few losses there. A couple of these we had to roll. JP Morgan. December, this one last trade on Micron was a doozy. Okay, but the overall impact for December was a nice gain. Okay, so I had one bad one and 8 or 10 good ones. Okay, total for the 2 months, I started tracking these because people were asking me to track them. 20,000 on these. If you're not doing this, you need to at least consider it. Go small. First couple of times you do it, maybe do one or two iron condors during earnings. Earnings are coming up in 2 weeks. So that gives you an opportunity to go over to Invest with Henry. Invest with Henry on YouTube. Just watch some of his videos about selling iron condors. SMB Capital, Sierra Mike Bravo, SMB Capital out of New York City. Their head trader talks about selling premium all the time. They have a good YouTube channel. I'm covering it live, so I can tell you how straightforward this is. There is risk involved. You don't want to sell iron condors or premium right now because VIX is so low. Okay, we want VIX to pick up. The reason why you trade during earnings season is because the implied volatility already expands due to the dealers wanting to hedge their positions. Option prices get more expensive into earnings. And then the day after earnings, they collapse. You collect the premium. You go on to the next trade. If it sounds complicated, it's really quite simple. Instead of buying options like most people are used to, you're selling options. You have the risk, but understanding what risk you do have outweighs the profits, the reward, in my opinion. I've been doing it for so long. I remember when I first started doing premium selling iron condors for earnings, the first couple of times was a little bit scary. What if it goes in the money? What do I do? The VIX is moving lower. All right, so S&P is moving higher off the low. Can we get a little follow through? VWAP is overhead. They're really not that scary once you get used to what you do. You do one or two the first 10 times you trade it, first 5 times you trade it, you do 1 or 2 iron condors during earnings. You go with something that's not going to break the bank. Like it would be better to trade iron condor that has high implied volatility, say on a bank, than something like NVIDIA that could go a lot farther than you're expecting. And Vega and Gamma kick in, and the price of the option you sold went from a 20 delta to a 60 delta overnight. That's what happened with Micron. We sold 15 deltas. The next day, we gapped up so strongly, Vega and Gamma kicked in, and the deltas scooted up to like a 60 delta, and the option prices exploded. And we had to take a small loss. But we went long, so those calls are making money, and Micron continues to move higher. So net, Micron will be a fine trade. You just got to be able to look beyond the current trade that you're taking and think in the future. 270%. I can't say this enough. 274%. That's way underpriced. 274%. If you can't see that, zoom into it. Okay. Zoom into your screen. 2026. Analysts estimate $31 in earnings. We had $8 in earnings this year, and that's before the AI spending really started to kick in. 274%. Not priced in. Do not chase it. Wait for it to pull back, give you your best entry. Right now, Micron continues to move higher.
Distribution matters more than who trained the best model. You see that in the scoreboard. Alphabet is up 65%, leading the pack because it owns the full stack: chips, cloud, distribution, and the top performing AI model. Getting credit for Waymo, now live in 5 cities with plans for 20 more, fully autonomous, no safety drivers. Compare that to Tesla, a 320 forward PE. That's about 10 times Alphabet. The bulls see $1 trillion robotaxi opportunity, even though Waymo is way ahead. And then there's Apple, the wild card here, near the bottom at this point, but it never plays first mover. If models converge, distribution wins, and Apple has 2.3 billion active devices. Contessa?
So this is an interesting scenario. What you're saying is Google, because it owns the whole stack and delivers it right to the consumer, is set up to be in the starting position. You think that Microsoft, as it's on our computers at work and all of the like, is similarly situated. Is it possible that Apple has the rest of the stack and just hasn't shown us all its cards?
Well, on your first point about Microsoft, the two places where it's lagging Google's strategy is on chips and having its own competitive in-house LLM. So it has
Maya, which is this effort in in-house silicon, but it's not competitive in the way that the TPU is. And they also have just been relying mostly on OpenAI's models, newly in partnership with Anthropic. Now, to your latter point about Apple, kind of coming into the game a little bit later, there's a report that they might be teaming up with Google using Gemini as part of their Apple Intelligence rebrand in 2026, and that's really what people have been waiting for. And they haven't been playing this hyperscaler spending game. They only put in $3 billion in terms of infrastructure spend in the most recent quarter. So they're not trying to win on that front. They don't have a cloud business, but they sure do have distribution nailed down. And that could be where they become a very competitive force in 2026.
Why do you think that investors are beginning to lose patience with the amount of money, the amount of debt that is concerning AI and data centers and the investments here versus the payoff? I mean, it's so big and there's so much speculation about this time it really is different. Why the rush to see those profits?
Part of the problem has to do with a reliance on single customers. So Oracle has really become the poster child for why debt might be problematic. And that has to do with the fact that the vast majority of its backlog comes from a deal with OpenAI to the tune of $300 billion. And so they are committing to this kind of infrastructure build out before any of this capacity comes online and before OpenAI has paid its bill. And we're also seeing similar numbers show up in backlog for Microsoft, for example. As part of its reorg with OpenAI, renegotiating the terms of their commercial partnership, they get $300 billion worth of committed spend from OpenAI to Microsoft Azure. But the concern is that OpenAI is committing to a lot of different partners, north of $1.4 trillion in compute commitments, and it doesn't have either the revenue or the next round set up to be able to facilitate that spend. And they also haven't lined up their debt to be able to pay these compute bills.
Mackenzie, great to talk to you. Thank you for laying it out for us so clearly. If the Max 7 stocks are getting ready to decouple, which names could be a best bet for 2026 with us?
Okay.
Portfolio manager at Clockwise Capital. James, it's great to talk to you. So Mac did a great job there of sort of laying out why we're going to see this.
Okay, Apple turning up. Okay, we could get a sustained rally here if we can get Apple and Microsoft both to bounce. Microsoft is at the low right now. Nvidia just feels like there's no one interested in trading at the moment.
That would be Apple, that would be Broadcom, and Micron, which is not in the Max 7, but it is part of that index. So, we do think we got to take a step back and look at what are the growth assumptions as you look into next year. What are the margin assumptions as you look into next year? I know we're talking about this $300 earnings number for next year for the broader S&P, but at the same time, that number really hasn't changed from a year ago. The earnings expectations have largely been intact, and I think the multiple surge that you've seen.
Okay, did I get a fill yet? No, I still got a bid here for this fly. It's bid at, I don't know. I don't think they want my, I keep seeing $1.35, $1.40, $1.50, $1.30, $1.40, back and forth. They keep bidding $1.40, $1.50, $1.30. I'm just watching the bid on this butterfly. The butterfly, I'm looking at 60. Let me show you what I'm looking at here. Okay, I'll just mark it up on the chart so you can get an idea of what to expect. S&P 500. Actually, did I already mark one of these up? I think I did. S&P 500. Weekly, Iraq War, Friday, put fly. Okay, that's for the put fly. So this was like $120 put fly, 6,700, 66.75, 66.50. I didn't take this one. We wound up taking the call fly. All right, so think about this for a second. All right, so we didn't take the put fly. Instead, things started to look bullish. About 7 or 8 trading days ago? We bounced back above the 50 days, so we took that call fly. And now, now we've got 6950 is one wing. Okay, 6950 is a wing. 6975 is the center of the fly. And then 7,000. 7,000, okay? So the center of this fly is up here. Okay, so you got two short there. You got two short. You got one long on each wing. So I have I'm trying to get 5 of these. So I have 5 of the 6950s, 5 of the 7,000s, and I'll be short 10 to balance out the butterfly. That creates the risk reward profile. That looks like, actually looks like this, where the center, when prices get to 69.75, that's your max profit. In this case, it's about 20, what do we say, 20, let me just check what I posted. 23,000.
We're underweight mostly financials. You know, we think that trade got ahead of itself. I think a lot of it is priced in.
It's about 1150. 1150 in profits for 5 if I can get, for now, 11,500. Okay, call fly. The center point of the call fly is where you have the 2 short for each of these contract. One of these butterflies, you get 2 short and 1 long on each of these wings. So you make profits all in here, all inside that pyramid. We're currently trading S&P, trying to bounce a little bit more. Micron's okay, S&P. Okay, S&P is currently trading 68.97. We really need to get back above 6,900. Okay. So let's say you take one of these iron condors, or maybe you take 2 or 3 of them. I would only be using maybe 1 or 2% of my investing account, depending on how big account you have. The rest of my account, currently in my investment accounts, 80% invested, long only funds, and 20% cash. I haven't changed that in what? It's got to be 6 months. I haven't done anything to that. So that's doing just fine. I have a very large position in JEPI. Okay, a very large position in JEPQ. Oops. Sorry. JEPQ. Okay, I have a large position in both of these, right? JEPQ and JEPI. And if you've been around for any length of time, you know that I've also had a very large position in TRBCX, T. Rowe Price Blue Chip Growth Fund. You know the usual suspects here: NVIDIA, Microsoft, Apple, Amazon, Google, Netflix, Snowflake, Meta, I think I said Meta, Tesla, etc., Broadcom. All right, so up over 150% since we got into this one at the end of the last bear market. All right, S&P is still going here. S&P moving hard. I have no alerts here. What's going on? No high tick alerts. Okay. So, yeah, so large position in JEPQ, large position in JEPI. You can see there's no reason to do anything right now. I have a position in RGAFX as well. Okay, these are all blue chip growth, and the JEPI, that's JP Morgan. The premium income fund is the JEPI, JEPQ. JEPQ is the NASDAQ equity premium ETF income. Also have some SPHD. This pays lots of dividends. If you don't know what SPHD is, it's an ETF that I often talk about. I've been in this since 2014. Let's see. Let's go to edit. All right, this is SPHD right here. See SPHD. Okay, so you can see what's in SPHD. I haven't updated this, but they're pretty much the same. Okay, it's a 12% annual return since inception. That's not bad for a long-term investment, 12%. These are the holdings, okay? A lot of electrical utilities, some consumer staples. Okay, consumer staples, Campbell's, ConAgra, some healthcare, pharmaceuticals. Okay, you're familiar with all of these: Pfizer, AbbVie, Gilead, Merck. Okay, Williams. We've got utilities and energy. We've got some tech in here: IBM, Juniper, Broadcom. Is Juniper even in business? Are they still in business, Juniper? Juniper, JNPR. Juniper, JNPR. I haven't traded that one. Nah. Yeah. So Juniper went out of business, right? I'm not sure who bought them. If anybody knows, just post it in the room. Okay. So you got some industrials, 3M, Newell Brands, Hasbro, some insurance companies, Prudential, IP. Okay, so it's a good ETF. It pays out once a month. It pays a dividend once a month at the end of the month. Okay, pays a monthly dividend. It's pretty much gone nowhere, but every month I get that dividend, buys more shares. There was a story about a taxi driver in New York City, and back in the 80s, I believe it was, he was listening to some Wall Street types that were in the back seat, and he made a note of what these guys were talking about. I think it was the 90s, actually. ETFs became very popular. So all he did was invest his money, that he could, and he had everything rolled back into, all the earnings were rolled back into more shares. And over like a 20-year period, he gained a considerable amount of money through 2000, even the pullback in 2007, 8, still made lots of money. I mean, when you look at the S&P 500, just buying, every couple of weeks, just buying the index or something like the index, a index, if you buy, twice a month, by the time you're ready to retire, you could be talking a lot of money. All right, since the 2009 drop, okay, we're up over 950% currently. 945%. That's not bad. Not bad. For just investing in an ETF, take 2 to 5% of your earnings, just have it squirreled away twice a week in your company's 401k. Trust me, that's how you retire without having to have a whole lot of worries. If you're in your 30s and you're not doing this, you need to pay attention and start doing it, right? Join your company's 401k. Most of them will match your earnings or match your contributions up to a certain amount. When I was with a corporate entity back in the day, they matched dollar for dollar up to $5,000. So if I deposited $5,000 in my 401k, they put $5,000 in. So that's 100% right there off the top. Why would you not do that? Well, I can't afford it. Everything's so expensive. Everything. You can afford to put $50 a week away. There's always a way to figure out how to do it. Maybe you don't buy steak twice a week. There's always a way to figure it out, but you have to think about the long run. I'm sorry if I'm getting off into a tangent, but markets are moving higher right now anyway. So we're back to VWAP. Okay, we got supply right here. Okay, my S&P. So for those of you that are new, maybe you're in your late 20s, early 30s, and you're listening, do yourself a favor. If you got a company 401k, most off of them, put $10 a week away. Start with 10. Start with something. My dad used to always tell me, you got to put money away. Got to put money away. I always used to bust my ass. You know, if you want me, I'll take care of it. He said. He was a smart guy. Invested into 5-year CDs back in the Volcker days when interest rates went to, what was it, 21%? He locked in at 16%. The banks kept calling him every day. We want to renegotiate your CDs. He locked them in for 5 years. That's how my mother was able to live comfortably. Some wise investing. He never made more than $30,000 a year back in the 70s and 80s. You know, he was a projector. Anyway, the point of the story, the point of my diatribe is you got to start putting money away and stop thinking about the short term, you know, and getting shaken out of a stock intraday. Buy some index funds. If you're going to do any of these trades that I'm taking like a fly, do 1 or 2% of your account. So if it doesn't work, you don't break the bank. But if it does work, you get a big payout. I think we're going to head to 7,000 personally, first quarter. That's where all the analyst estimates are: 7,000, 7,100, 7,200. JP Morgan's collar is likely at the end on Thursday. JP Morgan collar is likely to roll up and out 3 months. So we'll be able to tell wherever JP Morgan places that short strike. That's going to be the top of the market in the short term. If I get, you don't have to post anything in the trading room. Yeah, that's pretty good. That's pretty good there, Corey. Yeah. Yeah, KBB. Yeah, absolutely, absolutely. You know, over the last year or so, we've been focusing mostly on shorter term trades. Sometimes I lose sight that other people, especially people like Frano, are investing long term. You know, should be buying shares on pullbacks, and those usually work out for her. I would say what, Frano, about 95% of the time. Oracle is one I have with her. That's not doing too great, but you know, one out of every 10 or 20 positions you take. Oracle just going to require some patience. I'm thinking this is going to get back up to say 300 in the first quarter, maybe the mid 200s. Yeah. If you want to take a snapshot, actually, I'll post it in the room. Okay, here's the S&P. Okay, I like to keep track of what's transpired in the markets as we continue to move higher. I mean, some of these things are huge, right? Remember the Japanese yen, Australian dollar carry trade? That was my birthday 2 years ago. I went home to visit my mom in 24. And the yen spiked. Markets pulled back. Didn't like it. But yeah, we're up 900, almost 1,000%. Right? You might be saying, "Oh, I can't do that. It's like too long. That's boring. I can't do that." If you take a 401k and you just put it on, you tend to be at this company wherever you're at. No matter if you leave in a company every 2 or 3 or 5 years, you take your 401k with you. When you leave a company, let's say you're working at IBM and they have a 401k, right? I don't know what they contribute, but I think it's like 50 cents, 50% of every dollar you put in. So you make 50% right off the bat. So you put 1,000 in, they give you 500. Why would you not do that? That's insane. I forget who said it, but there was somebody who said, some smart person, that if you're it might be that guy, what's his name? The guy that does the pay down your credit cards. What's his name? Everybody knows who he is. You know what his name is? Anyway, he's saying, among other people, if you're constantly spending every dollar you make, you're never going to make it in life. I know it's hard, inflation wise, to do some of the things, but I know personally, I don't need to buy filet mignon every time I go to Costco. You know, that's $100 worth of filet every time I go there, or 200, depending on how big a filet I buy. But it does feed our family. A whole filet will feed, if I cut them the right size, feed our family for 6 or 8 meals. I mean, I can make steak Diane. I can do filet mignon. I can do like a Thai dish with filet. 10, at least 10. So $20 per meal for a family of 4. Not too bad. I can buy salmon at Costco. You have like 3 or 4 meals in a bag of fresh caught salmon. I forget the name of the brand at Costco. Join Costco. Your money goes a lot further with Costco. Buy in bulk. Yeah. If you're spending every dollar you make, you're never going to make it. Right. You got to start thinking of investing as part of your life, right? Put $10 away. $10 away, invested every week. I mean, that's a decent amount of money. $5,200 a year, right? 20 years, it starts to add up. And if you put it into an investment that has an ETF feature where you can reinvest by buying more shares, just forget about it. And if you go to a different company, you take your 401k with you. I manage my own account. So when I left the corporate world many moons ago, I took my 401ks, my IRAs were converted to IRAs. And now I have business 401ks for the closing print. But I'd be silly to not be putting money away. And try not to put everything on credit cards. Geez, those guys rape you. I say guys, I mean banks in general. What the hell was that guy's name? I want to say Murphy. It's not Murphy. It's something else. What the hell is that guy's name? It's going to bug me now.
Okay, so last week you did a great job laying out what looks like a historic number of
Ramsey. Guy's name was Ramsey, right? Anyway, just sitting here staring at the yearly, monthly chart, S&P. All the things that have happened since I started investing. 1987 is not even on the screen now. Let's see. Let me go out one more year. 45 years. Okay, so this is where I started investing, way over here, 1987. Russian ruble devaluation, remember that? .com bubble.
Let's get to Seema Modi now for a CNBC News update. Hi, Seema.
Hi, Contessa. Here's what we're watching at this hour. The state of California has dropped its lawsuit against the Trump administration after it withdrew $4 billion in funding for the long-delayed high-speed rail project. The Transportation Department cutting the funds in July, saying the High-Speed Rail Authority had no viable plan to complete it. The authority said it would focus on other funding sources. The project is expected to cost more than $100 billion.
Oh, man. Okay, so Broadcom looking like it's going to turn up. S&P is trying to take out some more highs here.
Garcia has become a flashpoint in the immigration debate after being mistakenly deported to El Salvador before eventually being returned to the U.S. And there's a new celebrity billionaire. According to Forbes, Beyonce has reached the milestone, joining her husband Jay-Z along with Taylor Swift, Bruce Springsteen, Rihanna in the Billionaire Musician Club. Much of her wealth comes from her music catalog, which she almost completely controls, but also that mega concert tour she had this year, which $100 million. Yeah, it's in moment. Those concerts.
Okay, so that's the S&P 500. Almost 1,000% since the 2007, 2008 great financial crisis. Man, that was a hell of a time. I remember developers were going up belly up everywhere across the country. Big banks were taking over big properties. You know, you have these properties where you have like big strip center with like Kohl's and Dillard's and, you know, multiple shops, 20, 30,000 square foot shops, you know, 5 or 10 of them, 20 acres. I mean, we would do a project, $2.5 million, $3 million project. And these developers are going belly up right in the middle of trying to build a Toys R Us store or whatever. Yeah. Oh, Micron's still going and still going. Micron. Okay, we're starting to turn the corner here. S&P continues. Okay, let me see what's going on here. S&P. S&P 69. Okay, time to switch screens here. Oracle turning back up. S&P 500 turning back up. Moving through supply. Okay. Okay, there's another level of supply we busted through earlier this morning. Let's look at this. Okay, hedge flow, big move in hedge flows. This reminds me of, what was it, Wednesday? Remember Wednesday where we had that shortened day and hedge flows took off like this? Very nice. All right, looking good. Let's see where we can go with this. Calls.
What we're going to see is, at least from some of the tech companies, it's not going to be a flow on debt diet. They're not necessarily going.
Okay, so look, it feels like the bears are getting their buttocks handed to them right here. Micron's still going. Micron.
Welcome back to the exchange. Silver down 7% after topping $80 an ounce for the first time ever overnight. Prices are still up about 144% this year. Now it looks like silver's down more than 8%. For more on what's next for the metals trade, let's bring in Jeff Kilberg. You know, is there gold in them thar hills still? If you haven't already bought it, should you get in?
Well, Contessa, you know I'm a golden domer, so I always have an optimistic view on the special and precious metals. But I do see silver as an opportunity here. But let's look at the price action today. It's been sensational. I want to say historic, but this is not 1980. We're not seeing a 50% drop in the precious metal, but we have seen a near 20% move peak to drop, Contessa. You talk about that overnight futures price of $82.60, now down at $70. This has been dramatic. And the inputs are, Contessa, two big inputs, in my opinion, is obviously tax loss harvesting. We also see profit taking. But the one kind of special component that we're not really understanding is the CME group, the futures.
Hedge flow still going.
Necessary to speculate
S&P.
on silver. That put a bit of a handcuff, and that encouraged folks 2 days away from New Year's Eve to really book those profits or get out of those positions, which obviously are losses.
But were they silver handcuffs?
They could have been silver handcuffs, but I think what's interesting, I think this is just a reprieve, Contessa. I see the market moving higher in gold and silver, specifically in silver. I see $90 and $95 as a price target. And why? Well, I think interest rates, this is all going to kind of dovetail here, so stay with me. But the lower interest rates that I see coming sooner than later in 2026 is going to be another catalyst in anticipating leg higher for silver. So that's where I think this is just a reprieve. I know you see Newmont. I know you see all these different names. SLV is the ETF a lot of folks use to get exposure, so a dramatic pullback. But SLV
Micron at the highs.
170%. That's 100% more than gold.
Wow. Are you long gold?
We're long gold and silver in our tactical model, so we've been fortunate to be long both of those. We're not going to talk.
Micron 290s. Okay, I have 290, 295 call verticals.
But there's no exit yet. We look at relative strength, specifically in silver. It was up at 85, which is screaming overbought. But here it is today, just a couple seconds later at 65. So we're not in overbought territory, despite the fact it feels like it is, Contessa.
Okay, so let's talk about some golden stocks for 2026. You say that you're adding to, and this was our mystery chart going into the break, Home Depot. Why?
Well, Home Depot, to your point earlier on that tease, down 11%. This is an opportunity to buy a quality blue chip tangible name. We actually own it in the Essential 40 ETF. But there's a reason why I want to add to this position is because of the lower interest rates. I don't believe Fed Chairman Powell is going to be able to serve out his full term into May 2026. A lot of investors are anticipating President Trump to announce his pick in the first or second week of January. I think that will facilitate the 10-year note stubbornly being above 4% to move under 4%. That in itself will be a tailwind for a lot of
S&P 500. We're right in the supply. We need to get through it.
projects. Home Depot is going to participate. That will be a tailwind for Home Depot. And lastly, look at the inflation, specifically in lumber. We've seen it down about 20% just year to date in 2025. I think a lot of these products that were kind of constraining or a headwind for Home Depot and folks to do it themselves at their home projects, that is going to be the catalyst, and that's why I want to buy this blue chip tangible name.
Two other stocks that you're adding to, Amazon and Berkshire Hathaway.
Amazon, you look at Amazon, it's everything in our world. They continue to incorporate AI. I think they're talking about getting more and more chips to make that user experience. It's been a laggard year to date, specifically in the Mag 7. It's been one of the underperforming Mag 7 names. So we own this name. We like adding to this name. And
Dave Ramsey.
We talk about what could happen, what could be. And I think if you speculate, Q1, we were really excited. We saw it being one of the best stocks in our Essential 40 ETF. Now it's been a laggard, but when you see the sum of the parts, remember GE just a couple of years ago, Contessa, when they had all those spin outs, that sum of the parts, 1 + 1 equals about 7 for GE. So we're hoping at Berkshire Hathaway, if we do see some divesting, Berkshire Hathaway should participate in a move up.
Micron still going. Micron looking good. Micron. Micron. Wow, Micron. Bullish engulfing candle at highs. Micron. Okay, Micron, these calls making up for some of the losses that we took on this Iron Condor. All right, this loss right here. This is not exactly correct, only because I took the exact amount that we closed these for, the call side, but I also took a number of calls at the 190 strike that's making this more palatable. The one or two out of all of these. MongoDB, that was another one. But the majority of these are doing well. So Adobe is doing really well. Adobe, gonna try to lock in closer to maybe $10, $15 per contract to close these, and try to come home with $1,200 on that one trade. That'll be great. So if I were to take it off right now at $55, if I was to take it off at $55, that would bring my total closer to, that's not right. That's not right at all. Let's see. Oh, that's Palantir. Adobe. That is right, 750. Okay. 750. Yeah. Yeah, I want to get this closer to something like 250. 250, $25 per contract. Okay, that'd be much better. Yeah, okay. Micron's still pushing here. Looking for our S&P to bounce. Hedge flows looking pretty bullish with 2 hours and 14 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Monday, kind of overcast now. It was nice and sunny this morning. About 65 degrees, about 60 now. Okay, futures drifting lower at the moment. S&P trying to bounce at VWAP. MACD is still pointing upward.
Pending home sales hit their highest level in nearly 3 years last month. Diana Olick joins me to dig into the data. Hi, Diana.
Hey, Contessa. Yeah, this was a much better than expected report, and the realtors are saying it's because of lower mortgage rates and more supply on the market. Pending home sales in November rose 3.3% from October and were 2.6% higher than November of last year.
Pending home sales, that's a good positive number. They beat 3.3% monthly versus 2 point whatever percent it was. Home sales growing. Micron at the highs looks good. Micron.
Listings are roughly 6% lower than they were in November 2019, i.e. pre-pandemic. So what does the housing market have to look forward to? Well, 22% of the Realtors members said they expect an increase in buyer traffic over the next 3 months, up from 17% in October, still down from 24% a year ago. And fewer expect to see an increase in seller traffic. And Contessa, we really do need that.
Well, it'll be interesting to see how it picks up in this new year. Diana, thank you for that. Coming up, despite wild weather and high rates, some insurers have managed to outperform this year, including Heritage and Lemonade. I mean, look at this. Heritage up 143% this year. We'll get Bank of America's 2026 outlook for the industry. Okay.
All right.
Improved efficiency throughout the financial system.
All right, so the hedge flows are trying to turn up more.
Wake up to the realization that it's time for innovation.
Trying to turn up again right here. Let's see if they go. 5.3 billion is traded in 0 day. 5.3 billion is traded in 0 day today. Actually 7 billion. We went down here minus 2 billion. Okay, so that's 7 billion total. Wow.
I'm curious what you make of that, Paul. I mean, how much
Okay, non-zero day.
still pose here, and how does Coinbase mitigate that?
Okay.
Well, Coinbase has provided access to Bitcoin for millions of Americans, really going back to the earliest days of crypto. But it's
We're heading into the 2 o'clock hour. It's 1:49 on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, the 29th, holiday shortened week.
In order to fully participate and finally participate in this market, we are seeing leverage and additional intermediaries relying upon leverage introduce new options for consumers to participate in the Bitcoin revolution. And that, of course, will require there to be new standards, new requirements, and new safeguards put in place. But we think that the market structure legislation is key to facilitating that. It will define for the first time which assets are subject to the securities laws of the U.S. and which assets fall outside of those laws. And we think that concerns regarding leverage and many others are best addressed by Congress.
Trying to get filled on these call flies at $135 per. All right, it's bidding closer to where I am right now, so I might actually get filled.
Buying a new car? You need WeatherTech. Perhaps a nice used car. You need
Micron.
Or maybe you're still driving Old Faithful. You need
Adobe.
WeatherTech. No matter the age of your vehicle, American-made WeatherTech products are the solution. Because Lexus don't care what year your vehicle is. See? You do need WeatherTech. Order your American-made protection at WT.com.
Welcome back to the exchange. This has been a big year for the big insurers. I mean, you've got Hartford up 27% year to date, Travelers up 21%, AIG up 19%, and Chubb up 14%. And that's during a year that saw natural disasters, high rates, sticky inflation. Now a new challenge in the mix for 2026. How do you grapple with the high price of data centers? For more on what to expect in the year ahead, let's bring in Joshua Shanker, insurance analyst at BofA Securities. I mean, really what I'm hearing, Josh, is that the insurers see this as a big driver of potential growth because the facilities themselves are massive, and it may take layers.
The other thing about these call fly position, keep in mind that if implied volatility picks up and you can manage to get a fill, I'm trying to get filled at a $1.35 limit. If I can get filled here and VIX starts to move towards the teens, the upper teens to 20 or whatever, the option prices are also going to be impacted. So that'll help. I do believe we're going to get closer to 7,000 though. First things first, we got to get back above 6,900. Currently, we're right at 6,900. VWAP. MACD is okay.
When I say this word, reinsurance. This is insurance for insurers. And because reinsurance rates skyrocketed over the last few years, it's part of the reason, not the whole reason, but part of the factor in why property insurance premiums climbed as well. Guy Carpenter is just out with a note today that says those rates are going to moderate. The January 1st renewal deadline comes up this week. And what we're going to see is businesses insurance businesses having to pay
Oh boy.
lower rates. There's such an influx of capital. They have done, these reinsurers have made great profits. Explain the mechanism for investors about how that works.
Well, the reinsurance is the tip of the spear, and so the volatility is extremely high. Long term, that is a huge growth industry. If you believe that climate change is real, and we do, there's going to be more and more storms to insure over time. We got to a point in 2024 where the price of property catastrophe reinsurance, in particular, reached an all-time high, and it's going to be down for the second year in a row this year, off a very, very high amount. And so the price of reinsurance is still expensive. It's not as expensive as it was 1 year ago, but the fact is that if managed correctly, the opportunity to make money in reinsurance and also to give a healthy market where catastrophe can be managed, it's a great business overall.
The reinsurer return on equity estimated to be 17%, Guy Carpenter says. Those catastrophe losses, $121 billion is anticipated to be the estimate for 2025. When we're moving forward, is the InsurTech, the way that insurers are using AI to assess risk, to underwrite insurance, to process claims, are the savings on technology helping to counterbalance the volatility in climate?
So I think a lot of the AI opportunity is in the distribution and the packaging and the selling of the insurance. At the end, there's a risk at the end.
So the supply is creating resistance, VWAP creating resistance. We're back down below VWAP. Volume picking up on the sell side. Let's see if this can produce a higher low.
As AI better at analyzing big data than the same actuaries have been regressing data, we think that's marginal overall. But the opportunity to figure out structures that can make the market more efficient, that's definitely part of the situation.
I showed leading into this that there are some real outperformers here. You have Lemonade up almost 100% year to date, Heritage Insurance as well, Lincoln Financial, all doing very well. The big insurers, Chubb, AIG, Travelers, have had notably positive returns this year on their shares. You want to talk about Progressive. Why car insurance?
Well, ultimately, auto insurance is very understandable. Everyone, flow is a huge part of the American lexicon and identity. But this is a company that's been better at analyzing risk and better at distributing risk than any other. It's basically the best performing financial in the S&P 500 over the past decade. It returns an unbelievable amount of capital to shareholders, and it's very rare to go through a year where the company is down, and it is down in 2025. Now, we think a lot of that is related to banks being up, the market being up, and this is the greatest port in a storm. And so when people are bullish on the market, they got to find what they own to sell. When they were scared, they've been selling Progressive. But the opportunity here for Progressive to consolidate the auto insurance market and use its technology to move into adjacencies like
Micron seeing some profit taking.
we think the sky's the limit.
What we're seeing is that the property rates in many cases
Okay, Apple back up to the high of the day. Apple turning back up.
growth moderating, not that they are actually coming down. It's something that we'll keep an eye on through 2026. Thank you so much for joining us today. Appreciate that.
Thank you.
And just before we go, let's take one more look at the markets here, where we've seen a down day with potentially some profit taking here. The Dow Industrials off by 0.5%. The S&P 500 off by the same. NASDAQ Composite off by just slightly more. And Russell 2000 exactly the same. The yield on the 10-year Treasury at 4.112%. That's it for us. Thank you for watching The Exchange. Brian Sullivan has Power Lunch up right after this quick break.
Okay. Okay, market's just fading. You can feel there's a lack of volume on these momentum moves. That little turn from 1230, that was a kind of nice. We hit supply, got rejected. Now we're trying to produce a higher low. If we're lucky, be nice to see a more of a green doji close in the upper half. We did gap down today, of course, after making new all-time highs. All right, so I'm going to take a couple minute break. I'll be right back.
Live coverage wherever you are.
Good afternoon. It's Monday, and we welcome you here to the watch list. I'm Nicole Petalides. It's 2 p.m. Eastern Time. We're live at the New York Stock Exchange on the corner of Wall and Broad. It's a shortened trading week. Don't forget Thursday, New Year's Day. This market will be closed. Plenty to cover here. We'll cover the potential federal rescheduling of marijuana and why it matters. And we'll talk about a move to Schedule 3 actually means for the industry and markets. Our panel ready to break down the housing outlook, affordability, inventory, the pressure points, because we will be also getting in some housing data. And it's worth noting that now stocks are down for the second day in a row, though we've had double-digit gains for the third year in a row. We did see the S&P 500 hit a record on Friday intraday, but sold off by the end of the day. What about the Santa Claus rally? This is the time. It's the last 5 trading days of the year of 2025 and the first 2 of 2026. Will we get that up arrow? We didn't get the last couple of years. Will that happen now? You also have President Trump in Florida with conversations with Zelensky, Putin, Netanyahu. Anything goes there. Here's a look at the markets. The S&P 500, 68.99, down 30 points. The Nasdaq 100 is down more than 0.5%, 161 points. The Dow Jones Industrial Average down 234 points, off the lows of the day. And the Russell down 0.75% almost. Now, oil and gold are very interesting. Gold's down $203. The metals are selling off quite dramatically today after we saw gold, silver, palladium, platinum, copper all hitting some sort of highs in the last week or two or so, but selling off in a big way. Gold's down $204. This is the 10-year bond yield sitting at 4.11, and oil's at 57.91. So that's below the $58 mark. It is up over $1 though today. Kevin Hanks, host of Fast Market here on Schwab Network, is with me, and obviously we're waiting to see if the Santa Claus rally comes in. There are some people who are optimistic, and some who think we bop around. In the meantime, we also take a look at Waymo, and that's something you're talking about. Tell me more.
Yeah, hi, Nicole. Yeah, remember that on December 20th, there was that big power outage in San Francisco that caused really big disruptions in the Waymo cars, caused them to stop basically and cause gridlock throughout the city. So now Google Alphabet, or Waymo, is implementing a fleet-wide software update to better handle large-scale power outages. And so to avoid what happened in San Francisco, what happened was it stemmed from the overload of confirmation checks by the vehicles during the outage. So they put in software updates that would allow these cars to better navigate through dark intersections and use better tools to navigate when the stoplights go out and when there's massive power outages like this. So software update, Google Alphabet and Waymo hoping this will fix the problems.
So, you know, it's interesting that they didn't figure this out yet, right? But they use a different technology than, say, Tesla and robo-taxis. So we're making a big software update here to correct what happened on December 20th.
Yeah, look, I mean, I did this story last week, and it was about checks. Like, it can navigate through dark spots, but it does checks along the way. And when it wasn't able to do the checks, that's when it all basically fell apart because it was too much darkness, that kind of thing. But it's very interesting to know that they're doing some software updates, and that's some good news. I did have a guest on today who said he likes Microsoft and Google more than Amazon. That was Luke Lloyd, so he did up the Mag 7. He did like that name. Let's talk about the economy. Some of your thoughts here, because we've been getting different bits and pieces of information, and we're waiting on more.
Yeah, you know, this no hire, no fire economy seems to be playing out. Like, case in point, we didn't get a ton of jobs in the last jobs report, but also the jobless claims are extremely low. Remember, last week we had 214,000 first-time filers for unemployment insurance. That's extremely strong labor market there. However, they're also not big jobs. So the market is trying to figure out which one is the stronger of the two. Also, we got mortgage apps last week that were down pretty significantly as interest rates had ticked a little higher. But today, as you know, we got pending home sales that spiked up 3.3% versus only up 0.8 expected and 1.9% a month ago. That was revised up to 2.4%. So maybe we're starting to see some resurgence in housing. The mortgage apps aren't showing it, but hopefully some lower interest rates. The yields have moved slightly lower in the last week. Hopefully that'll be, I think President Trump, what he's trying to, the Trump administration, what they're trying to do with housing, talking about new rules coming up, hopefully stimulate the housing so home buyers can not only get mortgages, but they also have to work on the supply of housing. So I think housing will be a big part of 2026, as well as, of course, has always been in 2025, affordability, Nicole.
Yeah, understood. Also, when we were talking about Waymo, they're also conducting robotaxi testing in London ahead of their New Year's planned expansion. I don't know if you mentioned that, but I hadn't seen that, and I wanted to bring that story forward because we covered that story last week. So I do think it's interesting that they're going to be expanding the Waymo into other countries, including London, and working with fleet operations partner Move and getting the regulatory requirements. The company reached 14 million paid robo-taxi rides in 2025. That's pretty impressive. Next week, anything catching your eye for next week at all?
Well, you know, this week we get just a smit of economic data. I believe in my career, the first real day of serious trading that won't have a holiday feel to it will be Monday the 5th. That's when we'll start to get real trading, all eyes back on the market. Hopefully we'll get economic data that week. It's hard to, economic data has really continued to have been disrupted throughout the holidays and into this thing. We're supposed to get data today on international trade, didn't get it. So we keep working. As traders, you just want to see the macroeconomic data so you make a decision about the overall economy as well as individual names. So hopefully, as we inch closer to the start of fourth quarter earnings season, January 13th, we'll get JP Morgan and Delta. The 14th, we get Bank of America, Citigroup, and Wells Fargo. And the 15th, we get Goldman, Morgan Stanley, Taiwan Semi. So we have to wait till the 13th for earnings. Hopefully, we'll start to get some accurate and timely economic data, Nicole.
Yeah, and when do we get payrolls? Are we going to get payrolls on the 2nd or on the, you don't know if we're going to get them, like usually we would get them on the first Friday as long as it's not the first, right? Or maybe the following Friday. I'm curious to see if those come in. Because I know that December we got in that sort of mishmash payrolls in December 16th. So I would like to finally get some good economic prints coming now, so we'll have to wait and see on that as well. All right. Okay.
Markets at lows.
On the schedule for January 2nd.
Right. Okay. I mean, we did see
Bitcoin trying to bounce.
but some of the first print that we got was before even the government shutdown, so we need a new GDP print too. It's good to see you, Kevin Hanks. All right, catch you tomorrow, Kevin. Thank you. Now here's a look at the big picture. Jim Gordon, CIO of Wealth Consulting Group, is joining me. Let's talk about some of your targets that you have. First, before I get to the 8,500 that you have for the S&P for next year, do you have 7,000 for this year? I mean, are you expecting the Santa Claus rally?
Yeah, good to be with you, Nicole. That's right. So this year, our target was 7,000. It's still 7,000. We haven't moved that at all. Even through the months of April, where things felt a little bit dire, we still held that as our target. That there was a path to get there. We have a few days left. We think that is still very, very much doable. We're not all about like precision and when exactly we're going to get there, but we believe we will get there around this time. Maybe before the year end, maybe first part of next year. Last year, our price target was 6,000. We hit that early, and so we never know exactly when these things are going to play out. But that's kind of
More bear flags on the S&P.
Target for next year. What will be the catalysts for that?
Yeah, that's right. So if you asked me a few months ago, I was actually not as optimistic going into next year. Things changed. Really, what has changed has been what I call the healthy, wealthy consumer. And we talk about this with the K-shaped economy. So there's that piece of it. There's all the AI spending. But we also have a Federal Reserve that needs to pay attention to the other part of the K, and that is the weaker consumer. That is the financial conditions. We believe inflation is under control, and that the Fed needs to be more dovish here, and so that is going to help out that weaker consumer. It's also going to help assets. And, that's part of the reason why we see that, we certainly could hit 8,500 on the S&P 500 by next time this year.
I also think about, the inflation worry versus the labor worry and what the Fed may or may not do. What do you think is on the mind of the Fed, and what do you think should happen and will happen?
Yeah, it's a great question. It's something that everyone wants to know. We believe that the Fed should be focused more on the labor market rather than inflation. Inflation has been coming down. We saw, some signs of that. We'll likely continue to see signs that inflation is coming down. It's the labor market, particularly, those areas where, companies aren't hiring as much, where we could see
S&P, very stagnant price action back and forth. Doji on the daily, spending top. Micron seems to be a little toppy for the day. Maybe take a little profits in Micron if you're day trading it.
is key here, and position size. So that is one area where as bullish as we are not liking Nvidia at 8%. We're liking Nvidia at 2.5%, 3%.
All right. When we think about who may run the Fed next, I know that Waller is thinking about inflation, that it may likely come down a bit. Rates maybe can moderate or come down too. Then there are others who think that we should wait. Is the rate picture important to your 8,500 target? I mean, are you expecting one or two cuts that we've discussed? But is it imperative that we get those?
Yeah, I believe it is, Nicole. And the people that I'm talking to, kind of inside this, industry, wealth management, other CIOs, strategists, most people would agree that, these bullish expectations and you can call them a potential pathway forward. Really, it is contingent upon a few things. We don't have geopolitical conflict that gets worse or expands. We don't have tariffs come back.
Slow grind.
Go through what we went through in April. Certainly, those could be a wrench. But one of those is the Federal Reserve. If the Federal Reserve, turns around and starts getting more hawkish than that I think it may not change the outlook for companies like Nvidia or Oracle, but certainly the broadening that we have seen in the market, which we think is part of the reason why we could get to 8,500. That broadening is likely no longer there, and small caps likely won't.
S&P trying to bounce now.
All right. Well, Jeff Ward, CIO Wealth Consulting Group, it's so great to see you. Really appreciate it. And nice to hear your optimistic outlook. We'll have to wait and see. I know you had 7,000 as a target here, and you're right around that level, not too far off. So good guess in there. Good to see you.
Thanks,
Thank you. Okay, coming up next, Options Corner. Tom White is standing by, and he'll join us and highlight unusual options activity from the day and how investors are looking to trade on recent news of Lam Research, American Airlines, and Apple. Stay with us.
All right, we're starting to catch a little bit of a bid here. Some shorts covering off the low. Be careful of a bear flag potential.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com.
Future just looks like a bear flag for now. No follow through. Looks like we're going to slide a bit lower at this rate.
Research has had a great year so far in 2025. It's up over 140% this year, even though we're seeing that slight pullback, just about 2% from those all-time highs that we recently reached here. This wafer fab equipment maker, they service the semiconductor industry. We've seen the demand in some of these sectors that are offshoots of the AI play here, and that's whether it's memory chip makers, the equipment makers like ASML, Lam Research, KLA-C, also within there. They've had pretty good years here based on the AI infrastructure build out. Last quarter they had a beat and raise quarter. They see solid wafer fab equipment growth for all end markets into 2026. They raised their current quarter Q4 guidance during the quarter also. And if you look at their EPS growth, historically we see just over an 8% growth rate. That's supposed to be nearly 16% so far this year. So the supportive nature that we've seen from earnings and the results have kind of funneled into this 142% gains that we've seen so far this year. And analyst community price targets across the board recently after their earnings. Mizuho recently put
It's 220 on the East Coast.
170. It says that
See if this can't follow through. Trying to get back above the 105 EMA on the 1 minute chart.
That being said, we did see some unusual option activity on the bearish side here. Maybe somebody looking to take a speculative shot to the downside here, that maybe the stock's gone up too far too fast. This was out in the March monthly option, so plenty of duration on this trade, over 80 days. Trader bought 10,000 of the March 170 strike puts, paid a pretty hefty option premium. They paid $12.60 per contract on these. So that break even where this trader starts to profits below $157.40 over the next nearly 3 months. That's about 10% below the current share price. I don't think this is somebody out there maybe hedging an existing long stock position, because they're paying a pretty hefty option premium, as I mentioned, for these puts to the downside. But yeah, giving themselves nearly 3 months in this position, Nicole, with the expectations that we're going to see maybe a little bit of a reversal in the shares.
Understood. All right. Next up, let's talk about American Airlines. I mean, we have seen, the holidays booming. You had some of the guests coming in here and Ted Weisberg picked these airlines that soared and took off.
All right, starting to catch a bid now. Starting to catch a bid.
Stock's down nearly 2% today, but up about 7% so far in the month of December. We've seen a resurgence and maybe a reset into some of these more discretionary travel names recently, whether it's been the cruise lines, the airlines, some of the hotels also. Still down about 13% so far this year, but we're seeing demand continue to be robust, and we've seen that across the board in the travel and leisure industry at this point. And then you see crude oil prices down at $58 a barrel. That's been the low area that we've seen over the last 12 months. Oil prices are down 19% so far this year. That equates into lower fuel prices. That goes straight to margins. Now, the big players within this space, the Deltas, United, and American, they'll probably do better than maybe the lower cost or regional airlines, just due to the fact that they get that premium buyer, they get that international traveler, they get the business traveler, and those are the higher margin segments of their business, and the economy continues to grow. We saw that from the last GDP.
All right, nice little bid here. Market's starting to rise.
What the estimates are. So people are still out there traveling. Jobs market, although
Okay, that looks pretty good. Looks pretty good. S&P so far. Nice little rally. Can we do more with this? It'd be nice to see hedge flows turn up markedly. We're starting to see that.
Not that much higher. I think the key with this trade, instead of buying the shares, this trader just bought basically an at-the-money call with the expectations that, hey, over the next year we're going to see some more gains in American Airlines stock.
Right, understood. I mean, I saw the Jets ETF Let's talk about Apple, a bullish trade you found.
Yeah, this stock pulled back from those all-time highs that we saw earlier this month, about 5% off of those levels, but still up about 9% on the year. We've seen that that super cycle that's kind of taking place with the iPhone 17, improving sales not only domestically, Nicole, but I think one of the keys is
Nice reversal so far, looking pretty good.
over in China. They basically took about 25% of the market share over there. They're on track to be the most bought smartphone out there, overtaking Google Alphabet with its Android system at this point. So that's been a positive, but we've seen repeated good commentary on the stock. Wells Fargo reiterated their overweight rating, $300 price target today on the shares, citing significant market share gains for non-Chinese branded phones in China. As I mentioned, they're seeing some really good data from there. Total mobile phone shipments in China grew by 2% year over year to approximately 30.2 million units in November. So they're getting good data. The stock's been rewarded, but it's at high valuation levels on a historic basis. We'll see if that trend can continue. We'll probably get some data from Apple over the next couple of weeks as far as sales goes during the robust holiday shopping season. Also, that might be a catalyst over the next week or two. We did see some short-term call buying.
All right, nice little rally there.
Cycle. So 11 days to expiration. Trader bought 7,000 of the 280 strike calls out of the money to the upside. Paid an average debit of only $1. They're only 11 days in this position, so not a lot of option premium. So the break even for this trader where they start to profit is above 281 over the next week and a half.
BNAI.
2.5% above the current share
What are you
price.
doing there? Oh, making new highs. Okay.
Here in Apple and American Airlines today, Nicole.
Okay, well, Tom White, love having you here for Options Corner every single day on the watch list at this time so people can see real options trades that you found. And some of them very unusual options activity on news and such. Tom White, thank you. All right, coming up. Well, we're looking at the cannabis industry and how things are reacting to big marijuana moves. We'll be right back.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Nicole Petalides. We're live on the floor of the New York Stock Exchange.
All right, futures continue. Retracement, hedge flows continue. All right, so we need to get through this area of resistance. If we can manage that, maybe we can charge back up through the 69 6900 zone. Okay, 6903 or so, VWAP. Okay, VWAP's right there. Supply, supply is the red band. All right, continue to move a bit higher. Okay, nice spike here, starting to move a bit better. Futures shaking everybody out, and then rallying this. This looks pretty good so far. Pretty good attempt to get back up to recent highs. It'd be nice to see a close up here. We're moving above VWAP. This supply will go out, will disappear now that we're pushing through this area. Okay, looks good right in this area. Break a structure. Okay, that just disappeared on its own. I didn't do that. S&P 500.
What names do you hold in the fund or that you like the best in the group? Which ones are the ones you can really count on, good or bad? Whether they're U.S. or Canada. Which ones are the names that you like the best?
Sure. All you have to do is look at the holdings of our fund, and our fund, ticker symbol MSOS, is the largest cannabis fund in the world. The holdings are on the website every day. Curaleaf is our largest holding. Actually, the largest.
Nice move through this level so far. 6920s. What are those going for now? 6920s. What's left of that? 6920s are down to 30 cents, 35 cents.
On the Canadian side of the border so far, but they do have a lot of U.S. interests. They are able to list on major exchanges, list on NASDAQ.
All right, Riot trying to turn up. Bitcoin's been kind of dead all day. Futures turning back up.
Any way to know the fund flows or any sort of rebalancing or repricing
Still a doji. Expecting price action to stay inside of this price action, this high and low. If it starts to move up into the upper half of today's range, I would expect the bulls to take control. Maybe get back up to the highs would be nice.
See that as another big boom to these companies, getting more institutional investment and everything that comes along with it. So we're excited about the first quarter of this year and what's going to happen. But again, a lot of volatility.
S&P following through.
With multiple steps of this partial legalization.
Futures continuing to climb. Can we get back up to the highs? That'd be really nice. The bears are having to cover. Let's look at the New York Fangs. New York Fangs, Apple looking next to Google, looking the best. Google trying to get to the highs here. So is Apple. Broadcom, Snowflake, those are turning. NVIDIA is just sitting here. It's above the 50-day, but not getting much follow through. Futures just consolidating. The pop here. Futures. Need to see some follow through here. Need to get some. Okay, supply. That was from earlier. Take that out of the way. Thinking we're going to close on a spinning top doji unless we get the bulls to take control here.
Lead to banking and listing on major exchanges. It's very unfair that those things do not exist for these U.S. companies, but a company in Canada, for instance, can list on major exchanges, bank. They just can't do THC business in the United States yet. So the rescheduling is a huge step.
Futures, can we push this a bit more? Hedge flow still rising, so we might get some bulls to join in here. Tesla, disappointing. It did move back down to the lows, back down to the 21-day.
Same goes for where you invest. Level up and
Invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vitus and connect with me on LinkedIn or Instagram for more.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Hedge flows are starting to taper off as we rise. Don't know how much more energy we've got. Okay, maybe we get something going here. We're trying to push through this area. All right, nice little follow through so far. Okay.
Absolutely. So there's companies that are actually mapping, like Planet Labs, which are mapping the entire Earth daily.
Trying to follow through. Okay, shorts are covering some more. All right, 515, 30, 60 are all on buy signals. I'd like to see tick cumulative turn up a little bit more. Breadth improve. Looks pretty good so far. Nice reversal.
Companies like AXA are able to kind of instantly be able to assess the damage with Earth imaging data.
Right, understood. I mean, when we think about what we're getting that is real time, you talked about defense.
Okay, looks good. Higher lows, higher highs. Okay, next level of resistance is coming up right here where we got rejected earlier, right along this area. Okay. 69, just shy of 69.10 or so. 69.09. Okay, we're heading in that direction right now. Futures continue. Okay, that's helping. Micron back to the highs of the day.
When we think about the investment or stocks that could move along with this, now we're talking about it in the big picture. What can investors do to make money on the monetization of the AI in the global lunar world?
Yeah, so the name we like right now within the AI and Earth observation side of things is Planet Labs. We raised our price target today to 22, and we believe that the business model is not only accelerating due to the use of
nice follow through.
we believe that the financial outlook is very compelling for a lot of investors. As we look out over the next 2 years, we believe that they're well positioned to reach that golden rule of 40, which is usually what a lot of
Nice follow through. Futures continue looking good. All right, so far more than I thought we would see. Still a spinning top doji on the daily. Still a spinning top. Supply is now up here. VWAP. Okay.
So we'll take it step by step. So we talked about the Earth observation side of it, where we like Planet Labs. When we move over to Globalstar, that's on a communication satellite. So again, like Planet Labs is taking pictures of us here on Earth, Globalstar is actually working on communication.
Micron making new highs of the day here. Micron, new high of the day.
Has a unique relationship with Apple as a wholesale partner. So if you have an iPhone 14 or higher, what Globalstar is actually able to do is get rid of a lot of those dead zones that we all know of, where we're not within reach of a cell tower, and you'll still have text and SOS capability if you have an Apple 14 or higher. So essentially, the towers are we've built out cell towers over the past 20 years, and we still have areas where it's uneconomical to put those towers or just improbable to put those towers. So think of satellites as able to fill that void when you're out of range, and you're going to see a lot more direct-to-device plays, we think, in 2026 to get rid of those dead zones.
Any sort of agenda, catalyst, vote, finding, something that is going to put a date on my calendar when it comes to these names in the first quarter or the second or in the first half of the year? Is there anything that might be a catalyst for any one of these names? Is something working on something special, or is there any sort of vote or anything like that?
Yeah, so with Globalstar, what we're talking about, we'll be watching for those iPhone 17 sales. You had a guest on earlier on your option segment who was talking about them. But the more iPhone penetration of 14 and higher, that's good for Globalstar because that enables more devices that can access their handset. When we move on to...
Come on, let's see if we can get a follow through here. Daily. Okay, you see what the daily looks like.
This morning we took our price target on that name from 17 to 25. And we believe that's going to be very catalyst rich. Intuitive Machines is a play on the lunar...
All right, so we got an hour and 13 minutes to go. I'm your host, Cousin Benny, coming to you from theclosingprint.com. Monday the 29th. Holiday shortened week. Everybody's hoping for Santa Claus rally. For those of you buying the dip in the lunchtime period, nice rally off of that low.
We also believe that they'll be preparing for their first IM-3 mission launch, which will carry an actual satellite of theirs that can begin the start of a communication system orbiting the moon. So similar to Globalstar, which is focused on communications around low Earth orbit, we believe that 2026 we're going to see the U.S. and Intuitive Machines play a key role in building a communication system around the moon.
Great to see you, Greg Fendi. Interesting, topic. We don't talk about this all the time. Really appreciate it. Greg Fendi at Clear Street. Thank you.
Thanks,
Still ahead are panels all around housing. What's next? We've already gotten in the pending home sale. We saw that spike, but we're getting more data throughout this week. We'll be right back.
Trying to get some follow through. MACD is still rising. Volume is picking up over the last 30 minutes. Can we sustain this? We're trying to push a bit higher. All right, looks like the futures are going to push a bit higher here. 515, 30, 60 are on buy signals. Nice turn. MACD is turning, it looks like. Okay, headed up to that supply zone. All right, now we got some nice follow. Oh, there we go. There we go. Nice pop there.
All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Hey, investors.
I never did get a fill on this. All right, trying to get a fill. Let me try $1.40. I'll go up a couple pennies. Let me go up $1.40. Trying to get the fill in this call fly. Oh, I got filled at $1.40. $1.40. Okay. Finally filled. Limit $1.40. Jan 28 call fly. Jan 28 call fly. We talked about earlier. Let me just grab the link so I can attach it to my updated comment. All right, I finally got filled at $1.40. Okay, got 5 of those for now. Did you get filled? I just got filled. Just got filled. $1.40. Oh, wow. Wow.
House price growth, and we think that dynamic will persist in 2026 and allow some buyers to come off the sidelines.
All right, and Orphan, what do you think here? Because affordability is a constant worry. Are prices coming down a little bit?
Yeah, like after 2 years of stagnation, housing appears to be coming off the bottom and settling into a more balanced cycle. And Odetta is right, income growth is housing costs, and that has resulted in small improvements in housing affordability.
Okay, nice follow through.
Wages. There's also the stock market. The S&P 500 is up.
Can futures continue this? Let's see what hedge flows are saying. Hedge flows. Hedge flows continue to climb. Nice. Nice little run up. Yeah. Yeah, so I got 5 of those call flies. I'm expecting that we'll see close to 7,000. Okay, so I want to copy down what you posted in the room about JP Morgan. Let's see, JP Morgan. Let's see, where did you post that, Corey? Up here? Okay, cool. All right, so JP Morgan. All right, let me catch these notes. All right, so I want to figure out a way to delineate this information, Corey, on JP Morgan. That'd be nice. Quarterly collar profit. All right, so 5%, 3 to 5% out of the money. To limit losses to 20% while capturing 3 to 5% upside. Yeah, I knew about the 3 to 5% upside, 20% downside. Back in 2016, I think 2016. I think it was 2015. I had something like that. 2016, 17. I had JP Morgan, as you know, a private client before my rep decided to leave and went down south. And they did something similar. They said, what are you comfortable with? Are you comfortable with being able to make 3 to 5% per year with the majority of your money and limit your losses to 20% while capturing 3 to 5% upside? I said, no, I'd be more comfortable with 10%, maybe 10% loss. So they had some other calculation that they did. And a good portion of my assets at the time, I had 50% of my assets controlled by me, 50% by them. I just wanted to see how they would do compared to the way I would manage money. I wound up beating them, but it's because I took a little bit more risk. So, and that was, down in 2016, 17, something like that. All right. Are we going to keep going here? Looks like it. Looks like we'll keep going.
expensive. Are those coming down a little bit? Because the cost overall, affordability still seems to be
Yeah. That's a shame, especially if you're a Minnesota native, you know, to have all that money taken, fraud. But, you know, sure it happens all over the place. I'm glad they're finally catching some of these people. Get some of that money back. Tesla turning up a little bit. Tesla. Hedge flows continue to climb. Can we get a short covering rally and just keep going? That's what I think what's happening right now. All right, we got some good. Volume looks good. S&P still going. VWAP is right there. Nice follow through. Pushing higher. All right, we got an hour and 4 minutes to go. I'm your host, Cousin Benny, coming to you from theclosingprint.com. All right, we're moving up to the next level. Okay, all I'm doing is taking these pivots over here and just adjusting to each of these pivots. We're at that pivot now. Do we follow through? What's going on? Here's supply, VWAP down below, right there. Okay. Volume looks good. MACD still rising. Excuse me. All right, so here we go. Pushing. Looking good. Okay, supply. Beautiful. Where did my MACD adjustments go? All right, futures would continue to climb, looking good. 69.20s are back to $1. 69.20s from earlier. They were originally at $4.20, ran up to $6. Many of you took profits into that. Okay, continuation. Nice volume. Daily looking a lot better. Nice fat daily candle on the S&P. Okay, so the 69.50s, 69.75, 7,000 butterfly. Maximum profit is at the 69.75 strike. I think we could get there. As we proceed towards the 69.50 level, you start making money. From this point on, those call flies should be getting a bit more expensive. Let's see what I could close this for. Call fly. Just want to calculate what it's worth. Okay, still at still at $1.35, $1.40. Futures continue. It's like they turned on the machine.
Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are.
Nice. 515, 30, 60 are on buy signals. We're trying to get tick cumulative to turn. Still not a lot of activity. All right, hedge flows continue to rip higher. Look at that. 10 billion. See that? 10 billion in 0 day. 10 billion in 0 day being hedged. That's wild. It got down to -2 over here. See that? -2. That's a $12 billion 0 day move. You believe it? That's crazy.
Curious about how companies are performing heading into quarterly earnings, or how the macro environment is influencing the markets, or even specific sector performance?
Okay, Micron making new highs. Hopefully you got some Micron. I got Micron 190, 195s. I'm sorry, 290, 295s. I got to do something with this here. Probably going to hold on till tomorrow. Maybe get a little bit more out of this. 290, 295 call vertical on Micron. That's working out. Maybe you take a little bit of profits off. Micron, consider some profits. New high of the day, Micron. Very nice, Mondo.
Major markets here in the U.S. trading lower on today's session. But I would say most of these losses have been paired as the day has rolled on. The S&P 500 right now is down about 20 points, just under that mark, which is about 0.3%.
Okay, looking for a higher low, higher high. Okay. All right, so we did buy some call flies. We only have 5 for now. I'd like to get up to like 20 to 25 of these. All right, scaling in. I do have my spidey senses are telling me 7,000 is possible. 69.75 definitely doable. 69.50 we'd start to kick in some profits if we started to proceed towards 69.50, as you would imagine. Currently, we're trading at 69.10. Okay. 69.09, 69.10. Okay, got plenty of time. We got 57 minutes to go. Maybe we get one more thrust higher. Or is this the high of the day? Maybe the high of the day. Might be the high of the day. Okay, so we did hit that pivot again. Okay, so we hit this pivot over here on the left, right here. This pivot. This pivot right here. We hit that level. Okay, if we get that level, then the next pivot is up here this morning, that high. I mean, it's possible they're going to run this. So make a nice, a lot more bullish look to it, even though we gap down. Okay, we're 20 handles down, right? Yeah, we still got 20 handles to go.
Trading even less from a valuation perspective, less than many of the software companies out there right now. So I think you're going to see a lot of implementation of AI into businesses, which will see productivity enhancements overall.
Okay, Riot looks like it wants to do something. I'm not going to trade it, but Riot looks like it wants to go. S&P. S&P, we have another level up here. That's the call wall. We hit that level this morning.
And you said that. I just want to give you credit for this year. I did. It's helped you have a good year.
We're going to go again? Looks like we're going to go again. Let's see if we can't go a little bit more. S&P.
So now they can compete in the chip space. And YouTube, there's more people watching YouTube than there is Netflix. And their Google Cloud business is growing phenomenally well at 34% year over year.
Yeah, I watch a little bit of YouTube. Mostly educational stuff, you know. Develop your brain instead of turning into, what do they call it? Doom scrolling. whatever the hell that means.
Potentially threatened by OpenAI and ChatGPT.
Okay.
The whole search business was going to be like the competition was coming and they wouldn't survive.
Yeah, which I totally get that, but the opposite is.
I guess you're looking for
CEO is an incredible CEO, and they executed really well. And now
doom scrolling. Let's see what it says. Doom scrolling. Doom scrolling.
So Amazon's only up 6% year to date, right? And, yep. So
The compulsive urge to keep scrolling through endless streams of negative and distressing news and social media. Ah, that makes sense. Okay. Yeah, take the cell phones away from half of these people. Have a better society.
and you start to see e-commerce.
Okay. Are we going to follow through? What are we going to do here?
Right, for the e-commerce business, where they
S&P. Hedge flows starting to taper off now. Looks like we're not going to make it through this area. We got one more thrust in the tank, maybe.
dominate that business specifically. So I think, and then their ad business is up 20 to 25% growing, and it's a big and very profitable as well within the company. So I like those three companies.
Well, on that note, Phil, sit tight because, as you noted, Mag 7 stocks have been diverging as the year comes to an end. 2026 could see that divide widen as AI spend comes under more scrutiny. Mackenzie Segalis has the details. We were just talking about Amazon lagging. Mackenzie, what else are you watching?
So that Mag 7 trade has been splintered, and the divide really comes down to who's converting AI spend to actual margin. So what I'm watching, let's start with the laggards. Microsoft, Meta, Apple, and Amazon all underperforming the S&P this year. Amazon's in last place at 6%. Meta had its worst day in 3 years after raising its capex guide. CEO Mark Zuckerberg has poured tens of billions into AI talent, reorged the AI unit 4 times in 6 months this calendar year, and still
Hedge flows still hanging out at the highs. That's crazy. $12 billion worth of 0-day trading today. And this was a slow day.
and its AI model Gemini. Those shares 66% higher with margins expanding. NVIDIA has roughly 90% of the AI chip market and gross margins in the mid-70s. Everyone else's capex is NVIDIA's revenue. And then Microsoft is in the middle, 40% Azure growth last quarter, the biggest spender among hyperscalers, but also the most exposed to the AI arms race. It's got $300 billion committed from OpenAI and a new deal with Anthropic. And the question is whether the backlog justifies the build-out. Now, the setup for 2026, if models keep converging, and they are, distribution matters more than who trains the best model. And that could reshuffle this board in Apple's favor. Sarah?
Okay, Mackenzie, thank you. Let's bring in Obermeyer's Allie Flynn Phillips and Crossmark Global Investments Victoria Fernandez. Phil Palumbo is still with us. On this conversation, Victoria, how do you feel about some of the big tech names and specifically the divergence that Mackenzie was talking about? Does it present opportunity for you?
Yeah, I think you definitely have to start looking at the tech space, not as just, one big group that you can just kind of pick any name in there and you're going to do well. There's definitely going to be some divergence between those names, as Mackenzie was talking about. You've got to look at those that you think will actually have a return on the investment from the CapEx component that they have. And I think you also have to start looking at maybe the second derivative of the AI play. What are those companies that are actually...
Okay, we're going to go. Are they going to push this?
Those are the companies that I think...
Let's go. Let's go. LETSGO. Let's run this higher. Okay, let's run this higher. Okay, I got a couple more of these SPY S&P 500 call flies. Got a couple more. Got 7 total now. Okay, Micron. Micron continuation. Looks good, Micron.
The power play, Bloom Energy. Bloom Energy had an awesome year this year of 288%. It's in our Palumbo emerging growth strategy. We're big believers that they have a great business model where they're able to provide electricity anywhere without utilizing the power grid. So we think Bloom Energy is a great second derivative of current AI movement that we're seeing today.
And that's kind of a continuation story.
Correct.
But with on 2025. Allie, what about you? How do you play the AI story in 26? How does it look different and the same than this year?
Well, I'd say, Bill, and
What do we got? 50 minutes to go. 50 minutes. 50 minutes to go.
But I like the idea we're talking about the second or maybe the third derivative. A good example to us would be Schneider Electric. Global electricity demand is reaccelerating, driven by AI, electrification, data centers, and decarbonization. And this is no longer a cyclical story. You have sweeping policy mandates, rising utility capex, and real wide grid failures, which are forcing sustained infrastructure investment.
Schneider is a direct beneficiary for the global electrification. Their products are instrumental in increasing energy efficiency, and also they spent the last few years transitioning
MACD, watching that MACD.
to one that has reoccurring revenue.
And volume.
Another example to us would be ASML. It's a pure play within the AI build out. ASML makes the machines that make every advanced chip out there. And so as AI moves from video to multimedia models, compute intensity is increasing, and AI chips are critical for that production. You're seeing more orders.
Let's go LETSGL. Let's push this higher.
Ali, I noticed you also mentioned healthcare as an interesting underperformer. Is that one that you want to get into? And when do we see the AI benefit there? That's been part of the excitement on the AI story is drug development and healthcare changes.
True. Healthcare is one of those where, it's lagged the last 2 to 3 years for all sorts of things. Our focus there more is really earnings revision, easing policy risk, and you see a lot of M&A momentum. So it's more of those aspects that are really encouraging as opposed to just really the AI angle of healthcare.
Yes, I mean, it gets you to your point, though, about 493, the other 493, and when we'll start to see results. I guess the biggest question, which is kind of a circular question back to the semiconductors and the original AI, is just how quick this enterprise adoption will be.
All right, we're trying to push through this area of supply that we established from this pivot over here. All right, so this pivot right here. All right, this pivot is what I'm looking at. Let's see if we get through this area or not. We got plenty of time if they choose to do it. Okay, MACD is starting to turn a little bit on the options. Many of the options that we're looking at. 69.10, 69.15s are what I'm looking at. 69.10, 69.15. 69.15 is just out of the money. Those are going for $1.55 right now. Looks like they could get to $2.50.
GDP. It's still a big contributor to GDP. How do you expect it to impact the economy overall next year?
Yes, Sarah, I think CapEx is the key right there. I mean, we know that CapEx leads to productivity gains, as you were just talking about. We know that it leads to profitability as labor costs are kept low, margins continue to improve. That's one of the areas that we've been concerned with when it comes to earnings. How are they going to continue to keep their margins up? How are they going to continue these levels of earnings growth? And I think CapEx is a key component of that. But I think we'll see CapEx really start to broaden out. It's not just going to be the AI play that leads that CapEx drive. You're going to have all of these other companies that then start to come out because of the OB3 bill, and you get the tax benefits in regards to.
Can we pop through here? VWAP rising.
So I think you're going
Watch the volume.
start to broaden out. That's going to be a key driver along with the earnings growth and the consumer as well. You've had, data.
All right, futures are trying to pop a little bit more through this area. Daily looking pretty good on the right over here. Daily's looking good. Close near 69.20 would be preferable, obviously.
Very bullish, not just sell-side analysts, but all the conversations. Everyone excited about growth, the impact of the big beautiful bill, the fact that we're lapping some of the tougher tariffs, the fact that the AI spend is still on fire. It's all becoming very consensus.
It is, and you can't look at it through rose-colored glasses. You have to say, wait a minute, there's a chance of another government shutdown. There's a chance that we're going to see inflation start to move higher because companies have said they have not passed on all of the tariff costs as of yet. They're going to continue to do that incrementally. So you can see inflation continue. A lot of elements out there that I think could continue to be warning signs for the economy. So you have to take that into consideration. And we know it's a midterm election year. You typically have a pretty large intra-year drawdown, 15 to 19% in a midterm election year. So I think it's going to be a very volatile year. You're going to have to be very tactical in where you put things to work in 2026.
Where's your hedge, Phil? I bet you didn't expect your hedge, gold, to be up, 70% this year or so.
Yeah, so gold's been a core part of our overall portfolio. Two main reasons why we implemented it. We did research going back 50 years, and when we did that, we realized that gold has really hedged during a major downturn, number one. And number two, when there's inflationary trends moving upward, gold's a good place to be, right? Which worked in the 70s, really didn't work, though, in the big move that we had in inflation.
You think that's what the gold move is about? Inflation?
No, it's not about inflation. The gold move, I really think, is two things, right? Number one, I think it's more about dollar down, interest rates down, right? I really think it's that simple.
Yeah.
The other part is there's something around the corner that we're not seeing that can create an exogenous shock that nobody knows. It's like the unknown unknown. That's what concerns me, even with the price of silver moving up. So just like anything else, like head on a swivel as you're an investor and just making sure you understand that maybe there is something going on that we're not talking about right now. Because all we're talking about is the same thing, which is AI. But maybe there's something else going on that we're not seeing.
I know you just don't usually see stocks at a record high and gold having such a good.
You don't. You're right, exactly. So there is some type of issue going on, or that does concern me, and so diversification is the key to that.
And so what? 10%? How much?
10%. We started at 7.5%. Now we got to 11, 12. We paired some back. We moved into Bitcoin with part of that pairing back. Not that we think gold and Bitcoin are the same, but we thought Bitcoin is a possible store of value is how we look at it. So longer term, we think it could be a good value.
All right, guys, we'll leave it there. Great setup conversation. Thank you very much. Ali, Victoria, and Phil, it's good to see all of you. We'll send it over now to Christina Partsinevelos for a look at the biggest names moving here into the close. Christina.
Oh, I got to talk about silver and platinum. They did hit record highs overnight, but sold off heavily during the day along with gold after the CME raised margin requirements for precious metal contracts. Higher requirements forced traders to have cash to sell, and that selling did help or did send some prices tumbling. Mining companies like Newmont and Freeport-McMoRan are among the biggest percentage losers in the S&P 500 today. Energy, the best performing sector today after peace talks between Russia and Ukraine fell through over the weekend. Crude oil is moving positive, taking oil companies along with it. ExxonMobil, Chevron, ConocoPhillips, all in the green today, roughly 1%. Let's say Exxon almost 1.5%. Finally, shares of Lululemon. Those are up about 1.5% after founder Chip Wilson launched a proxy fight by nominating 3 independent directors to the company's board just 2 weeks after the athleisure wear company announced the exit of CEO Calvin McDonald without a successor. Lululemon shares definitely struggling this year, down about 44%. Big drop for this name, but up today.
Yeah. Okay, thank you, Christina. We are just getting started here on Closing Bell. Up next, Flexo Capital's Ro Tony is standing by. His take on NVIDIA's $20 billion deal for Grok with a Q. We are live from the New York Stock Exchange. You're watching Closing Bell here on CNBC.
QPTS.
CGCTW. For the previous time, 145.
Just bring it a little more.
HYMC.
Chinese people.
RGTX.
Great. Chinese people are great. Yeah, I know.
All right, so we're moving above these pivots, maybe a little bit more. Let's see what hedge flows look like. Hedge flows continue to ramp higher. There's not a whole lot here that won't keep it from zipping. Okay, Micron's still going. Micron looking really good. Micron following through. We've got 40 minutes to go. 40 minutes left in this trading day.
as investment advice goes, I think caution is all one can prescribe at this point.
And what about the labor market? Because Delta, obviously the tariff uncertainty, which you highlight, has been feeding into how businesses are thinking about hiring, also with the geopolitical uncertainty, which I suppose goes hand in hand as well.
39 minutes to go.
Crystal ball into how things are going to look in the future. And then, sort of tying it back to the domestic situation, because when I talk about Investopedia, actually, the term of the year, according to them, 2025, is affordability. And, that's very much how
Okay, we're above this pivot level, so we should be able to move a bit higher. Can we run back up to the high?
That's also kind of precarious because a lot of the growth that we saw in
Who are these people they're finding here? Who the hell is that lady?
the strategic acquisition, but really, to me, this is more clearly an architecture.
Micron still pushing, looking good. Micron.
Think that NVIDIA bought Grok, but they didn't. They really captured a capability, and that's the architecture, specifically the LPU, without the regulatory friction of buying the whole firm. And they had to do that because of inference economics breaking the old math.
What does that mean? What are they actually getting?
Yeah, so when you think about NVIDIA, the GPU dominates training, but training is very episodic with big spikes. So inference is when people are actually using the models to execute chats with GPT, execute agentic workflows, and that is a different math because inference.
Okay, we're starting to fade now. S&P is starting to fade.
Over a model's lifetime. So that's really the math driving this deal. It's like the training attracts the attention, but the inference determines outcomes.
What do you make of what they're paying here? I mean, Grok was last valued at $6.9 billion in a September funding round. And NVIDIA has, according to our David Faber, $20 billion price tag on this deal.
Some could argue it's a drop in the bucket. Some could argue it's overpriced. I think when we look at NVIDIA and where they are right now, with the GPU.
All right, moving back down below this pivot. Still a pretty decent day, all things considered. We gapped down. Currently off 19 handles going into last 37 minutes.
They're not necessarily late, but they are reacting. And I think we should go back to a comment that your prior guest made about Google and the fact that it's vertically integrated. The core of that vertical integration is their TPU chip. Now, the founder of Grok, Jonathan Ross, actually built the original TPU, or what became the TPU, during his 20% time at Google, because he saw this bottleneck coming a decade ago. So NVIDIA is doing the same thing, right? They're integrating at the infrastructure layer, but under much tighter regulatory constraints. They can't buy everyone, so they're just licensing the capability.
Right. So all in all, if you're, I know you invest in early stage startups, so not necessarily a company like an NVIDIA, but does it make you like NVIDIA more or less?
The way I think about it is when we look at NVIDIA stock in the run-up, I mean, that reflects the training boom. We've seen all of these models execute on their training strategies, and now they're starting to really focus on the ability for people to execute these models. So what this deal does is it protects NVIDIA's stock for the future inference boom.
Yeah, I mean, it was interesting. Earlier we were talking to Jonathan Canner, the former DOJ antitrust chief, and he was saying it actually raises some red flags, even though it's a, non-exclusive licensing deal or whatever they're calling it, if they're trying to take out competition and take out a key hire that of a company that could be bigger if it wasn't doing this deal.
Yeah, those are the things that are going to happen. We've seen Alphabet/Google execute one of these deals as well with Windsurf. I suspect that people will continue to push the envelope because of the regulatory nature of when these deals get scrutinized for being anti-competitive and monopolistic. We'll see. I think NVIDIA will be able to get this deal through, but I think when we start to see more firms, especially the Mag 7, try to execute these, it's going to be a little bit tougher for them to be able to continue with this type of approach.
Yeah, I mean, what's interesting to you and in your world right now? You're investing in these early stage companies. What part of the sort of AI value chain are you in?
It's a great question. So we think about this simplistically in three layers. There's the infrastructure layer, which is where NVIDIA is playing. There's the model layer, which is Anthropic, which is a Plexo Capital portfolio company, as well as OpenAI play. And then there's the application layer. We believe the biggest opportunities are at the application layer. You could look at companies like Harvey that focuses on law, or you could look at Perplexity that aggregates a lot of the models to execute a more friendly user interface. Those are the areas that we think have the biggest opportunity. Here's the challenge. A lot of these folks are building on top of the Anthropic and the OpenAIs of the world. And we also see those labs or those model companies also wanting to move up the stack. Probably best represented by when you look at some of the vibe coding, and when you look at Anysphere, which has Cursor. Cursor uses Anthropic and one of the biggest API customers, but at the same time, Anthropic has Claude Code, which has also moved up.
Not a bad rally. Micron just killing it. Micron 274% earnings growth forecast for 2026. And here we are, the last week of 2025. Undervalued. Can't buy it up here if you're looking at getting into Micron. Perhaps tomorrow we have an opportunity to get in some more Micron if you don't already have a position. Okay. Well, we got 32 minutes to go. 32 minutes to go. Micron looking good. Tesla looked like it was going to follow through, and then it just turned lower after about 11 o'clock. Here we are at 328, and it looks like Tesla's just done for the day, closing near the 21-day. NVIDIA looking a lot better, though. NVIDIA's working. Let's see what NVIDIA looks like. NVIDIA. Yeah, that looks okay. NVIDIA grinding higher. Okay, so a little bit choppy the last 3 trading days. But it's above the 50-day. Volume looks good. Okay, S&P, Micron, NVIDIA. Okay, Netflix had a nice little pop there. There's Meta. Meta's turning back up. Buying the dips on these. Meta's sitting on top of the 50-day. Nice rip from around 1230 when it reversed as well. Microsoft bouncing. Very choppy price action on Microsoft, chopping people up. Apple looks okay. It's at the highs. Micron's still going. Nice move on Micron. Okay, what's the S&P butterfly looking like? Yeah, that's trying to push higher. Apple looks good. Apple have calls. I didn't do anything. I didn't add to Apple today. Looking for that to follow through. I do have January 277.50s. Doable. We could see that 277.50 is just beyond these pivots. Okay, so the 21 days overhead, 277. Looking for Tesla, looking for Apple to follow through.
Which is just days away. It's important to note, though, this tax proposal, not officially on the November 26th ballot, may not wind up there at all. But it is causing a very public battle on whether or not this will simply kill innovation and cause a talent exodus. Venture capitalist Peter Thiel and Google co-founder Larry Page are considering leaving the state or reducing their California ties by the end of the year, according to reporting from the New York Times. Others, including investor Chamath Palihapitiya, fired back on X, writing, quote, "The inevitable outcome will be an exodus of the state's most talented entrepreneurs who can and will choose to build their companies in less regressive states." Gary Tam, president of the startup incubator Y Combinator, blasting the proposal as a, quote, "unrealized gains tax that puts founders on the hook for becoming paper billionaires." Other states like Washington or Florida, for example, without income taxes, rather, could look more appealing for launching companies. Bill Ackman also saying he believes in a fairer tax system, but is opposed to wealth taxes, adding, quote, "with respect to California's budget problem, the issue is not a lack of tax revenues. The problem is how the money is being spent." Representative Ro Khanna, whose district, of course, includes Silicon Valley, defended the ballot initiative, saying that entrepreneurs will stay here in California because this is where the talent they need is concentrated, adding on X that Jensen wasn't thinking, "I won't start this company because I may have to one day pay a 1% tax on my billions he built here because the talent is here." I'm sure much more to come on this very
Okay, Apple.
Sarah, back over to you.
Microsoft also very choppy price action in Microsoft. A dip did get bought, which tends to be the case. Meta, Google on the watch list, looking for this to follow through and push higher. Google.
Representative Khanna says absolutely not. That's a risk that he's obviously willing to take, but many top voices in the space weighing in and saying yes, it will. Yeah, I mean, he said that he wouldn't miss them. I wonder if those words come back to bite him. Thank you, Kate Rogers. We'll see if it even makes it to the ballot. Up next, the outlook for the Fed in 2026. Former Fed Vice Chair Roger Ferguson standing by with his expectations for the new year. Closing bell will be right back.
Okay, low profit taking. Tesla, no follow through. Google. All right, maybe tomorrow we'll get a follow through on Google. Amazon. Okay, going into the last 25 minutes of the trading day, Micron still number one. Still number one. Very nice trade.
Historically, it's true that midterm elections tends to be a lot more volatile. Going back to the 1930s, 2/3 of the time, the market during a midterm election year has seen a 15% drawdown or more. And so, that creates some caution. And there's the whole AI thing. I'm always concerned just because it's concentrated in such a few number of names with really high concentration in the index, which creates a lot of stock specific risk. And we've been, sort of looking at EM as a way to get cheaper exposure to some of that AI story. If you look at the MSCI EM index, the largest weight in that index is the technology sector. And you get a lot of companies that are important in the AI supply chain. And yet it's selling for 16 times forward estimates, which is a huge discount to what the technology sector here in the U.S. is selling for. So that's a
Micron. Wow. Very nice. Very nice price action on Micron.
Is going to be a bit more important as we move into 2026. Active management has not been very helpful in 2025. We anticipate that there's going to be some dispersion and just in terms of returns of the top names, which should give active managers a bit more of a leg up. Additionally, the quality style. So, companies with strong balance sheets with, decent returns on equities, that quality style has done really poorly in the last year. That doesn't happen too often, and typically it mean reverts pretty rapidly. So we're also suggesting somewhat of a quality emphasis, so that sort of evens out our optimism. Is that we're taking somewhat of a gradualist approach, and in our guarded optimism.
Crit, you mentioned some of those positioning things in terms of diversification, emphasis on active. You also tied into some of the reasons why you're guarded. What would be sort of the trigger to make one decision or another? I know it's not that simple, but in terms of what are you looking for as like an actionable reason to maybe switch to more of the guarded or more of the optimism, if that makes sense?
Sure. So a few things. One would be if for some reason the Fed changes course and they start raising rates, that would be a signal to potentially get a little bit more conservative.
Hedge flows coming into the last 21 minutes of the trading day.
We pay attention to every week the unemployment claims, and those have been very calm just in terms of the numbers. But if that started to spike up, that would create more concern for us. On the other hand, if we start to see better performance out of small caps and mid caps that's supported by earnings, that would be a really healthy sign, and that would get us a bit more excited. Of course, we're going to be paying attention to earnings, and that's going to help us also determine whether we need to make tactical adjustments. Right now, we're pretty close to our strategic weights.
Tesla back down to low of the day, 21-day moving average. Tesla.
We don't really want to stick our necks out. We do think that being fully invested is the right place to be.
Tesla looked a lot better this morning when we bounced at this level. Not so much now. Looks like we're going to head to the 50-day first.
Appreciate you taking the time. Crit Thomas of Touchstone Investments. Coming up next, it's Options Corner. Rick Ducat's going to join me here in our studio. We're looking at Amazon after Evercore ISI named it its top large cap internet pick for the year. We'll be right back.
Kick off the morning with the data and the decisions moving markets.
Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques.
Where a president can remove a sitting double.
Yeah, I mean, there's that case. And then you said the other question on independence relates to the chair and whether they can demonstrate, I guess he in this case, because now that we know the remaining are he's, independence. I mean, I feel like this is a little bit overblown because all four people that are in contention here understand the Fed, understand the economy, and more importantly, understand the markets. And the bond market really will tell the Fed if there's a risk that they're making a policy mistake. Don't you think?
To be fair, I agree with you. Right? I think any one of these four people get in, and I know three of them very well. They will recognize that, in the long run, history will judge them by how well they protect the Fed's independence and how well they make decisions based on the incoming data. Point two is not just the long run, but as you say, the market will be looking. And if they make decisions that are not credible in terms of maintaining inflation at a very low level and maximum sustainable growth, I think you'll see, the market punish them. But we should also be aware that not everyone will necessarily recognize that risk right away. And so I agree with you over the long run. The question is what happens in the first few meetings.
Okay, so bigger risk next year. Is it going to be upside on inflation or on unemployment rate?
I think unemployment's likely to continue to creep up a little bit. But I have to say, inflation has been running above the Fed's target for 5 years. The forecast from some Fed officials is inflation getting back to 2% 3 years from now. That doesn't strike me as increasing Fed credibility. We had a policymaker, president of one of the reserve banks, openly musing about the Fed gradually losing credibility. So I'm not one to say inflation is behind us, and I think they really need to be on their toes for that.
No, it's just the jobs picture maybe looks a little bit more dicey at this point.
It looks a little bit more dicey, for sure, but part of the problem is we don't know what's driving that. So there's this tension between an economy that's continuing to grow, consumers that are continuing to lead the way, and unemployment that's sort of gradually ratcheting up. And so that throws into question, is the labor market still imbalanced but somewhat softer? Is it a precursor to a rapid fall off? Or frankly, is it a reflection of an economy that's becoming more capital intensive and maybe even becoming more productive? And so I think there's a tension there around what is a, quote, soft labor market really telling us about the underlying of the economy.
Okay. Sounds like you're a holder if you got a vote in January 28th.
I'm actually a holder in January. You got me. You paid me well.
Okay. Roger Ferguson, thank you. It's always good to talk to you.
Thank you.
Especially with so much going on with the Fed. Up next, we are tracking the biggest movers as we head into the close. Christina Partsinevelos is standing by with that. Christina.
Wow, we have a biotech stock that's surging on breakthrough status. Airlines getting hit by holiday travel chaos, and crypto continues its slide. Those movers when we come back.
These stocks are kind of unchanged. Amazon being one of them over the last year. And yes, if you've been invested the whole time, that's your performance. But man, it was such a different year than that led that to believe. Huge drawdown, huge recovery, kind of a wicked drawdown that we're in right now. Nothing like the first half of the year. But when it comes to positioning and options activity and all the trading that's taken place
All that being said, what stands out to you?
Yeah, when we look today, it's a lighter day. The sizzle is 0.7 versus the 5-day moving average of options volume.
And Micron having a good day, hanging at the highs.
We can see the expected move for our next 2 monthly expirations here. Our orange box about 4.7% by January 16th. Our yellow box February 20th, 10.7% or so. Notice that February is about where we have those old all-time highs as well. That's the upper edge here. But heavy skew toward calls today, about a 70%.
Let me see what Micron looks like.
Options traded today were calls. The open interest that was the highest month is January 16th. The highest volume is Friday's expiration. Not really very surprising. That's about typically what you would expect here. In terms of the most important open interest strikes here for January 16th on the call side, 240, 250, and 260. And on the put side, 190, 225, 230. One notable trade as well. A $2.2 million debit paid for plus 2850, 2,850 March 20th, 220 strike puts here. Not clear if opening or closing. If it was opening, though, it would be looking for a 23% decline to break even.
All of the New York Fangs are starting to proceed into the bottom right quadrant, which is telling you calls are getting more expensive now. The risk of a reversal is pretty high.
Thanks, Rick and Alex. Well, coming up, it's time for Overlooked Stock. George Tillis will join us. He has his eye on a uranium stock today. That's Energy Fuels heading into the close. He'll break down
Banks.
company, what you need to know about the stock.
JP Morgan's still pretty cheap. Aerospace. Northrop Grumman getting more expensive. Raytheon, even at the highs, Raytheon's puts are very expensive. Builders. Okay. Sectors. Okay, so sector-wise, communications is still pretty inexpensive, sector-wise. Healthcare. Communications. Looks good. And XLV. Healthcare. Okay. XLV. Just kind of grinding along up here. XLY, consumer discretionary.
Tracking the trends, sector moves, and fundamentals shaping the markets in real time.
Yeah, whatever. XLY pulling back. XRT. What's Walmart doing? Walmart. A nice little bounce. Looking for Walmart to get back above 115 or so. Target. Inside day. 11 minutes, 40 seconds to go.
With Chip Wilson's suggestions here for board nominees. Remember, he's not suggesting himself on the board. He has plans to launch a proxy fight.
S&P, we're going to bounce. Hedge flows. There's not a lot of, let's see what net open interest looks like. 69.60. Got a big node down here at 68.20. All right, so we've got some resistance above 69.25 all the way up to 69.60. This is net open interest. All right, so I got a hard stop right at 4. Got to go get a couple of things to make some steak Diane tonight. Looking forward to doing that.
their guidance for the fiscal year 25 actually was less than anticipated because they increased their production rate for the full year, an increase greater than 1.6 million pounds of product in terms of ore and aggregates for uraniums. And this was 11% higher than the previous estimate. The other thing is I noticed too, when you look at the Q4 sales that the company posted recently, those numbers were higher by 50% compared to Q3 on a year-over-year basis. And I think the reason being the stock has pulled back, Sam, since the highs earlier this year. Irrespective of that, the stock is up still more than 200% in the last 52 weeks. Is financing. The company is clearly financing its expansion because I did notice that in the last 4 quarters, the total diluted weighted average share count is close to 214 million shares. Just going back to 2023 for a benchmark example's sake, it was around 160 million. So their total share count has actually increased 48% over last year. And they did raise a significant amount of cash. Market cap right now, 3.6.
S&P still fading. Micron actually breaking out.
Okay, you mentioned this whole renaissance. Obviously, as far as an investing
Micron breaking out.
right now, where does this fit in the grand scheme of things into the entire, piece of the puzzle as far as, the supply chain story, critical minerals, rare earths, obviously trying to compete with the likes of China. I see you talked about Australia as well. They have, obviously relationships with that country too. So obviously, the US can't just do it alone as well. Where does it fit into the nuclear story as part of the sort of overall investment theme as to, where we're up to in that narrative and also with regards to the commercialization of all of this stuff?
Well, yeah, I mean, I think the whole sector is being reshaped. And so you have to be careful and, of course, consider some of the value traps out there. If you look at the energy fuels, they're at the core. And what I mean by that, it's exploration and recovery of uranium ore. Plus, at the same time, the next step is processing. In other words, getting rid of all of the excess waste product from the aggregates. And then, of course, shipping that off to other facilities, which then utilize the more processed ore to enrich uranium. So they're not in the enrichment stage of nuclear fuels, but nonetheless, they're in the starting point. I think what's important too is they're not a business that's based on hope of some technology that needs to actually get approval from the Department of Energy and dealing with national security issues, which is transporting nuclear fuel. And these, microgrid power installations that Oklo and other companies which haven't generated revenue are going to face challenges going into. Energy Fuels is actually selling uranium. They have 2 major customers that they reestablished supply agreements with. These are nuclear power customers. And so, again, for what it's worth, prices of uranium have actually increased. Volume production has increased. And that has actually catalyzed the stock from a tremendous low base of around $3 to the high. Looking at the chart, it was over $20. So this is essentially a huge renaissance in energy, but there are still some risks because, again, this is a high capital intensive, high cost, business. And so I do think that the company did what they should have done, which is they've issued shares to shore up their cash position to continue more steady state production and, of course, processing of the uranium.
Mm-hmm. Awesome stuff. Thanks so much for getting us across that name, George. As you say, rallying over.
5 minutes to go. 5 minutes to go. Futures continue to fade here.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Opportunities don't stop when the market day ends, so neither do we.
Coming into the closing bell, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Monday, the 29th, we had a nice little rally. Micron is at the highs of the day. Micron doing very well. Continues looking very strong into the closing bell.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for the stock.
That could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Sometimes, you could have done better. The same goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network. Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
We got 2 minutes, 40 seconds to go.
In today's session, so let's welcome in Kevin Green, Senior Markets Correspondent, to help close out the day. So, KG, we are off the session's lows now. A bit of a profit-taking kind of day. It seems rotation into more sort of defensive type names, rotation in the commodities patch as well. What's standing out to you in the final minutes?
Yeah, I would agree with you when you're looking at the defensive nature of this market. At least for today, utilities did outperform, as well as some of the other interest rate sensitive areas of the market. As yields actually did move to the downside, but we still have around 40% of the stocks in the S&P 500 in the green so far, and we are kind of coming close to that 69.
2 minutes.
Area. Obviously, that was a big area of resistance over the last 2.5 weeks.
Micron's still pushing here. Micron still going.
Throughout the session. Now, what is actually very interesting, we'll see how this actually plays out tomorrow, but you could make the case that maybe an inverse head and shoulders pattern is kind of forming on the 15-minute chart for the S&P 500. Once again, we'll have that confirmed tomorrow, and if that's going to be the case, you have your neckline sitting at 69.15. Breakout above that would actually be fairly bullish here. Going into the close, I'm looking at 69.05 as kind of like your balance area for today. Kind of a range-bound day, but when you're kind of looking at the positioning, pen risk at around 6,900, 69.05 seems to make sense. I would say do not get too concerned about these green days that we had, especially last week, as well as the red days. It's on light volume, and I think we really won't have a lot of this price discovery really be confirmed until
1 minute to go. 1 minute to the close.
Right now, it's a low liquidity market. Easy to push prices higher or lower, and I think that's what we're experiencing.
Volume in terms of contracts traded, shares trading hands, KG. How does that influence how you look at these charts? You just said you're waiting for confirmation. Do you extend the time frame? Do you go to daily charts? Use some of the price action for the last couple of weeks? Give that a little bit more, credence, or how does one approach that?
Yeah, so you can look at the options volume. I mean, if you look at the options volume just in general today, Alex, especially for the 0DTE options on the SPX, it was actually rather large. And actually, I believe that we have over 10 contracts, easily over 10 contracts. They have over 100,000 contracts traded on the day. That actually might be one of the largest volume sessions that we've seen on the 0DTE options, at least for a very long time. In fact, maybe the highest volume that we've seen all year. But just because you have a lot of volume on the S&P 500 options, a lot of that's being premium, or those that are selling premium in this market that has been for the most part range bound.
That's the closing bell. I do have a hard stop, so I'll bid you guys adieu. I'll see you first thing in the morning. Have a good evening, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is 4 p.m. straight up, Monday, December 29th. Hope you had a good day. Take care. We will see you in the morning. Ciao.